We have therefore made the assessment that COVID-19 can be characterized as a pandemic.
Traders here have been telling me that they want to see more details, more clarity about a fiscal stimulus plan.
First reaction and thought when you learn that the season's been suspended. This is crazy. This can't be true. It's like out of a movie.
Will be below 23,641. That means the Dow enters a bear market.
We will be suspending all travel from Europe to the United States for the next 30 days.
Disruptions to daily life are coming. Obviously, this show is focused on the markets, but I think those stories are what's going to really be impacting everybody in the weeks ahead.
All right, 1 year ago, March 11th, 2020, the day the world really fully realized what the COVID-19 pandemic might bring. And of course, many surprises and tragedies have followed since then. Welcome to Yahoo Finance Live on this Thursday morning, March 11th, 2021. I'm Miles Upton, joined as always by Julie Hyman and Brian Sazi. Let's take a look very quickly at futures this morning. We see markets are higher. Nasdaq futures opening or pointing to an open up some 1.6%. But let's go back in time quickly in some market history. Look at where the markets closed on that March 11th, the Wednesday, 2020. Again, the NBA really catalyzing, I think, for many folks. Sort of the world was changing. There would not be these kinds of distractions that we had all focused so much on in the run-up to that official declaration of a pandemic. We see the performance here from the major averages. Those closes on that March 11th last year. 2741 on the S&P 500, 23,550 on the Dow, 7952 on the Nasdaq. Yesterday's close across those major averages, 3229 record close for the Dow, 3898 for the S&P, 13,068 for the Nasdaq. Again, we see the percentages here. The numbers are big, and I think the story that the market has told us over the last several years has perhaps been among the clearest of sort of where things are headed, where we certainly hope things are headed. And, guys, coming into the show, we talked about it last week that they were going to have a shutdown special here on Yahoo Finance. And my first thought was, I don't really want to relive that. I don't really want to think about it in those terms. It's, a thing the media does, though. We mark time through the calendar, and every day is a day. We started that. It's a joke now, but the AP started the every day has a moniker. And so March 11th is now going to be known as the day COVID got real. And I think back to the clips we're showing. We're sitting in the studio a couple feet away from guests, watching some clips last night of, the way the sports world handled it. They're all sitting in studios covering this, like it's normal. There's talk shows the day after where everyone is sitting around a close table. And, Julie, I think it's kind of strange to look back at the events of 1 year ago to realize that was barely the beginning, really, of how the pandemic eventually played out. And the word that comes to mind for me is naive. How little I knew, we all knew, everyone knew, not only about COVID itself, but about how things were going to change. I think probably still underrated if we kind of take it that way.
I share your disdain for every day is a day, but it's not just the media that sort of looks back on these big events, right? It's human nature for us to look back and say, what were we doing when? Take stock of what has happened in the year since. You and I were talking about concerts that we went to around that day. My husband just shared with me that he went with my son's class to go to the Edge, which was the viewing platform at the newly opened observatory at Hudson Yards on that day with their class, a bunch of kids all together. And in the following days, remember, to your point, people were still together, congregated. New York City schools did not shut down until the following week after March 11th and after it was declared a pandemic. We didn't start wearing masks until then after that. So this really was a process that we were all naive. There were very, very few voices who were not. And even if they were predicting that it was going to be worse than many of us knew, I don't think many would have predicted the longevity of this crisis, in part because how it was handled in various governments around the world, including our own. So, it's useful to look back and see where we were. And hopefully, at the end of the day, if we ever have to face this again, which experts say it's not unlikely, that we'll face it with our eyes, hopefully, a little more open than they were the last time around.
Yeah, speaking of naive, just a couple days before this, I just gotten back from a trip to Wendy's headquarters in Ohio. And we were walking the halls of the headquarters, myself and Wendy's CEO Todd Penegor, and he had done an interview on a smaller competing network. And he said, Brian, I'm surprised they asked me about China, where we really don't even do any business in China. Why are they asking me that question? I'm like, Todd, listen, man, I don't know. It's unclear why they asked you that. And in hindsight, look what has happened. The COVID certainly spread from China into the U.S. and the restaurant industry, for the most part, has been absolutely obliterated here. But, there are some key learnings here that I just jotted down as I reflected on the past year. Always respect the market's message. I put a tweet out this morning looking at some key stock movements from this day. I mean, you had Boeing down 17%. Things were just absolutely destroyed. And clearly the market was trying to tell you something. And I think investors have to remember that moving forward. Also, understand this. In times of extreme stress, like we saw at this point last year, the Fed will hop in. And Miles, I know you remember March 15th, the Fed came out, cut rates to zero. Jerome Powell had a press conference. This stuff was really unprecedented in many respects. Yeah, you can point back to the Great Recession, but a lot of things that we haven't seen in a while. And then last but not least, too, a reminder for me, call your parents more and hashtag hyperfocus your life. There's more important things.
And, Sazi, it's interesting that you mentioned the market's message as well, because that clip we played from our colleague Ines Ferre, who was still down on the floor at that time. They didn't close the floor, I don't think, until the end of the following week, maybe. And remember, that was only March 11th was less than 2 weeks from what ended up being the market bottom. But, Ines mentioned that traders on the floor at that time were looking for fiscal relief already. The market knew sort of what had to be done to keep everything together. And I think that, I can remember myself having a tremendous lack of clarity on what I was supposed to do as a person, how I was supposed to handle it. And I did not really handle that period well at all. And I think that kind of market message scared me more than anything else. But as you note, the market was able to have a fairly clear head about where things were headed. And I remember that Powell call. That was a Sunday night press conference. There was guidance sent out to folks on the Fed distribution list maybe a half hour before that there would be an announcement and then a call. And this was, so that March 15th, that Sunday, I think would have been the fourth straight Sunday in a row, if I'm remembering correctly, that futures went limit down as they opened, 6 p.m. Eastern time. And so it had already been the market event to that March 11th date. I mean, again, we were only a handful of trading sessions away from the market low. 2355 on the S&P was the low. So we're only 400 points away from what ended up being that low on the market. And, I think it's just wild to go back into that time and to see how even today, and I think that brings us into today's market, we have just seen, financial markets continue to lead on where things are headed. And so, Julie, when we see another day where Nasdaq futures are pointing to a 2% open, we both have family members that have gotten at least one dose, if not both doses of the vaccine. There is certainly a sense that we are leading towards something better. I don't think that's going to be tomorrow. I don't think that's going to be in a month, but maybe in 6 months, maybe we could all sit together. I don't know if that's something our parent company would want us to do or whatever, but it's certain the market, again, continues with that message, which, as Brian outlined, has really been one of clarity over the last year plus.
Yeah, I mean, if people are vaccinated, can sit together now, whatever their parent companies or whoever other authorities are over them would say, at least according to the CDC, they can sit together now. Speaking of clarity, just to make one sobering point here. I mean, let's be clear. We're the lucky ones, right? We're sitting here. We are employed. There are more than 525,000 Americans who have died. We learned this morning 712,000 Americans are still filing for unemployment claims, right? And I believe it's been 51 weeks that weekly jobless claims number has been above the prior record that was set back in the 1980s. So, caught up in this whole discussion that we have had ongoing during this pandemic, yes, the market has gone up once again. And if you went to sleep on March 1st last year and woke up now and looked just at the market and nothing else, you would never know what had happened. But for millions of Americans and millions of people globally, life, if they have survived this, life is very, very different than it was at that time. So it's, more than ever when we talk about the economy versus the market, or the economy for some people versus the economy for others, as we know, and again, this is not a new statement, it's something we've been saying for many months now, but this has thrown into really stark relief the two or more economies that we witness around the globe.
Yeah, Julie, those are very helpful numbers, and it's the reality of the situation. And I think that's why, to some, it is just mind-blowing to see where the market is, where it has come the past year. Individual stocks back to pre-pandemic highs, even though these businesses are nowhere near the same as they were about a year ago. And I think this is why you might be starting to see the market shake off rising 10-year yields and inflation concerns, because the next 6 months are going to look drastically different than the past 6 months. You have companies lean and mean. You could have profit margins hitting new record highs as companies have leaned down during the pandemic. And that's what the market may eventually go back and start to focus on. We're seeing it in the early going here, I would argue. Semiconductors on fire, tech stocks back on fire again, looking past, I would say, the noise of this 10-year yield. It has helped that the 10-year has come down, but still, I think the market may be back to looking to what the next 6 months might look like, and it could be pretty strong for corporate America.
Yeah, and Julie, you shared that wonderful essay from Leslie Jameson in the New York Times this morning, and she writes that your nostalgia for the before times is in part a barometer of how well they were serving you, and I feel like that also applies to, I think about how my lens of the world, because of this job, is so filtered through financial markets, and because they help employ me, and I have a 401k or whatever. It's like I feel like, it must be fine because I am still alive and I'm still healthy, and the market goes up. But that's not really true for the vast majority of people, both in this country and around the world. And I think something that on a day like today is perhaps worth keeping in mind even more than it is certainly something to be mindful of on a day in and day out basis. All right. Well, we had a little bit of that clip where Inez Ferre talking about the need for fiscal support to come through last March. We've now had several rounds of fiscal support come through, and Yahoo Finance's Jessica Smith joins us now with the latest on that package, Jess, and a March 11th address that we'll hear from President Biden this time, echoing what President Trump delivered last year on that momentous evening.
Right, and President Biden is set to sign that $1.9 trillion relief package tomorrow at the White House. The administration is also going to put in place one person who is going to be in charge of coordinating the implementation of that bill. They say it is just such a massive bill that they think it will run smoother if they have one person running point on this. This is a big victory for President Biden, his first major legislative win. The House did approve the bill yesterday, 220 to 211. It was mostly along party lines. Not a single Republican voted for this package, and one Democrat did vote against it. As you mentioned, President Biden will address the nation tonight in prime time. He's going to look back over the past year and then look ahead to what comes next. Let's watch.
I'm going to launch the next phase of the COVID response and explain what we will do as a government and what we will ask of the American people. There is light at the end of this dark tunnel of the past year, but we cannot let our guard down now or assume that victory is inevitable.
Now, the White House and Democrats are now going to try and sell the benefits of this package to the American people. We have heard from Democrats from the White House that they're looking back at 2009. They think they made a mistake and they did not sell the benefits enough of that relief package at that time, and then it cost them in the 2010 midterms. They are trying to make sure they don't repeat history. The White House says that the president, the first lady, the vice president, they're all going to be hitting the road trying to sell this message to the American people. So we'll be watching to see what more they're doing to try and sell this package to Americans. And I think part of that will be this primetime address tonight.
All right, Yahoo Finance's Jessica Smith with the latest on everything happening down in Washington, D.C. All right, we're off for a short break. A lot more here on our coverage of the shutdown special. 1 year later, we're going to talk to the CEO of Indeed coming up on the other side of this break. Futures higher on this Thursday morning.
As we've been talking about, a lot of things have changed in the past year. We just highlighted those unemployment claims for last week of 712,000. Of course, a lot of companies are hiring, even if they have changed the way that they do so and what they're hiring for. Indeed is one of the places that helps them do that. That is a jobs and hiring website. And Chris Hyams, the Indeed CEO, is joining us now. Chris, thank you for being here. So as you look back on the past year and sort of the patterns and the shifts that you have seen, well, I guess we'll talk about your working life in just a moment, but on the site itself and what you have seen, what have been some of the biggest notable changes that you guys have been through and that you have seen people posting on your site go through?
Yeah, it's clearly been an extraordinary year, especially as your last conversation just covered. Our mission at Indeed is to help people get jobs, and getting a job is hard on a good day, but especially now when health and homes are on the line. That mission for us has been more vital than ever. There's been a huge amount of changes over the last year, but the biggest thing we saw really hit pretty much right away. In April, we saw the number of requests for interviews to happen over video shoot up by over 1,000%. And even as things have started to stabilize and the economy has opened up over the last 11 months, we've seen that continue to grow. We launched a video interview feature early on last year. We believe this is the beginning of a massive secular shift and will change how hiring is done really forever. It's almost as big a change as when we were first able to put in a credit card and buy something over the internet and have it delivered to us instead of driving to a store to pick it up. We now see that people being able to conduct an interview from the safety and convenience of their own home is really going to change hiring forever.
Chris, Goldman Sachs out this week forecasting a jobs boom this year. Do you agree with that?
So what we've seen so far on Indeed, and it's interesting. Obviously, we have, we saw the jobless numbers this morning. We have more than 10 million Americans unemployed right now, which is more than at the highest point of the Great Recession. But on Indeed, when we look at new job postings and our benchmark pre-pandemic of February 1st of 2020, we are right now in the end of this February, we were up 5% year over year. So we're seeing more jobs posted right now than there were before the pandemic. There's 5 million jobs in the US right now, and that's still with entire sectors completely shut down. It's very hard to say how quickly this will happen. The vaccines are starting to roll out, and great news for grandparents who can go and visit their grandkids. But most of the people vaccinated so far are older, who are not really part of the labor force, or frontline workers who are already at work. So we have yet to see the real boom that will come as we reach a tipping point with vaccines. We certainly expect to see a lot of hiring over the coming year.
And, Chris, you mentioned the comfort that people had doing, or the requests that people had for doing those interviews over Zoom that started about 11 months ago. I'm curious, in your data, if you've picked up how much of a desire companies have to have a distributed workforce or a hybrid workforce, or the way that those job listings are maybe catering to preferences. I think some of us are starting to develop of, the office would be nice, but it would be nice, maybe 3 days a week instead of 5.
Yeah, so clearly we all as employers have a lot to figure out about what the world will look like. We've been surveying our employees. We've been reading all of the reports that have come out from other companies. It is very clear right now that of the people who can work remotely, a majority of them do not have an interest in coming back to the office 5 days a week. The changes we've made at our business are like some others. About 70% of our employees will have the option to work fully remote when we come back to the office. About 30% will want them in the office 2 or 3 days a week. We don't expect 95% of our employees to be remote on any given day, but it will definitely change how people work. We also think, like this, that it's going to certainly change how people are getting hired. If you're going to be a remote worker, interviewing over video actually makes a whole lot more sense. It was more convenient. It'll cut down on travel. And working this way, when we're talking to each other over the internet like this, it actually is a pretty good test of that to interview over video as well.
Makes sense. Finally, you mentioned that job postings are up now from where they were pre-pandemic. How many of those spots are getting filled? And I'm curious what the sort of top 3 skills are that employers are looking for right now.
Yeah, so many of the jobs are definitely getting filled. A lot of them are in the sectors that you would expect. So clearly all of the areas that are supporting the stay-at-home economy, things like e-commerce, logistics, warehousing, delivery. We also are seeing a significant and sustained increase over last year, not surprisingly for healthcare. Most recently, the biggest jumps are coming in the areas of pharmacy, where there's people who are working to staff up to do all of this vaccine delivery. The areas that have been down, certainly hospitality and travel, those continue to be down. We expect those will pick up, hopefully, in the coming months.
Chris, thanks so much for being here. Chris Hyams is the CEO of Indeed. Be well, and thanks for being here.
Thanks for having me.
Thanks. When we come back, we will be bringing you the opening bell. And with us will be a guest who was with us 1 year ago today. We'll be right back. You're watching Yahoo Finance Live. Oh, sorry, go ahead, Miles.
All right, welcome back to Yahoo Finance Live on this Thursday morning. Miles Ludwig here in New York. Take a look at futures here. We see Nasdaq leading the way once again, and we see S&P splitting the difference, as has been the case. Interesting market, not just this week, but of course today we'll be reflecting on what has happened over the last year as well. Joining us now to discuss is Stuart Kaiser. He is the head of equity derivatives research over at UBS. Stuart, great to talk with you. Once again, let's just start with what we've seen in the last couple of weeks and this rotation trade, the return of volatility into the market, but vol that's come back in as, you know, the Dow is making a record high. Obviously, the Nasdaq is off its highs, but we haven't seen the kind of sell-off perhaps that may have been anticipated with, you know, the VIX kind of creeping back towards 30.
Yeah, definitely. It's definitely been an interesting couple of weeks. I think, as you highlighted, one of the big takeaways has been, you know, below the surface, there's been what you would call a pretty aggressive rotation. And that has honestly just kept the index relatively well supported because there's not money coming out. It's just sort of money moving itself around. You know, so you've had energy and capital goods and banks and materials and the more cyclical parts of the market, you know, posting positive returns, and obviously tech under more than a fair bit of pressure, and that's resulted in, you know, I think a painful trade for active managers. But if you're just an index person, it, you know, hasn't been that painful, just because that rotation has kept things sort of sideways, I guess.
Stuart, bring us into the nitty-gritty in the markets the past few days. Why is the market starting to look past what's happening in the 10-year? Really, we're back in rally mode, and a couple days ago we weren't even in this situation.
Yeah, well, I mean, our view kind of medium term is that yields are moving higher for the right reasons. And that's, you know, increased expectations for both real economic growth and inflation. And typically that's actually pretty supportive of equity markets. I think what was disruptive is it happened so fast. You know, a lot of folks expected this move to kind of happen over the course of the year, and instead it happened in, you know, about 4 weeks. So, you know, to me, that's what was much more disruptive, was the speed of the move than the actual move itself. And clearly it got people very worried about leadership in the market, and tech in particular being negatively impacted by the rise in yields. Our view is that that's not necessarily the case. You know, over the last couple of years, actually, Nasdaq has had a positive exposure to rising yields. So again, we think it's the pace, not the direction. And I think what's happening here, to your point, is yields have actually gotten to a level where they're starting to get fairish, I think, you know, based on what the outlook is for the economy. And for that reason, I think people are, I guess, comfortable to step back into some of these large cap tech stocks that they've frankly been in love with for the last 12 to 24 months.
And Stuart, and we're just going to pause here for the opening bell, because today it's Coupang, which is basically South Korea's answer to Amazon. They're having their initial public offering today, 130 million shares at 35 apiece. They raised just over $4.5 billion and giving the company a market value of about $60 billion. This is one of the biggest listings of the year here. So we'll see what that demand looks like. We saw a big debut for the direct listing of Roblox yesterday. We'll see if that demand continues for Coupang today as we track that company when it starts trading. Stuart, while we're looking at something like that, a topic like an IPO, you know, obviously we've seen a lot of this sort of what I coined earlier in the year as thirsty cash going into IPOs and SPACs and direct listings and meme stocks for that matter, and crypto. How have all of those dynamics been affected as we have seen the recent volatility in the market?
Yeah, I think you make a great point. There's a lot of cash to be invested, and frankly, if you believe the economic growth forecasts, you want to be in risk on mode. And I think for that reason, people are putting in money into the markets and are willing to take maybe an additional bit of risk on something like crypto or an IPO or a SPAC. So, you know, I think it's healthy that money is on the sidelines and is willing to come into the markets and do it in a relatively, I guess you might call, high risk way. Those trades, you know, as you mentioned, though, are, you know, they are volatile. So when you do get pullbacks in risk sentiment, those are the ones that tend to come under the most pressure. So as long as people are prepared for that, you know, I think it's a healthy thing. But, you know, from my perspective, you know, I don't understand the SPACs, you know, all that well. But what I would say is it's a way for companies to go public and access public markets for cash, and investors are willing to put cash in those stocks. And to me, that's a healthy functioning of capital markets, and I think we should read that as a positive.
Stuart, as I mentioned before the break, you were with us 1 year ago today. You and I were sitting across a desk from each other in person, and I want to play for the viewers a little bit of what you said that day.
In the U.S. markets, frankly, things just still look very troubling to us. You know, with 10-year yields where they are at such a low level, that sends a very bad growth signal to the markets. The amount of volatility in gold, the Japanese yen, and the U.S. 10-year Treasury, which are your typical safe havens, is just very, very high. We think that's a risk indicator for equity markets. And to your point, even on good days, implied volatility doesn't come down very much. And I think that's the market sending you a message about how long this could persist.
So it's pretty incredible looking at that 4% drop there in the Dow to 24,000. And here we are on the Dow today, above 32,000. You know, and volatility did persist. It didn't persist quite as long as probably anybody thought it would, Stuart. So I'm curious, you know, looking back on that and the sort of lessons you learned from that period, what does that tell you about the tea leaves that you're reading right now?
Well, thanks for playing that. Actually, I'm happy I didn't say anything too stupid. I guess what I would say is it's funny we're still talking about rates. Now we're just talking about rates in the opposite direction. And to your point, vol maybe didn't persist as quickly, as long as we might have expected. And that has a lot to do, I think, with central bank intervention, and particularly them being willing, you know, to enter into the credit market. So, you know, we certainly, I think, learned about, you know, the Fed's appetite or willingness to kind of step in and support risk assets if they have to. And that clearly was a big driver of things. What's interesting now, though, is if you look at that medium-term volatility pricing, it's at similar, if not higher levels today as it was back then. So even though, you know, a lot has happened, markets have rallied and healed, there is still, I think from the institutional investor community, a little bit of caution in terms of how this is all going to play out. You know, back then it was, how is the bad news going to play out? I think now it's more, how is the good news going to play out? You know, is the move in growth that we've seen and the amount of stimulus in the system going to push rates to a level that are an issue, going to drive inflation to an issue, you know, to a level that's an issue? And then as we get into the second half of the year, is this going to embolden the tax and regulatory policy or China trade negotiations that in the past have become disruptive to the market? So I think we definitely learned a lot about the impact of policymakers on the markets. And it's just funny today that, you know, exactly what we were hoping for back then, which was nominal growth, we've gotten, and now we're worried about that. So I guess it's taught us that the markets are going to be worried regardless, and we should just embrace it.
And certainly a different conversation at S&P 2500 than S&P 4000, which we're closing in on now. All right, Stuart Kaiser with UBS. Stuart, always appreciate your time. I know we'll talk soon.
Thank you. Have a good one.
All right, let's turn to the markets here. And we've seen how things have opened. Nasdaq leading the way once again. Dow, the laggard. Jared Blick rejoins us now for a look at how things are shaking out on this Thursday morning. Jared, Dow coming off a record close. The S&P trying to join it in record territory.
Oh, that's right. I think it's pretty fitting that we opened the session, with the Dow hitting a record high. And that, as we've been talking about, this is the 1-year anniversary of the time when we entered the fastest bear market in history. And we'll take a look at some of those charts here. But interesting that the Nasdaq is once again leading at the beginning of the day. But we did have that flip yesterday where the Nasdaq became the laggard, just barely closed in the green, and the Dow ended up really surging here. Also looking at small caps, those are up 93 basis points as well. Well, before I hit the heat maps, I just want to go through some charts. This is the Dow over 1 year. You can see it's up 37.5%. Nasdaq trumps it. It's up 67%. The real outperformer is the Russell 2000. That is up 80% over the last year. And these comps looking pretty good right now, but those are going to roll off in the coming months. Let's take a look at some other markets. We were just talking with Stuart Kaiser about volatility. Here is the VIX, and yes, it still remains elevated above 20. Haven't been able to get down below that threshold over the last year, but well off of these record highs that we saw in March of last year. Here's a 10-year T-note yield. Now, this has steadily risen over the last, let's say, 7-8 months here, after languishing near 0.5%, record lows or near record lows for it. And then finally, the US dollar index. Check this out. We finally broke through this negative trend line only recently, not seeing too many hiccups or concerns as a result of that, but we do want to monitor that. And then WTI crude. Still can't get over the fact that it hit -40 in April of last year, but that's basically doubled from the March levels that we saw 1 year ago. So I think that's pretty telling as well, the kind of recovery that we've seen. Now here's a NASDAQ 100 heat map, and we can see the mega caps surging. We got Apple up over 2%, so is Facebook, and Tesla up over 3%. And some of the chip stocks that really got hit yesterday, and we'll take a look at that heat map. Here we go. Really bouncing back. AMD, ASML, Taiwan Semi, all above 4%. And we got to check out crypto too, because Bitcoin knocking on the door of that record high. Haven't really gotten there yet, but we came really close yesterday. So we'll be watching that throughout the day today.
Jared, hit me with your very best analysis, chart analysis on GameStop. The past 6 sessions have been pretty wild. I need some triangles, I need some candlesticks, I need some dojis, whatever you got.
I'm going to give you some candlesticks here. Let's check out GameStop. Here we go. Now, this is also a one-year chart. You can see it's up 6,000%. That is a deep value play if I have ever seen one. But let's check out yesterday's price action. So this is a 2-day chart. And here is that momentous decline. I think it only took about 20 minutes. We had 3 or 4 volatility stops, 7 throughout a 1-hour period. Just an incredible price action. But you can see still in the middle of that trading range. And we'll take a look at the 2-month here. I find this really interesting because after a market does this, and this is kind of like what we saw in Bitcoin in late 2017, Tilray, you can throw all these in there, it's right back up. This is a stock to be contended with. Usually you don't see something that pulls a Tilray up another, I don't know, 50, 100, 200% off of these lows. So impressive action in GameStop.
Yeah, and Jared, I've been thinking about the GameStop thing, and I sort of wonder, I wonder if we're not making enough of the trade in GameStop, and that part of the reason why is that because it's still GameStop, and it feels like every time we say the name, like, an angel loses its wings or something, we've done like every time we say the words SPAC and GameStop, the universe says, please stop doing that. And yet, the story as you outlined, I mean, it's a $20 billion company. It's the largest member of the Russell 2000, and yet nothing fundamental about the business has yet changed, though the stock has gone up thousands of percent. And I think at this point it is worth asking sort of how is this possible in markets, and is this not something to think more about? But, I don't know if maybe at this point in your view, like, do you feel like maybe, okay, it's just a thing that happened and maybe we'll move on?
I think the retail trader is here for a while, hopefully to stay. What happens, I remember the dot-com boom. I wasn't really trading back then, but I had friends who were traders. It became very difficult, and a lot of people turned away from the markets, didn't come back for 4 or 5 years. Hopefully that doesn't happen this time, but a lot of people could potentially get burned on some of these meme stocks. And as people return to work, as people start going out again, hopefully they don't lose sight of the joy of trading, as I will call it.
There we go. All right, the joy of trading with Jared Blickery, filling on, of course, the Bob Ross legacy there. All right, Jared Blickery, we'll talk to you later on in today's coverage. We're off for a short break here. Stocks higher on this Thursday morning. Back with a lot more right after this.
We have been reflecting back on 1 year of this pandemic. Among other things, central bank accommodation, of course, has increased to support various economies around the globe. The European Central Bank met today, and we heard from Christine Lagarde as Europe reflects on 1 year of this pandemic. And our Oscar Williams-Groot is with us now. And you were just telling us in the break, Oscar, as well, it was 1 year ago that the UK was looking at its budget.
That's right. A year to the day, Rishi Sunak presented his first budget as UK Chancellor. And at the time, he announced £30 billion, which was meant to deal with the coronavirus pandemic. Now, of course, looking back, that looks trifling. The UK has so far spent around 280 billion on coronavirus interventions and is on track for a 400 billion pound budget deficit. Now, today, as you said, we heard from the European Central Bank on what they are planning in response to the pandemic. They left the interest rate unchanged and held all their monetary policy instruments as is. But the big update came in the form of the speed of their pandemic emergency purchase program, the bond buying program they announced last year. They said they're going to significantly speed that up to counter some of the sell-off we've seen in government bonds over the last couple of weeks. Now, this spurred Italian stocks after the sell-off there was one of the worst hit countries across the Eurozone. The Italian FTSE MIB was up 1% today. But Christine Lagarde insisted this was not about targeting yield control. She said this is all about maintaining favorable financing conditions to underpin the recovery. Elsewhere, we have seen a limited stock market action, and the euro, which was trading higher against the pound and the dollar earlier in the session, has come off its intraday highs.
Oscar, thank you very much. Appreciate it. We'll be continuing to watch any sort of reaction to the ECB there. All right, we're going to take a quick break. And when we come back, we will be continuing our reflection on the past year. We'll be speaking to the former Yum Brand CEO, Greg Creed.
as we look back at the past year, it's clear the next 6 months for the restaurant industry is shaping up to be vastly different than the past 6 months. People get vaccinated and venture back outside, and that will put extra pressure on restaurant industry leaders to get their reopenings done right. Let's dive into this with former Yum Brand CEO Greg Creed. Greg, good to speak with you as always here. Very interested on what your friends in the restaurant industry are saying, or how are they preparing for the recovery? We know it's coming. What are they doing? Are they hiring more people? Are they buying another grill? What are you seeing and hearing?
Look, I think one of the most important things is to obviously get people vaccinated. That will get people outside. But I think what's also really becoming important is this, what I call the emerging cultural code. There is so much change going on in society that for brands to be relevant, they've got to make sure they're at the emerging part of this cultural code. And so it's really important that they tap into what is emerging in culture. Otherwise, you can say the wrong thing. I mean, a great example was, I think a couple of days ago, Burger King in the UK put out a post saying, you know, women's role is in the kitchen. Now, their intent was to actually, you know, talk about culinary and getting more women into culinary, which is honourable. But that was not how it was perceived. In fact, my daughter-in-law said that was a whopper of a mistake. So I think it's the physical reopening and it's the physical preparation, but it's actually more important to make sure that brands are on cultural code. And so that's where something like a net-based quid, which I'm a part of, I'm an advisor and a board member, what they do is prepare brands to understand fact-based what is the emerging cultural code so they can tap into the right things, but they can also avoid doing the wrong things and alienating their customer base.
And Greg, how do you think the restaurant industry will rebound this year? There's so many differing opinions. I mean, the restaurant industry has been, depending where you look, has been cut in half. So the restaurants simply no longer exist. How do you expect the recovery to look?
Well, I think there's been winners and losers, like there has been in everything, Brian, which is, you know, I think that QSR, fast casual, they've been winners. If you've had a drive-through, you've been a winner. If you've been able to do delivery, you've had a winner. I think if you're a dine-in only concept, I think it's been difficult. But what you've also seen is these dramatic shifts. You know, people have obviously had more food delivered. They've found that to be an easy way to do it, and they're going to continue to do it. But I think you will see restaurants. It would be hard these days, if you're in the QSR or fast casual category, to want to build a restaurant without a drive-through. Because I think drive-throughs have basically saved the industry, or not the whole industry, but certainly the QSR fast casual industry, I believe has been saved by the fact that they've got drive-through. So to build a restaurant without a drive-through, I think would be a monumental mistake. And you see also brands adding multiple lanes to drive-throughs. So you see that occurring as well. So I think people are realizing that drive-throughs, delivery, are critical to future success in the restaurant industry.
Greg, it's Julie here. You were talking about sort of the culture at these companies, right, between them and the public. But also, I'm curious your thoughts about the culture of them and their employees, because there's been so much focus on that relationship throughout this pandemic, right, particularly when it comes to what we now consider to be frontline workers, right, people who were working in these restaurants, even amidst the worst of this, whether it was in the drive-through or actually in the stores. What do these companies really need to focus on with that, especially given that we saw that effort at an increase in the federal minimum wage fail in the United States?
Look, I think you're absolutely right. There's sort of two cultures. There's the external cultural code, and then there's the internal organizational culture. And you've got to understand both of them. And as I said, so something like net-based quid is a way to understand them because it's critically important. I don't know whether you saw an example. I'm an Australian, as you can probably tell from the accent. There was an interesting case in Australia this week. It happened to be a law firm, not a restaurant, but I think it makes the point, which is that a partner in a law firm decided to defend the Australian Attorney General against rape charges from 30 years ago. And the CEO of the law firm wrote a note to the 2,000 employees basically saying that was the wrong thing to do. Well, what the CEO didn't understand is that in a law firm, people believe you're entitled to a defense and you're entitled to the presumption of innocence. And so the CEO, not understanding the internal culture, made a massive mistake. And I understand the CEO has actually stood down. So understanding your internal culture, leveraging your internal culture. So I know at Yum Brands, early days, people in the back of the restaurant have always worn gloves. That's obviously been the case. But I know at Taco Bell, they put people into gloves at the drive-thru. Was that really important from a pure, I guess, scientific point of view? No, but it made two important statements. It said to our employees, we really care about your safety. And it said to the customers that the brand cares about their employees' safety as well. So internal cultural codes are just as important as tapping into the external cultural codes that are occurring in society.
Greg, it's Miles here. Speaking of that culture, how are you thinking about geographies going forward and the physical footprint of certain, brand groups, regardless of their industry? I mean, the way that we all conceive of physical space has really changed within the last year. A lot of people have moved to places they probably never could have lived before because of remote work, things like that. And there's certainly an element of a corporate culture that is maybe more difficult to transport geographically. I'm just curious how you're maybe thinking about those challenges, which are certainly going to be considerable for businesses.
Yeah, I think the most important thing is if you had a great culture before you went into this, obviously that's a help. I think if you went in with a poor internal culture going into the pandemic, trying to build a culture in this climate is going to be incredibly difficult. So I think it's about leveraging it. I do think it's interesting that there are people, I talk to people who can't wait to get back to a restaurant, who really want to be able to sit down and enjoy that experience. As you said, people are moving to remote locations. So the big US brands, the brands that have a big footprint across both the US and across the world, will probably benefit as people relocate from urban to suburban, suburban to rural. So I think the big brands will benefit because they've got such a massive footprint. I mean, Yum in the US has, I think it's close to probably 20,000 restaurants. McDonald's, 15,000 restaurants. So you can imagine there isn't a rural, suburban, urban area where you can't get one of those restaurants. So I think those big brands will win. I think, as I said earlier, the brands with drive-through will win. And I think the brands that have really lent on their internal culture, which they invested in well before the pandemic, to do the right things both for their frontline employees and to demonstrate to the customers that they're doing the right thing for their frontline employees, will be particularly important. I mean, David Gibbs, who's the CEO who succeeded me, gave up his salary. Why? So that, they could pay a $1,000 bonus to every RGM who worked at Yum. That news, that is on cultural code, because that matters to people, that CEOs are prepared to give up their salary, in David's case, in order to benefit the people who are on the front line, delivering, great service to customers. That stuff really matters these days, and being on cultural code and understanding it is critically important.
Greg Creed, former Yum Brand CEO. Always good to speak with you. Stay safe. We'll talk to you soon.
I will do. Thanks, Brian. Bye-bye.
All right, do stick around. Much more ahead on the markets on Yahoo Finance Live.
Well, people are getting back out there. And when I say back out there, I mean on the dating apps, at least if Bumble's results are any indication. Sazi likes that one. The shares are trading higher here today, and you've been digging into those numbers, Saz.
Let's just be clear, for us three, we're not getting out there. We're all spoken for. I just want to get that out of the way. But yeah, so here's some quick analysis on Bumble. Shares are up about 10% here in the early going, and I would say deservedly so. The company came out, first earnings report as a public company, big glitzy IPO over at the Nasdaq in early February. And I would say Bumble, for the most part, deliver here. First and foremost, they came out, the Bumble app, 47% revenue growth. That beat Tinder's growth in the most recent quarter of 13%. These companies are going to be compared even more now that they are both public. Of course, Tinder is owned by Match. So Bumble checked a box there. Strong outlook, pretty strong too. At the high end, looking for 25% revenue growth this year. If there is a knock, their operating profit margin guidance about 25%. That would be down from 26% last year. A lot of investments by Bumble is making in its app. And last but not least, revenue growth accelerated 7 points in the fourth quarter versus the third quarter. Put all that together, and I think that's why you're seeing the street pretty happy with this report on a company that they could really understand. This is not GE here. This is Bumble. They're dating, and they're getting prepared for a potentially strong rebound in their business later this year.
Well, we'll know there's a problem when Bumble Capital, I guess, gets started up inside of that, and it's a 100-year wind down of the business. I just want to note, I saw a Bumble bench in my neighborhood yesterday when I was walking around. It's like a yellow, I don't know if you guys have seen this. It's like a yellow plastic bench. It looks like the Bumble logo. There's 2 seats 6 feet apart, and I guess that's where you're supposed to sit, and you can conduct a Bumble date. So if you're on the Upper East Side, 83rd and 2nd, I think, were the coordinates on that. You can go there and hang out.
Interesting. I wonder how many of the people who actually meet up in real life are doing that distance. I don't know. All right, heartbreaker Brian Sazi, thank you so much for giving us the update on Bumble. We're going to take a quick break. As we go to break, I want to just bring you what the stocks are doing about a half hour into the session. We do have a rally here. The Dow opening at an intraday record today. In the next hour, we're going to dig more into looking back at the last year and looking ahead at what comes next in this pandemic. It is just after 10 a.m. on Thursday, March 11th, and we are marking 1 year since the World Health Organization declared COVID-19 to be a global pandemic. We've got special coverage all day long here on Yahoo Finance Live. I'm Julie Hyman, along with Miles Udland and Brian Sazi, and safe to say, we're all in physically and mentally different spaces than we were 1 year ago. Over the course of the next hour, we're going to speak with Connecticut Governor Ned Lamont, whose state is poised for reopening now in just a few days. Eventbrite CEO and co-founder Julia Hartz on the crushing effect of pandemic shutdowns on the live events industry and what happens now. And a COVID success story. Rider Systems CEO Robert Sanchez will discuss how his company is helping facilitate the strong demand for goods. First, though, we want to look at what's going on with stocks here today, because here, too, it's important to look back and then look at where we are right now. As we know, at this time a year ago, we were seeing stocks drop pretty precipitously. Today, the Dow opened at an intraday record. So pretty remarkable turnaround that we've seen in stocks, which of course are a forward-looking mechanism. The Nasdaq is also bouncing back today. It's up 1.9%. And Miles, what's interesting about that, of course, is that we've had this discussion now over the past few days. I mean, I think Stuart Kaiser put it really well in the last hour when he said a year ago, stocks were falling because we were worried about what was going to happen to growth. Now we're worried about what's going to happen to growth in the opposite direction, which has caused some recent turbulence in stocks. We've got stability over the past couple of days, but who knows if that's going to last.
Yeah, I mean, and as we kind of said right at the end of that conversation, things are a lot different when the S&P 500 is closing in on 4,000 versus when it's at 2,700. And it is interesting just watching, because there's kind of two stories now, right? We are back in the reflective mode of where things were a year ago, and I think as this chart illustrates, we can see how sharp that drop was. And in just under 2 weeks here, we're going to come up on the actual anniversary of the market low. And that was on March the 23rd, and we all remember how the next 2 months of conversations were a retest is coming. We're going to retest that low, and we really never even sniffed that level once we've kind of launched off from there. But to take the local, concern here and how the market continues to act and work through this rotation, things were looking a little hairy over the last couple of weeks. The Nasdaq did dip into correction territory. There were a number of stats that I think many of us saw about how well the Nasdaq has performed after recent corrections. Well, with the exception of, March of 2000, every Nasdaq correction in the last couple of decades has been followed by higher markets pretty much over the next 6 and 12 months. And so with that in mind, with the rates backdrop continuing to be sort of reframed away from the reflexive high rates bad for stocks, I think we're getting past that point. More people understanding, Brian Sazi, that higher rates can be fine for stocks. I think this has been a very constructive couple of days for the bulls, who maybe were on, maybe backpedaling just a little bit, at least, the tech kind of Momo plays. But the repair that we've seen happen in a lot of those names, with the cyclicals continuing to grind higher. Again, I think just a very constructive backdrop here for the markets.
Right, Miles, you've seen really the resumption of the everything rally, and I guess that's good while it lasts. But within a rally like that, you could see absolute disasters. Look at Stitch Fix earlier in the week. Stock was down over 30%. Really disastrous quarter, disastrous earnings call. And then today, look at Bumble. Shares up about 11% here in the early going here. A good quarter, accelerating revenue growth, hopping on an earnings call and actually giving guidance that you might be able to deliver upon. So I know investors appear, maybe they want to chase everything right now because they fear as though they have to, but I still think picking individual stocks is very important always, but no more so than right now. There are going to be a lot of disasters out in the market over the next few weeks, especially as we get back into earnings season again. Choose your investments wisely.
Saz, what I would say, though, is that's a return to normal of a sort, right? That's in any market environment. If you are invested in a company that has gone up, like a Stitch Fix that's gone up, 2, 3, 4x in the last several months, and they come into a soft-ish quarter. Look at Oracle this morning. You come out with a light guide, you're going to get punished for that. That's very much normal market behavior. And I think, Julie, perhaps a nice return to some normalcy in financial markets after a time when either everything went up for no reason or everything went down for similarly indiscernible reasons. At least that's kind of how it started to feel, let's say, May of last year and almost up until today.
I mean, you could still argue there's still some wackiness in terms of magnitude, at least, right? Look at Roblox yesterday, and it's
GameStop,
shooting
totally
up.
normal fundamental story.
Yeah.
Nothing going on there.
I do want to dig a little bit more into Oracle, but first I want to mention a couple of other records that we're watching today. We mentioned the Dow Industrials at a record. The transports are also at a record, but the small caps are at a record too. Russell 2000 at a record high here today. And then we've got other sort of ETFs that we watch as well, like the XHB, which tracks home builders, that's at a record. I think that's interesting too, given the demand for housing that we have seen. Okay, as for Oracle, company that reports something the market doesn't like is falling, to your point, Miles, sort of return to normalcy. And that's something that the market seemed not to like was its forecast, because we have seen such hot growth from so many of these tech companies, and the company now talking about in its last quarter, revenue up by 3%, which was in line with estimates. Constant currency sales were actually flat. And the company says, growth this quarter is going to be pretty much the same. So when you're talking about all of these growth companies, the pressure's on even more to deliver growth. And, 3% ain't it.
Yeah, Julie, the only thing I really was interested about with this Oracle quarter is what Larry Ellison, really, that's always the case for me. I always love listening to Larry Ellison on these earnings calls. What he had to say on the call last night about SAP. He went down a whole long list of business that the company is stealing from SAP. And maybe there's been some commentary recently that SAP is taking business from Oracle and who's signing up for Oracle's cloud. Really, Larry Ellison dropping the hammer and really a long rant. I think it was pretty hilarious. And I would encourage everyone to read that transcript on Yahoo Finance. It's worth your time.
And moving on to one, speaking of another meme stock that we were watching that actually had fundamental news, talking about AMC, the movie theater chain. That company posted a loss in the fourth quarter that was actually smaller than estimated. And probably more importantly, it talked about its cash and liquidity position, which it says is sufficient in the near term to keep it in business. It talked about reopening of its various theaters and perhaps return in ticket sales so that the outlook is getting better. Los Angeles and New York is where it is seeing some of those theaters open back up. I don't know, you guys ready to go to a movie? I think I'd go to a movie theater at this point if it's not crowded, right? It's a big place.
Yeah, I mean, look, AMC, the meme stock, you can see the meme life of the thing. I mean, it's not hard. It doesn't take a genius to find it on this chart here. That's a big part of the story here. But that was kind of kicked off by the company very forcefully at the beginning of this year, coming out and saying, we will not be going out of business. Now, I don't know if that's the kind of thing that sends a stock normally from 1 to 10. I think there's still a lot of questions about what the growth trajectory of the movie-going business will be on the other side of this. The streaming questions, the way studios have started to find middle ground, although I don't think the theater would think it's middle ground at all, with release on streaming and what the exclusive window is there. But Julie, I think to your point, personally, I'm not a huge movie theater person, but I know people who are, and they are hardcore jonesing to get back into theaters on a very regular basis. And I don't think that once we get to, let's call it June, July, pretty much anybody who wants a vaccine will be able to get one. I don't think there's going to be any lack of demand for what AMC is selling. I think their bigger question going forward, once we get past, the next, call it 12 months, is how they deal with these streaming release windows and what kind of precedent that has been set. But that's the existential question that they've been asking for years. I think clearly the concerns of them going out of business have very much been put off here. And again, the meme thing is just a hilarious kind of sideshow for the company's corporate history as well.
Yeah, definitely. All right. Well, we'll all meet up at the movies over the summer then. It's a date. Just wanted to bring you a little bit of breaking news here. We've got the JOLTS, the January job openings. 6.917 million is where that number came in, which was higher than estimated. 6.7 million was the estimate here. And it looks like the job opening rate was 4.6%, the pace of hiring at 3.7%. So sort of the counterbalance to the jobless claims numbers that came in this morning, a little bit better than estimated, but still above 700,000 is this job opening. So still a lot of people not able to find work, but there are a lot of jobs in other areas, as we talked about, this sort of stop-start uneven economic recovery, particularly in the labor market. When we come back, we're going to be catching up with Connecticut Governor Ned Lamont as his state prepares to reopen. The pace of vaccinations is speeding up across the country, as too are decisions by various governors to ease some of the restrictions that have been in place in their states. One of those is the state of Connecticut, and the governor, Ned Lamont, is joining us now. You guys are preparing to allow 100% capacity in restaurants, still with other rules in place like social distancing. At the same time, you guys have now a vaccination rate in your state of just under 10%, about 9.9%. So how are you balancing this sort of reopening as the vaccinations is still only about 10% of your population?
I turned that around a little bit, Julie. By March 19th, when we open up at 100% with the masses, we'll have the overwhelming majority of our people over the age of 55 vaccinated. And it's people over the age of 55 where you have the most complications, the most hospitalizations, and virtually 99% of the fatalities. So we think we can continue to reopen safely. And 100% is a little easier to enforce than, say, we're going to have a 3-week pause or open at 50% or 78%. People understand it's open, but you can be only open until 11 o'clock at night, and you got to wear the mask.
And Governor, just to sort of clarify what we mean here when we say 100% in a restaurant. In a restaurant, I think we can all understand, is a higher risk activity indoors. You got to take off the mask to eat, right? So at some point, you're not going to have that mask on. So if it's 100% capacity, but still with social distancing, is it really 100% capacity? Because you can't fit as many people in a restaurant if you're enforcing social distancing, right?
Yeah, Julie, you're absolutely right. I mean, a lot of our smaller restaurants, they have to keep the 6 foot of distancing, or they have the plexiglass up, so they're still going to only be at 75%. A lot of our bigger ones were saying, "Let's go, we can do it." And by the way, you know, we're not Florida. It's not like everybody's going to rush in on March 19th. You know, on the contrary, people are cautiously going back. They're looking in. They're seeing this is a restaurant that seems to be taking the health protocols seriously. I think I'll come back. And finally, I'm hoping we're going to be outside. Our main streets are open for dining. And as you move into late March and April, it's going to be pretty nice out there to eat.
Governor, when do you anticipate lifting the mask mandate?
I think that's going to take a little bit longer. Masks definitely work. They give consumers a lot of confidence when it comes to getting back into the movie theaters, as I heard before. And it certainly gives schools more confidence. Our schools have been open. They all opened in September, pretty much everybody. But we still, in our cities, only have maybe half the kids feeling confident going back. So I think masks in the classroom will continue a little bit longer as young people, students, build up confidence in their kids to get back into the classroom.
Governor Lamont, it's Miles here, and you know, as a graduate of UConn, I'm obviously quite invested in sort of the state of education in the state, and so I wanted to ask more about the schools. And you mentioned they've been open, but are you hopeful that the 2021-22 school year, both at the the primary, the secondary, and then of course the higher education levels, are you confident that they'll be able to look, pretty much like a 1920 school year was on track for, given kind of how that has progressed in your state?
Yeah, Miles, I am pretty confident there. Everybody will be vaccinated. Maybe some people have a booster shot if the variant comes along. I think we're putting a lot of money into our schools to make them safer, starting with the ventilation systems. But I'm really less worried about September, more worried about July and making sure that we get these kids socializing back together, camps, learning, fun learning, socialized learning, so that when they get back in that classroom in September, they're ready to learn.
I also want to ask you about migration, Governor, because we've talked a lot about that on the show, people moving from urban areas. You mentioned Florida. There's big influx seemingly of people to Miami, places like Austin as well. How's that affecting Connecticut? Are you guys getting an influx of suburban residents, and is that going to be good for your tax revenue in the state?
Yeah, Julie, we've had about 50,000 folks move into the state of Connecticut over the last year. Most of them from New York City. And I cheer on New York City because we're part of that New York ecosystem. But a lot of young families are moving out here, which is a good thing. I think it's a lifestyle. Our schools are open. A little bit of a backyard, if you can afford that, is kind of nice. This may not be our last pandemic. So I think people taking a second look at the Connecticut lifestyle.
Governor, we've talked to you throughout the pandemic pretty consistently. And to your point, really, we could see more pandemics in the future. What have you learned the past year of the pandemic, and have you begun to prepare for that next one?
Yeah, that's a really excellent question. We've learned that you got to have a stockpile. There was no stockpile of PPE going back a year ago, and we were scrambling. Connecticut's got a stockpile, and I think Washington now has a stockpile. Number two, you can't do this alone. I mean, obviously, federal leadership is a big help. We have that leadership now. And as you know, I worked very closely with my regional governors, starting with Governor Cuomo, as we tried to put a consistent message out to people about why we had these rules and what they mean for you.
Governor Lamont, it's always great to see you. Governor Ned Lamont joining us from Connecticut. All the best to you, Governor.
Thanks, Julie.
And as we mentioned, throughout the next hour, we're going to be talking more with other executives about this past year and what happens now. Julia Hartz, the Eventbrite CEO, joins us next. Well, among the many, many things we have missed over the past year, for at least me personally, concerts have been pretty high there on the list, and other types of live events. I'm sure our next guest has been missing them as well, both on a personal and professional basis. Julia Hartz is with us. She is the CEO and co-founder of Eventbrite. Thank you so much for being here, Julia. I was just looking at the latest numbers that you all came out with, and it's pretty remarkable, in part because you guys are a global company, not just here in the United States, but you did see a paid ticket volume uptick of 18% in February versus January. And you also saw an increase in places like Australia in particular. Talk to me about, though, the year over year and how things compare and how far you need to go to get back to where you were.
Well, thank you so much for having me this morning. You know, we started 2020 ticketing venues and we ended the year ticketing vaccines. So that sort of underscores how unexpected the journey has been for a business predicated on live events. Year over year, we've seen a decline in paid tickets and revenue. But what we're seeing in return is a prevalence of live events happening. People want to connect. So in 2020, we had nearly 5 million events happen on the platform, and over a third of those were virtual.
Julia, what does the live event look like after the pandemic? I can't imagine we're all going back to rock concerts and stepping on one another and spilling beer on one another. What does it look like just physically?
Well, we're seeing a growing pent-up demand for live experiences. That's really what the numbers are showing us. And where there's optimism in a market, you really see that with consumer buying. When we get back out to gather safely again, we're going to be doing it more frequently. We're going to be doing it more locally, and we'll be doing it in smaller venues at first. I think there's going to be an easing of getting out of the social isolation and getting back to what we love to do. The other thing that we've seen over the last year is the ingenuity of creators to meet the demand for people who are dying to connect with one another. So different formats of events have emerged. Small businesses are using the platform, like retail and restaurants, to connect with their customers. We saw over 300,000 people publish their first event on Eventbrite in 2020, which is astounding and really gives rise to what's coming next.
And I guess when you think about, Julia, the future.
Go ahead, Mas.
Oh, no, so go ahead, Saz. Go ahead.
No, I was just, Julia, I just wanted to follow on that. What events are coming back in the early going? You said local events, but what is coming? Are these craft fairs?
Well, it's everything you can imagine, from craft fairs to yoga workshops to book signings. These are the bread and butter of what Eventbrite does. That's what we've been doing for many, many years, and it's really because we're a self-service platform. Anyone can use the platform for any kind of gathering, and so you just have this wonderful diversity. But largely what we've seen in this year is many creators coming to the platform for the first time to create a live experience in lieu of having that physical connection with their customers, as well as creators such as Daybreaker, a big, massive dance party, taking their entire series of events and turning that into a digital media business. So we expect to see that some creators that have had success, like Daybreaker, will continue to host online events for their now massively global audience, as well as bringing back those in-person connections, which are going to be a premium, to us, as we are all dying to get out and be in a social situation after so much time in isolation.
Julian, you kind of got to it there, but I did want to ask about those new digital events and whether you see them kind of as a fully new line of business for some of these creators, or in many cases an original line. I mean, they've never done events before, or whether they will maybe fade away as we can, get back to gathering in person and doing all the things that we kind of thought we'd do forever in 2018.
Well, of the unexpected items of last year, of which there is a list too long to tell you today, one of the most surprising things was seeing how quickly our customers pivoted to online when the pandemic forced us to, restrict social gathering in person. And that was for the greater good of public health. But 1.4 million online events occurred on the platform last year, which was up 2,000% year over year. So I think that looking forward, what I've learned from talking to creators every week is that this has given them the opportunity to build a much bigger audience, specifically on Eventbrite, because we are such a global company and we're able to help them build an audience and convert that into ticket buyers. They are not going to pivot away from that. And in fact, they're really looking at ways in which, using Eventbrite as their one-stop shop, they can both host online events as well as bring in-person events back. I think that the two can converge in some sort of hybrid format, but really it's up to our creators to invent the future. We're building the platform that's going to enable whatever they want to do to rebuild the live experience economy.
Julia, you definitely sound very upbeat about the future for Eventbrite and the future for the kinds of events that you guys have adapted to deal with. I mean, but let's not make any mistake. You guys had a rough year. I mean, you've laid off almost half of your staff last year. So when do you think, how long is it going to take for you to come back? Are you going to be hiring any of those people back? What does sort of rebuilding the company itself look like?
Well, few companies have gone through what Eventbrite has gone through in the last year, full stop. We didn't just sit on the sidelines and lick our wounds or, wait and hunker down. We have been retooling, reimagining, reinventing what our business will be going forward. So we emerged from this crisis a stronger, leaner, faster company, and that's a permanent shift. That's not just a temporary condition. And we had to pivot our strategy very early on. It was March of 2020. And by moving that quickly and taking action, we were able to spend the bulk majority of the year supporting our creators and helping them go through a disastrous experience. So the reason why I'm upbeat and optimistic is because we've been through the eye of the storm, and companies that can see that type of crisis and business disruption are, companies that are going to be around for a very long time.
Been through the trenches. All right. Julia Hartz, thank you so much for being here. Appreciate it. Eventbrite CEO and co-founder. Thanks for your time. All right, let's take a quick break, and when we come back, we're going to be talking more about these issues pivoting during the pandemic with the CEO of Ryder Systems.
All right, welcome back to Yahoo Finance Live on this 1-year anniversary of the day the world changed forever. The WHO officially declared COVID-19 a global pandemic, and of course the day that life here in the U.S. changed as we knew it. It's been an eventful year across industries, perhaps none more interesting than what's happened in the supply chain and transportation space. Joining us now to discuss is Robert Sanchez. He is the CEO at Ryder System. Robert, great to speak with you. Once again, I'd like to start with an announcement that you guys made actually at the beginning of last month, that you would offer PTO to employees to get their vaccines, both for their first and second dose. And I think as we all sit here, I'm awaiting mine. I don't know if you've gotten yours yet. I'm curious what you've seen on the uptake of that program as we all sort of want this thing rolled out as fast as possible.
Yeah, Miles, again, thanks for having me. And yes, our announcement was really to encourage our employees to take the vaccine when it's available for them. Obviously, in many states, it hasn't become available yet, since the majority of our employees are not within the age that is getting the vaccine currently. But in the next few weeks, we expect that to really accelerate. And really, our initiative was really to make sure we eliminate any barriers or excuses that employees could have, or things that could keep them from getting the vaccine, because clearly the vaccine is the quickest way to us getting over this pandemic.
So then let's talk a little bit about the business, and specifically the ability for you to issue a forecast in your latest quarterly report. We've talked to a lot of executives over the last several months. I'd say right now it feels like it's about 50-50. Obviously, a year ago it would have been 90-10, if that, on folks who were declining to offer a forecast. I'm just curious what you're seeing in the business, and if you feel like some of those kind of crunches that have come up across the supply chain are beginning to ease a little bit as we get into 2021 here.
Sure, it's been a wild year, and it's the great philosopher Yogi Berra said that one of the toughest things about making predictions is that they're about the future, and that's really what's been tough. And as the year progressed, so clearly the second quarter was the toughest, and it was a period where things were changing by the day. We're a provider of supply chain logistics services to 50,000 companies, primarily in North America, both big and small. It could be a small business, but also we do business with a lot of large corporations, multinational. And we saw some businesses that really had to shut down. So you think about manufacturing, the auto industry, which had a full shutdown, where things had to really close. And then you had other businesses like the food logistics business and the grocery business that was spiking. And really what we had to do is we had to just shift very rapidly. So I think one of the things we learned is that it is tough to make predictions. It is tough to forecast, but you've got to be nimble, and you've got to have the ability to move resources around. So we took folks who were driving in the auto industry and moved them to the food industry. We had pop-up warehouses that we set up for food companies that were having spikes in demand. We had one customer that sold 40 years worth of hand sanitizer in 10 weeks. And really the ability to flex so that companies could deal with the changing demand, I think was big. So as we look forward into 2021, there is better visibility. Obviously, barring any other pandemic surprise, there is certainly better visibility than there was in the second quarter. The economy has rebounded. I think the resilience of the economy has really been the big surprise for many of us, is how well things have rebounded overall. And as we look at this year, I think certainly towards the back half of the year, as the vaccines become more widely administered, we're expecting a significant boom in the economy as people get back out and go to concerts, as your previous guest was talking about, or get out and do the things they had done before. So certainly better visibility than we had a year ago, and I think generally a positive business environment.
Rob, I do want to ask you about the flip side of this, because we have been watching the tech market, tech shares kind of in turmoil as of late because of this perception that demand for their services is going to fall off as people go out and go to events and things. What's going to happen on the good side of things? Because there's some talk about that as well. Maybe people aren't going to be ordering as much online, for example. So how have you thought through that kind of effect on your business?
Yeah, I think. Look, we do business with technology companies. We do business with manufacturing companies. We do business with retailers. So we kind of get a view of the broad economy. And sure, when demand shifts, there will be some areas that you'll see demand slow down in, and some areas it'll pick up. But I think overall for the economy, the industrial economy, I think, is going to pick up because you see it currently in the auto industry. The demand for cars has really spiked, and we're even seeing some shortages around semiconductors and some other products. So I think that's what you're going to see overall just a significant improvement in demand, especially with some of the stimulus that we're seeing that's going to be hitting the market in the next several weeks, possibly. I think overall it's going to be a positive. There will be some industries, possibly some technology companies that their technology may not be used as much, but overall I think it's certainly a positive for GDP.
Robert, one lesson among many when I talk to executives is they have realized they can't have their supply chains all in China. They can't have them all in Europe. When you talk to your fellow CEOs, you talk to fellow or just even customers, how significant do you think the onshoring movement will be post-pandemic?
Yeah, I think it takes a while, but clearly I think the scale has moved towards more onshoring and nearshoring. So as companies look to open up their next manufacturing plant, I think you're going to see more tilt towards nearshoring and onshoring. It's primarily because I think a lot of companies learn that your supply chain needs to be nimble, it needs to be flexible, and long supply chains are challenged with that. So I think tightening the supply chain, especially for consumption in North America, you're going to see, I think, more manufacturing happening potentially in Mexico, in the U.S. and in Canada. But again, I think it's going to be over time. I don't see it happening immediately, but that's really right in our sweet spot. We provide logistics services in North America primarily, so we think it's a real tailwind for our business. It's what we do. I mean, we specialize in designing supply chains and operating supply chains. We have some of the best logistics engineers in the industry, and we have the ability to then execute and provide the services that these companies need. So that's really, I think, it's going to be a secular trend, but it doesn't happen overnight. It'll happen over a period of time.
All right, Robert Sanchez, CEO at Ryder System. Robert, always appreciate the time. Thanks so much for jumping on, and we'll talk soon.
Great. Thanks for having me.
All right, let's take a look at markets as we head off to break here. Adding to gains, Nasdaq now up nearly 2% on this Thursday morning. Back with a lot more here on Yahoo Finance Live right after this.
You're watching Yahoo Finance Live. I'm Julie Hyman, and among all of the things that have changed over the past year, certainly how we have gotten our healthcare is part of that equation with the rise of telehealth during this time. We want to bring in a company to the show now that is going public through a SPAC that is in this space. It's called DocGo, and Stan Vashovsky, who is the co-founder and CEO of that company, is joining us, as well as Michael Burdick, who's the CEO and director of Motion Acquisition Corp, which is the SPAC through which DocGo is going to be going public. This deal just announced a couple of days ago. So, Stan, I do want to start with you. Talk to us about where you sit in the telehealth space, because I know you guys describe yourselves as a sort of last mile here. What does that mean exactly?
First of all, Julie and Brian, thank you for having us. We're the last mile of telemedicine. So when someone consults with a physician online and any sort of tests that need to be conducted, it's our people, our EMTs and paramedics, our medical clinicians that will actually go to the patient's home, do a blood draw, do an EKG, do various 35, 36 different types of tests in the comfort of the patient's home, and then share those results with a telehealth provider.
You know, Michael, I want to ask a little bit about the process of identifying DocGo and just the process you guys went through at Motion Acquisition of finding a target and eventually circling them on this and sort of what you've seen in the environment as someone who had raised money via SPAC and then seen quite a few competitors obviously come into the space recently.
Yeah, well, it's been an interesting process. If you go back a year ago, I didn't even know how to spell SPAC, to be quite honest. As you probably know, we filed publicly back in September, listed in October, and we started off with a pretty robust pipeline of target opportunities. And of course, once we announced our public listing, we had a number of inbound interest from various companies and advisors. And one of those inbound inquiries was from the advisors for DocGo. And of course, that started a long conversation, multiple meetings with management, various due diligence activities. And we ultimately concluded that of all of the opportunities that we had in our target pipeline, this was by far the standout company. It had the scale, it's on a rapid growth track, it's profitable, it's a market leader, it's really a disruptor in the healthcare world. And on top of all of that, it has a great management team. And so we couldn't identify a better target than DocGo. In fact, we don't like to talk about it as a target, we like to talk about it as an opportunity. And we're pleased to be able to provide the growth capital to the company and that will really allow Stan and his team to realize the vision of revolutionizing the delivery of healthcare in the US and beyond.
Stan, I was looking around ahead of this interview for competitors. I didn't see a lot of competitors doing what you do. Who are your competitors, and how do you plan to scale the business further over the next year or two?
Well, it's kind of a green space. So we came up with the idea about a year ago. Ultimately, when I myself went and consulted with a telehealth physician and realized that for my prescription refill, I needed blood work. And I was asked to go to a traditional lab or a physician's office to get that blood work. And I just questioned, well, how can we make telehealth better? How can we provide care in the comfort of a patient's home? And that's how the idea was founded. And we now have over 1,700 people throughout the country in 23 different states providing services out in the field, trying to reduce the need to go and wait in waiting rooms or travel to medical facilities where people in this environment may not be comfortable in doing so. So our goal is to scale. We hope by the end of this year to be somewhere in about 34, 35 different markets. We're hiring people as fast as we possibly can. Of course, they go through an extreme vetting process and onboarding process just to make sure that we hire the best. We like to think ourselves as disruptors in this space and being able to provide affordable care in the comfort of a patient's home, utilizing physicians on telehealth. I mean, that's our vision.
And why are you profitable?
Well, one, we're able to leverage our existing transportation business, the resources to make everybody as efficient as possible. We have phenomenal technology, the technology that we started to build about 5 years ago. The first 35 employees of the company were software engineers. So we've spent millions of dollars building technology that's able to take demand and then based on priority and routing, able to schedule in such a way that it's extremely efficient. We're also using a labor set, paramedics, EMTs, sometimes physicians' assistants that are a lot less expensive than physicians. So we're able to provide our service in a much more affordable manner, making it accessible to a much larger group of individuals.
And Michael, just quickly, again, when you were looking around in your process here, we talked to a lot of companies that are coming public through SPACs that are pre-revenue, right? This is not. Right. Somebody actually has some revenue. Was that sort of a prerequisite for you?
That was a key criteria for us. The Motion team was founded by a bunch of operating executives. We've been in the public world for many years, and we believe in fundamental financial metrics. And so we were a little uncomfortable with the idea of partnering with pre-revenue companies and trying to sponsor them through the public markets. We're much more comfortable working with companies that are operating on a real business plan that ultimately would result in profitability and free cash flow. And we didn't have to lean in very far with DACO. They're already there. And not only are they there, but they have a great opportunity to continue to grow at a phenomenal rate and really dominate an industry and be a disruptor in providing healthcare services to patients in the home.
Well, you guys are in the minority among SPACs with that prerequisite. Michael Burdick, thank you so much, CEO and Director of Motion Acquisition Corp, and Stan Vashovsky, who is the co-founder and CEO of DocGo. Thanks to you both. Appreciate it. We're going to take a quick break. When we come back, we're going to dig into today's action in the markets.
All right, welcome back to Yahoo Finance Live on this Thursday morning. Again, it has been 1 year since March 11th, 2020, when the world really changed forever. WHO declaring that global pandemic, among other unforgettable events. Maybe Tom Hanks and Rita Wilson confirming that they had contracted COVID down in Australia. Certainly kind of galvanized situation for many. We mentioned the NBA earlier as well. And we've talked and thought a lot about the financial market landscape since then, what happened in the days after that March 11th news, and we were thinking about what's the one thing that is true today that would have been most surprising if you went back in time and were able to tell yourself, hey, this will be true 1 year from now. And I think for me, it's kind of a straightforward one, but I would say regional banks being at a record high, because that really represents three stories that would have really shocked me if I had thought about it a year ago. That means you've got a strong housing market. It means you've got a yield curve that's steepening, thus implying faster economic growth. And it also indicates just a broad market rally because the banks have been left behind and have kind of been dragged along begrudgingly with any market action that has happened since the crisis. And so I'll go to each of you. Sazia, I'll start with you first on what surprised you most in the last year.
Surprised me is all these pre-pandemic CEOs that were in the job pre-pandemic are still CEOs. I think the pandemic has really shown how a lot of companies are ill-prepared for these types of events, all the egregious spending. And first and lastly, I'm surprised a lot of CEOs are just simply not burnt out. Would have expected a lot more change, Julie.
Yeah, I guess I would have expected a lot more change too. As you guys like to know, I don't like to make predictions of any kind. I love that Robert Sanchez quote that he referred to Yogi Berra earlier. The problem with predictions is they're about the future. I mean, but yeah, I'm surprised stocks are higher now. I'll be honest, like even though, yes, stocks go up over time and we know this, of course, I would not have expected markets to behave so robustly during a time when millions of people around the world were sick and hundreds of thousands were dying. So yeah, I'm surprised by that.
All right, we had you pegged for oil prices being higher. Another one that I thought about as the most surprising. And we'll do a special on April 20th when we celebrate the day, the negative $37 a barrel when we get that close. That's right around the corner. All right, for Julie Hyman, Brian Stalzi, I'm Miles Udden. Thanks for tuning in. Yahoo Finance Live on this Thursday morning. Full coverage here of our 1 year on special coming up all day here on Yahoo Finance Live. Zach Guzman and Akiko Fujita have you right on the other side of this break.
Welcome into Yahoo Finance Live. I'm Zach Guzman alongside Akiko Fujita. Happy Thursday, everybody. We have stocks popping here today with tech roaring back as unemployment claims come in better than expected this week. You can see here the Dow enjoying a nice pop as well, up nearly 1%. And the Nasdaq, as I said there, up more than 2%. As tech comes back, and also the House passes Biden's $1.9 trillion relief package. How soon President Biden could sign it, and how soon millions of Americans will be able to cash those relief checks. The best way for investors to invest around that in their portfolios. Plus, states across the country loosening vaccine eligibility as more doses make their way into the arms of Americans. We'll chat with Dr. Anthony Fauci's boss, the director of the National Institutes of Health, joins us on the pace of reopening and unforeseen risks ahead. And professional sports also making a slow recovery. We'll feature a conversation with NBA Commissioner Adam Silver about that, and pro skater Tony Hawk will also join us live for his latest entrepreneurship endeavor. But first, today marking 1 year to the day since the World Health Organization officially declared the coronavirus outbreak a pandemic, March 11th, 2020. The day that the world changed forever, the day that the NBA announced it was suspending its season before the bubble, the day that the Dow closed down 1,400 points to end in a bear market. And as we look back to our coverage that day, a day where things were really just beginning to sink in.
We have therefore made the assessment that COVID-19 can be characterized as a pandemic.
All the focus continues to be on coronavirus cases here at home, now topping 1,000 in the U.S. as Europe also struggles to contain the outbreak.
First reaction and thought when you learn that the season's been suspended. This is crazy. This can't be true. It's like out of a movie.
Will be below 23,641. That means the Dow enters a bear market.
We will be suspending all travel from Europe to the United States for the next 30 days.
Disruptions to daily life are coming. Obviously, this show is focused on the markets, but I think those stories are what's going to really be impacting everybody in the weeks ahead.
Kiko, I mean, it's wild to think it's been 1 year since then. You think about all the hardships, the lives lost, and the scientific progress to really get to the point where a lot of Americans are getting their vaccine doses now, but clearly a lot's changed since then.
Yeah, Zach, I remember having a conversation in the office at the time saying whether we'd be stuck at home for a few months, and here we are a year later still broadcasting from home. It's quite telling when you hear some of those numbers in that quick montage we saw there, because at the time, certainly COVID-19 was not a pandemic on the scale of what we have today. And I think it's worth reflecting on what we have seen over the last year. 1,200 cases at the time in the US, 40 deaths. Today, we have roughly 30 million known infections, more than 500,000 lives lost. And of course, we focus so much on the economic impact of the pandemic. We have 10 million fewer jobs than we did pre-pandemic. And certainly those initial jobless claims numbers today coming in better than expected, pointing to that continued recovery that we're having. But when you think about the trajectory over the last year, it certainly is a very sobering reminder of how much more there is to come here to get back to the kind of economic activity we saw before March of last year.
Yeah, and really, I mean, I'm sure this is us looking back in a year's time, but I'm sure when we look back in decades' time, a lot's going to be made of this just kind of being the worst timing for something like this when we think about it coming during an election year and politics playing its part in all of this as well, and the reaction to the way that we tried to grapple with this pandemic here at home. I think that that's going to be a big piece of this when we look back on it as well, just some of the missteps maybe that were handled there in trying to respond to all this, WHO included, as we look back on the 1 year anniversary of them officially declaring it a pandemic. And of course, a reminder here, we're going to be covering that all day long on Yahoo Finance. Stay tuned for our 1 year look back, special coverage as we look back again on what has changed in that 365-day span. And of course, as we've been discussing, I mean, the main takeaway since then is that we have come a long way in all of this, but still very much a long way to go. And in that goal, the House making a big stride there to pass that $1.9 trillion relief package, even though Republicans stood in unity against it. no Republicans voting for that bill. And for more on that, I want to bring on Yahoo Finance's Jessica Smith with us from Washington, D.C. for the latest on where we go from here. Jess?
Yeah, Zach, President Biden is expected to sign this bill tomorrow afternoon. As you mentioned, it did make it through the House with just Democratic support. One Democrat actually voted against the bill. Now the White House and Democrats are really going to set out on a messaging campaign to try and sell the benefits of this package to the American people. They say that they are trying to avoid the mistakes of 2009 when Democrats did not do enough, they say, to take enough credit for the relief package at that time. And it really cost them in the 2010 midterms. But Republicans and Democrats have a very different view of this package. Let's watch some of what the leaders of both of these parties had to say.
You will receive $1,400 checks by the end of March. Help is on the way. Vaccines will be available far more quickly to far more people in a shorter time. Help is on the way.
This is a classic example of big government Democratic overreach in the name of COVID relief. I think this is actually one of the worst pieces of legislation I've seen pass here in the time I've been in the Senate.
The White House says it is going to put a point person in place to oversee the implementation of this bill. This is a massive bill, so it's going to take a lot of coordination between the different agencies. And they say it will be helpful to have one person in that role. Still not clear who that person is going to be. We are going to hear from President Biden tonight in prime time. He will address the nation and talk about this past year and then look ahead to what comes next. Zach Nikiko.
All right, Jessica Smith with us in Washington, D.C. there covering the latest. Appreciate that. For more on where this political battle goes in this recovery, we want to bring on our next guest kicking us off today, Lonnie Chen, Hoover Institution Fellow and former Mitt Romney 2012 Policy Advisor. Lonnie, good to be chatting with you again here. I mean, the popularity of this relief package, I think, is worth stressing. A Pew Research poll pointed out that it had about 70% of Americans favoring it. So it's a tricky spot for Republicans, I think, to be in to say that this is bad. What's your reaction to the way they held strong against the Democrats in the House and maybe where they go from here, since it is a lot of money flowing to Americans right now?
Yeah, no question that there is an element of this policy that will be very popular. In fact, I think several elements of it will be very popular. I think at the end of the day, though, Republicans made the proper policy argument here. And this is going to be the challenge, is can they get out there and have a counter message that basically says, look, the actual amount of COVID relief, the actual amount, for example, you saw Chuck Schumer referring to this notion of getting more vaccines in arms. That's a very, very small amount of this package. It's less than 10% of the total that's really being devoted to those kinds of things. Is that the kind of message that Republicans can get out there and send regarding this package? That essentially the amount of COVID-related benefits, the amount of COVID-related relief here is a relatively small piece of the whole. I think that's a challenging message. There's no question about it. But it's a message that they've decided they want to stick with. They believe that they've got a long-term pathway here to make the argument that this was essentially a bunch of unnecessary spending on progressive policy priorities. You heard Mitch McConnell say that. The efficacy of that, we'll know with time. We'll see whether that argument is compelling or not. But in the short run, it certainly seems, Zach, like it is a large hill to climb.
Lonnie, one of the areas that surprisingly didn't attract as much Republican opposition is this extension of the child tax credit. And we've heard Senator Romney certainly argue for something even more significant than what we have right now. Democratic lawmakers have indicated they want to push to make this a permanent credit. How much support do you think there is from Republicans? And how do you think they calculate this particular part of the bill? Because it does seem like there is some agreement on both sides.
Yeah, and that's the interesting thing here, Akiko, is that there are parts of this bill that I think would have garnered some bipartisan support. Certainly the part about direct sort of funding to help with vaccine distribution, acquisition of PPE, et cetera. And then this child tax credit piece is really interesting because you did have a number of Republicans coming out calling for an expanded child tax credit to support family and child rearing during these challenging times around the pandemic. And then, of course, you noted Senator Romney. He actually called for a broader overhaul even of the entire system relating to assistance for families and for those with kids. So there was the possibility that this piece could have garnered bipartisan support. I think the challenge, though, is now that you've had such a partisan battle over this $1.9 trillion package, I'd argue in some ways you've poisoned the well in terms of being able to come together on areas of public policy where there may have been agreement, like, for example, expanding tax benefits for those with families and kids. So I think that's a challenge we're going to have to see. Again, we're only going to know as this plays out over time. But my sense looking at it now is that Republicans are going to be really loath to try to come together with Democrats, even in areas where potentially there may have been agreement.
I think that's a very good point, and I think it's especially something that a lot of cannabis investors out there have noticed, thinking about how many moderates would need to come along for any changes on that front. But when you think about it, it does sound like Democrats are really banking on the financial impacts being remembered for a long time, right? Thinking that Americans that might need that stimulus check that was promised, really capitalizing on that and hoping that it pays dividends later on in the next election cycle. But Lonnie, I mean, when you look at kind of where we're at in this recovery, there is a lot of truth out there that we might need some sort of relief for the hardest hit Americans. We got unemployment claims earlier today showing that it dropped to a 4-month low, but the number coming in at 712,000 claims, down from underneath expectations of 725,000. But when you look at that and kind of gauge where we're at in the recovery versus what passed, I mean, it's tough to look at it and say that it wasn't necessary, right?
Well, I think you have to ask the question, could the policy have been more targeted? You know, one of the things we know about this pandemic and the period of time since the initial, you know, we've now been in this for a year, the period of time since the initial declaration of pandemic, what you see is a real kind of bifurcation in the American economy, right? Some Americans have done just fine, in fact, have prospered during this time, and other Americans have been very hard hit economically. There's been a fraying of the social fabric. There have been mental health issues that have come up as a result. And so the question is, was this relief package really targeted to those Americans who needed it? And I think part of the Republican argument going forward is going to be, look, you could have taken a fraction of the money, targeted it more specifically at those who really needed the help, and ended up with a much smaller package that was much more directed, that was much more focused. And I think that's going to be, again, I think that's going to be the issue going forward, which is, yes, there's no question that some more assistance probably was needed. But you have to remember, this comes on top of $4 trillion of assistance last year. And so really, I do think this could have been a much more targeted formulation, and in that sense, a much more effective one that could have garnered some bipartisan support.
So, Lonnie, I guess the question is, where does this leave the other legislative priorities? You said the partisan manner with which, the partisan way in which this passed poisoned the well. What about issues like infrastructure now? Because that's something that both parties have said they can come together on. That's another big bill that could be on the table here. Does that derail priorities like that?
I think the devil will be in the details, Akiko, on infrastructure. I think there's always the potential when you're talking about coming together, spending money in members of Congress's districts to repair roads and bridges and increase our capacity, for example, to transport goods and transport people. Those are all things people like. But when you talk about how is that spending going to happen? Where will that spending be? Is that spending going to be, quote, paid for? Those are the tough questions. And I think if the answer is that they're going to do a $4 trillion package of spending where there's no pay-fors and it's just a bonanza and a blitz of money going out into America, I think that will be challenging, again, for Democrats to do. I think the only way they're able to bring Republicans along is if they work together with them from day one to try to craft a package where there can be bipartisan agreement, because infrastructure is one of those areas where the potential has always existed and where I think you could potentially see something much later this year.
Okay, we'll be watching that. Lonnie, always good to get your insight. Lonnie Chen, Hoover Institution Fellow and former Mitt Romney Policy Advisor. Let's turn our attention back to the markets with some stocks on the move here. Roblox, a big one we have been watching. Shares there continuing to extend their gains in the session, up nearly 4% today. The gaming platform saw a 54% pop in its debut yesterday after setting its reference price at $45 a share in that direct listing. That valued the company at $45 billion. That is more than 10 times what it was valued at 1 year ago. The stellar debut certainly pointing to strength strength in the IPO market, but also the continued momentum in the gaming space. And we should point out founder David Barjuki's shares in the company now worth $4.6 billion. Coming up, looking to the future of work, how the pandemic has transformed the office space. The CEO of Hudson Pacific Properties will be joining us to discuss what workers can expect as we look to a potential return to the office. We'll be right back. Well, the COVID-19 pandemic has dramatically accelerated the move to remote work. Nearly a quarter of the workforce is expected to move to a hybrid schedule. So we're talking about half of the week in the office, half of the week at home. Those numbers coming from McKinsey signals continued disruptions in commercial real estate. Let's bring in our guest, Victor Coleman. He is the CEO of Hudson Pacific Properties. Victor, it's good to talk to you today, particularly because you've got a huge presence in a lot of these cities that are tech hubs. We heard early on in the pandemic about how many people had left the offices, how many of these major tech companies are now moving to a permanently remote environment. What are you finding in your properties, and how much of that is starting to fill up again?
Well, we've seen a massive uptick, obviously, since vaccinations have come into play up and down the whole West Coast. And the tech players have typically been a little slower and very methodical in getting back to work, but they've been planning on the workspace alterations and changes really since summer. And so I think the preparation around that has been very solid. I think at the end of the day, we're imminently looking at sometime in late summer, early fall, but before most of these are coming back. In terms of the migration out, I think there's a few that are focused on that right now. But at the end of the day, I do think you're looking at these companies have built their entire platform on culture and collaboration. And that's really what they're going to try to grow, continue to grow forward and maintain their business plans on. And that means working in the office.
Yeah, and Victor, I mean, when you look back relative to where we were just a few quarters ago, and there was a lot of concerns about what office space might look like here, and then the need for companies to be in the office. I mean, what are you seeing now, and maybe a shift in that kind of thinking as we get more and more vaccines distributed? Because it sounds like, from what we're hearing, employees don't necessarily want to go back into an actual physical office until most, if not all, vaccines among employees are required.
Well, the first thing I think people are concerned about, and rightfully so, is the health and welfare and safety, right? So protocols have to be put in place, which are being activated. You're going to have to see at the end of the day that social distancing and one-way corridors and HVAC systems and all the attributes around that is put in place. So once that's put in place, which is effectively done now, we're ready for that to be going forward. At the end of the day, I think what you're going to find is these companies are going to migrate back, like we as a company have migrated back to 35%. Even though we're an essential business, our portfolio assets are back 100%, but you're seeing the desire to be back. And I also feel that the banter we're talking about with these large tech companies is really about not if, but when. And so I don't think it's going to be a decision whether you can come and go and be flexible. I think it's going to be based on productivity, and productivity is going to win out that collaboration and socialization. And so the office space is going to change. And what we're seeing, the major change right now is the density. And so we're going from an average of about 175 feet per person to more now, closer to 250. And that seems to be the trend going forward.
Yeah, just more spaced out, certainly in the office, just to address some of the concerns. Victor, what's interesting to me is also what's been happening in the retail space. When you think about the massive footprint that a lot of these malls have taken up, so many retailers sort of exiting as well. I'm curious to hear more about how you see those spaces transforming. Who's actually going to be entering when there's so much real estate right there, and we keep hearing about the decline of malls?
So we did a pretty interesting transaction. We ended up taking a very, very well-located mall in the middle of West Los Angeles, and we've converted to creative office for almost 700,000 square feet. And Google's going to be the master tenant at a creative office campus with indoor, outdoor. Now it's in Southern California, so One West Side for us, as you can see there, is a really unique opportunity for mall conversions. Now that can't be done everywhere. It's got to be location driven. It's got to be amenitized driven. You got to have access for employees. And so a lot of that is unique. The creativeness about mall space or retail space in general, unless it's amenitized space, is going to have to be revisited. And I think everybody realizes that revisiting of that will be a positive attribute.
Victor, you guys also declared a quarter dividend, 25 cents a share here. Anytime we think about companies getting more comfortable with that, maybe share buybacks as well, seems to me that it would be a sign of confidence here, and especially in a sector that really was the shakiest earlier on when we were first dealing with the pandemic. Talk to me about that and maybe what it signals about your confidence moving forward.
Well, listen, we've had 97% of our tenants have paid rent. We've not missed a dividend. That dividend payment that we declared most recently has been consistent with the past quarter's dividends. And you're absolutely right. I mean, we've seen a big negative turn initially because this was something that hit us all fairly square on in terms of the demise of office. And so I think people whiplash quickly to say they're going to be home, they're going to be home forever. The reality is they're not going to be home forever. We've seen it in, as I said, our collections, our tenants in preparation. I think the expansion in certain marketplaces for more space for less employees and flexibility. That's the key. We're all getting educated on how we flex work and how we are productive in flexing work. But I can tell you from our tenant mix and the confidence around the momentum about vaccinations and people getting back to some sense of normality, we've seen a pickup in leasing activity and people's interest in taking space now, which we never saw 6 months ago.
All right, Hudson Pacific Properties CEO Victor Coleman, appreciate you coming on here to chat with us. Sounds like your phone's blowing up. We'll let you go tackle all those issues. Thanks again for coming on. We're going to take a quick break here on Yahoo Finance Live, but when we return, continuing our one-year look back on the beginning of this pandemic and where we're at now, our editor-in-chief, Andy Serwer, will speak with Dr. Francis Collins, director of the National Institutes of Health. Right after this, stay with us.
Back to Yahoo Finance Live. I'm Andy Serwer, and I'm joined by Dr. Francis Collins, Director of the National Institutes of Health. Dr. Collins, great to see you.
Great to see you, Andy. Glad to have a conversation on this significant one-year anniversary.
Yeah, let's just jump right in because it has become a one-year anniversary day in the sense that this is the day a year ago where America basically came to realize we had a pandemic and began to shut down. How would you assess where we are right now, Dr. Collins?
Well, it's been a brutal year. Let's be honest about that. 525,000 people lost their lives. I never would have guessed a year ago that it was going to be that bad. And certainly great harms done to many people's economies, as well as the grief and sorrow of lost lives. We are here now in March of 2021 on what I would say is a positive trajectory with a lot of encouraging signs. Now we're going to approach 100 million people getting injected by the end of this week with a highly safe and effective vaccine. I wouldn't have guessed that would be the case either a year ago. So science has rocketed forward even as we have suffered greatly as a nation.
We spoke 13 months ago, Doctor, and it was February 8th. There were less than a dozen cases in the United States at that point, if you can imagine. And you said, and I want to accentuate this one part of this phrase, at the present time, there is no reason for considerable anxiety in America. At the present time. So do you remember your thinking changing?
I do. And it began to change shortly after that with the realization that this was a virus that was capable of infecting people who had no symptoms, and some of whom would never get symptoms, others of whom might develop symptoms 2 or 3 days later. But this was the worst case you could imagine for a virus that you would try to control with public health measures, because you couldn't really know who was spreading it, who was the next super spreader, without even being aware that they had it. We hadn't expected that. That's not the way SARS behaved. That's not the way MERS behaved, but it's the way SARS-CoV-2 behaved. And that put us in a much more difficult place in terms of trying to end this pandemic. And frankly, one of our best weapons at that point was the realization we really should be encouraging everybody to get out there and wear masks when you're outside. But we didn't do so well in convincing a lot of people to do so. Let's just say this has been a terribly difficult 12 months of trying to identify the right scientific strategies and then convincing people to take advantage of them.
What have you learned over the past year, Dr. Collins?
Well, I've learned a lot about how we can, in the face of a pandemic, do things scientifically in ways that we have never really done before, just in terms of getting rid of all the downtime, speeding up the process, building partnerships with industry that we've never really quite taken to this level, coming up with ways that NIH could effectively sort of serve as a venture capital organization for nurturing new technologies, as for instance in diagnostic testing. We'll never be the same. I think we learned a lot. We made a lot of progress. The vaccine effort coming forward at a timetable that most of us really didn't think was going to be possible, because we had all hands on deck. The idea of doing this at-risk manufacturing of vaccines even before you knew if they were going to work, that hadn't been done. So many things. There's many books that are going to be written about this, and we will, going forward, be in a place that's different than we would have had the chance to do if it had not been for this pandemic.
I want to look forward, but one more backward-looking question maybe, and that is, what could we have done better?
We certainly could have done better in terms of our abilities to convey the public health messages in a way that people would have understood the basis for them, and that they would not have gotten all tied up in political considerations. The idea that something as simple as a mask, this thing, would become a political statement or something that had to do with your personal freedom, as opposed to what it really is, which is a life-saving medical device. We could have done a lot better there. And because we missed the opportunity really to get those messages across, I think a lot of cases happened. A lot of people died. So yeah, that is a diagnosis of sorts for our communication capabilities, and for, frankly, the polarization of our country, that even in a place like this, with something as desperately important as trying to save lives, a lot of other overlays got in the way. of getting the facts in front of people. And the difference between truth and opinion got blurred.
I want to ask you about vaccines. You mentioned them, of course, but when do you think we'll all get vaccines, or really enough Americans? Because not every American is maybe going to need a vaccine even. What is your take on that?
We're moving forward now with great rapidity. More than 2 million injections a day happening now, and we will probably hit 3 million before the end of March. And as the president has laid out now with the additional purchases that have been possible, there should be enough doses for every American who wants one to get immunized by the end of June. And that doesn't even count a couple of the vaccines that are currently in the process of finishing their trials. So AstraZeneca in the US hasn't yet come forward with their trial results, and Novavax is not too far behind that. But even now, with Pfizer, Moderna, and Johnson & Johnson, we have an amazing inventory of vaccines that are safe and effective that will make it possible for people who are interested to get immunized by June.
And when I said not everyone maybe needs to be vaccinated, I want to ask you about that. What I meant is small children. Do they need to be vaccinated, number one? And number two, how do we combat vaccine fear?
Well, children are not yet being offered the vaccine because the trials are still underway. We want to be sure that the vaccine is safe and effective in individuals under the age of 16 or 18. Those trials are going on right now for kids down to age 12. We won't really know the results of those, though, for a few more months. And for kids under 12, it'll be the fall before those trial results happen. We think that's okay. Schools, for instance, should be able to function with the teachers vaccinated, even if the kids are not. So this will be going forward, but it shouldn't be rate limiting and getting a lot of our society back to where it should be. But the vaccine hesitancy issue that you raise is a really serious one. And even the more recent polls would suggest that this is reducing somewhat. We may still have 25, 30% of Americans who say, I'm not sure I want to do this. And if that happens and we fail to reach this herd immunity, which is going to take 70 to 85% of Americans immune, then this could go on a lot longer, could give a lot more opportunity for those nasty variants to emerge that we're getting worried about.
We're going to take a quick break. When we come back, more from Dr. Francis Collins, Director of the National Institutes of Health. Stay tuned. Welcome back to Yahoo Finance Live. We're here again with Dr. Francis Collins, Director of the National Institutes of Health. Dr. Collins, I'm assuming you got vaccinated. When was that?
I got my first dose of Moderna on December 23rd, and the second dose exactly 4 weeks later, as is supposed to be the case with that vaccine. So I'm well outside that interval, and I should be 95% effectively protected against infection. And it was also a safe vaccine that NIH had a lot to do with. So this was a very happy moment. I got a little emotional.
Yeah, I've heard other people have as well, and I look forward to getting my vaccine next month, I think. When will we be back to normal, Dr. Collins?
Well, define normal, Andy, because I don't think we'll ever go back to quite the way we were before this, just in some fairly trivial ways, for instance. So, for instance, as NIH director, I used to spend an awful lot of time taking very long trips to meetings where I might speak for 45 minutes and then get back on a plane to go home again. You know, you can do this kind of thing pretty effectively using Zoom and other measures. So I think we will adjust our lives accordingly, and there'll be a lot more people interested in telework than before because we figured out how that can work. But you're really asking, when can we do the things we want to do? When can I go to a ball game? When can I have my daughters and my grandkids be around me and be able to hug them again, which I have really missed doing for the last year? I think we're going to get there by the summer within a lot of circumstances. Is it middle summer? Is it late summer? I don't quite know. I'm already thinking, because my daughters are both healthcare providers, so they're getting immunized. My wife will get her second dose soon. I should be able to gather with my daughters in the same place, take our masks off, and have dinner together and hug each other. And that is something I'm really looking forward to. So it's going to happen gradually. It's not like flipping a light switch. It's going to be bit by bit. CDC is going to keep putting forward ideas about how we can do this safely. Please pay attention to those. This is not a time to stumble as we're approaching the finish line.
You mentioned an airplane. Would you get on an airplane right now or stay at a hotel?
I think airplanes are actually remarkably safe. The data would suggest there's almost no disease transmission that's happening on planes. Everybody required to wear masks. They're keeping people seated far apart. If I needed to go somewhere on an airplane right now that was essential, I would figure out a way to do it. It hasn't happened yet in the last 12 months, but I think we're getting closer to that all the time.
You've worked for so many presidents. I've actually lost track. I'm assuming tell us how many presidents you worked for, and most importantly, what is the difference between working for President Trump and working for President Biden?
Well, I came to NIH in 1993 to lead the Human Genome Project. So if you count that, that would include Clinton and George W. Bush. But then I was hired as the NIH director by Barack Obama. Figured I'd be done with that after 8 years, was asked to stay on by Trump, and now here again, asked to stay on by Biden. So I'm in my third month for my third president for being the director of the National Institutes of Health. And yeah, it's different. People are very different. We now have a White House that's very tuned into science, very much asking for scientific input on everything, getting quickly up to speed. Man, am I doing a lot of briefings. And that's good. I'm glad to share that information. The previous White House, not so much in that same space, more inclined to be guided by other kinds of information than by the scientific details that we were always happy to provide, but didn't get asked that often.
I can see why you've lasted through different administrations. You're somewhat diplomatic.
I'm still here.
I want to talk to your famous report. That being Dr. Tony Fauci. He works for you, of course, and he's been a rock star for decades for people who know the medical field. But now millions of people have gotten to know him and his work this past year. How would you assess the job that Tony Fauci did?
He is absolutely fabulous. He would be considered by almost everybody the most significant expert in infectious disease in the world. And he's been doing the job that he's doing right now for 37 years, leading the infectious disease component of NIH, working through all of those traumas of HIV, AIDS, ultimately through other things like influenza, Ebola, Zika, and now SARS-CoV-2. And he is incapable of doing anything other than being an absolutely dedicated public servant who's going to tell you the truth, whether you like to hear it or not. And that's not always one him friends, but it's what we need in this time where public health information is critical. And Tony is the guy to do it. And I'm incredibly fortunate to be able to have him as one of my army of experts, the most notable to be exact. He and I interact with each other multiple times a day about all the things we're trying to do together.
Want to shift back to the pandemic and ask you about variants. Could those significantly prolong the U.S. Outbreak?
If there's a cloud on what otherwise looks like a pretty good horizon, it's these variants, the ones from the UK, from South Africa, from Brazil, which do have a different shape of their spike protein on the surface of the virus that could make it the case that the original approach to this might not be quite as effective. And particularly, we're worried if any of these would make our current vaccines no longer protective. Right now, we're okay, even though these are of some concern. It looks as if the Pfizer, Moderna, and Johnson & Johnson vaccines would work against the ones I've just mentioned. But we're watching closely to be sure there's not something coming along that's even more of a threat to that. If we have to, we can redesign the vaccines and rather quickly get them out there as a booster, but I hope we don't have to do that.
Yeah, that probably leads us to this next question, a last question to ask you, Doctor, which is the U.S. prepared for the next pandemic?
We've learned a lot from this one, and we must not go back into complacency when this gets over with, because we've done that a few times in the past, sort of activated our pandemic preparedness and then let it slip a bit. This time, after this worst pandemic in 103 years, I am very hopeful we won't make that mistake. We've got a lot of technologies like this messenger RNA approach to make vaccines that we now know will work and can be done very quickly. That's going to help us. We've learned also how to do drug development and to get things into clinical trials for treatment faster than ever. And we have new technology approaches to be able to diagnose quickly who's infected and who isn't. So I think we're much better prepared, but I sure don't want to be smug about that. We need to have all of our attention on whatever is lurking out there next, because there probably will be something.
Indeed. Dr. Francis Collins, Director of the National Institutes of Health, thank you so much for joining us.
Glad to be with you, Andy. Anytime.
Stay tuned. More Yahoo Finance Live coming up next.
In our worldview today, Japan paused for a moment of silence overnight as the country marked 10 years since an earthquake and tsunami triggered the Fukushima nuclear crisis. The 9.0 magnitude tremor, massive waves killed nearly 20,000 people and wiped out towns along Japan's northeast coast. The reactor meltdowns at Fukushima led to the worst nuclear disaster since Chernobyl. The Japanese government has spent roughly $300 billion on rebuilding the region, but towns around the nuclear plant remain off limits. 40,000 people still haven't been allowed to return home. The Chinese government is tightening its grip on Hong Kong. China's parliament unanimously approved a draft decision to reduce democratic representation among Hong Kong lawmakers. It also introduced a mechanism to screen politicians based on their loyalty to Beijing. The change all but eliminates the influence of opposition lawmakers and goes directly against that one country, two systems principle China has had in place since the handover nearly 25 years ago. Beijing has moved quickly to overhaul Hong Kong's political system since pro-democracy protests erupted back in 2019. And a big milestone for cannabis in Mexico. Lawmakers approved a bill Wednesday to legalize the recreational use of marijuana in what could become the world's largest cannabis market. The vote in Mexico's lower house came 2 years after the Supreme Court ruled a ban on recreational marijuana was unconstitutional. The bill allows adults to smoke marijuana, grow a small number of cannabis plants with a permit. Producers can also apply for licenses to cultivate and sell. President Andrés Manuel López Obrador has already expressed his support for the measure. He is expected to sign it if it passes the Senate.
Well, let's check in on stocks across the pond after the ECB said it would increase its bond buying program. I want to check in on the latest over there with Yahoo Finance's Oscar Williams-Groot joining us now. Oscar?
Well, Zach, the ECB is actually increasing the speed of its bond buying rather than the actual size of the package. The European Central Bank today delivered the latest monetary policy statement, and they kept interest rates unchanged and the size of all their tools of unconventional monetary policy measures the same. But what did change is that they said that the pandemic emergency purchase program, a bond buying activity, will accelerate in speed. The governing council said that they would make PEP purchases at a significantly higher pace than during the first months of this year. Now, this is in response to the sell-off we've seen in government bonds since just the last couple of weeks, really. Christine Lagarde, the president of the ECB, insisted this was about maintaining favorable financing conditions rather than targeting specific yields. She said, we are not doing yield curve control. It's all about trying to keep credit free and easy for the Eurozone while they enter, hopefully, a recovery phase from the pandemic. Now, the biggest beneficiary from this announcement was Italy. Italy has seen its bonds sell off quite a bit over the last few weeks, and the spread between Italian government bonds and German bonds has widened in recent weeks. The FTSE MIB in Milan rose 1% today on the back of this news. Elsewhere across the continent, things were quieter, but still in a bullish mood. The DAX closed up just 0.2% in Frankfurt, but still that took it to a new record high. Meanwhile, the CAC 40 in Paris was up just shy of 0.5%, but again, that was at a one-year high. The notable underperformer was the FTSE 100 here in London. It closed more or less flat on the day and is nowhere near record territory. So really a long way to go to catch up with some of its peers. I should also mention that the ECB also upgraded its inflation forecast today. It says it now expects inflation to be 1.5% this year, up from an estimate of 1%. However, they said that medium term, the outlook is unchanged, and that it's actually temporary factors that are just driving the upgrade.
All right, Oscar Williams-Groot bringing us the latest there across the pond, hitting everything. Appreciate that. We're going to take a quick break here on Yahoo Finance Live, but when we return, digging into the largest IPO here so far this year, as well as a big pop for Boeing shares. We'll highlight both those after the break. Stay with us. Welcome back to Yahoo Finance Live. A couple movers to highlight in today's session, including Boeing seeing a nice pop, as well as the largest IPO to hit the market so far here in 2021. For both of those things, I want to turn it back over to Yahoo Finance's Ines Ferre, who has the latest. Ines?
And Zach, Boeing right now hitting a 52-week high, up about 3.5%. You can see on our Wi-Fi interactive board the move up. Over the last month, it's up 20%, taking advantage of the industrial move up that we've seen over the last few weeks or so. Boeing, it may be reportedly close to a deal with Southwest for a huge 737 MAX order. Part of the reason why you're also seeing it in green territory. Just taking a look at the sector action, we're looking at all 11 sectors of the S&P 500, which are in green territory. Technology that's leading the gains. You've got the big cap names, all the FANG names that are in green territory. And we're also monitoring Coupang. That's the South Korean e-commerce giant that is going public on the New York Stock Exchange today. The largest IPO so far this year. The company priced its IPO at $35 a share. It's indicated to open anywhere between $64 and $66 a share. This would give the company a market cap of about $108 billion, or a little more than that, similar to Uber's market cap. It's been compared to the Amazon of South Korea. It's been compared to Alibaba. They have same-day delivery, next-day delivery, also offerings like Coupang Eats, Coupang Play, which is a streaming service. And some of the company's executives actually worked at Amazon, so they definitely know the culture and the business. Zach, Hiko?
Yeah, and as you mentioned, same-day delivery, next-day delivery, they also have dawn delivery, which is an overnight order that comes to your door on the next day. So there you go. Coupang, they're certainly looking to a big debut here in the US. We've got much more coming up here on Yahoo Finance Live after this short break. We'll be right back. Welcome to Yahoo Finance Live. I'm Akiko Fujita along with Zach Guzman. It is noon Eastern here in New York City, and we are seeing the Dow hit another record in the session. Right now, up more than 300 points. The Nasdaq getting a big lift from a rebound in tech stocks. That rotation coming back into tech names, and the Nasdaq up about 315 points right now, while the S&P 500 is up about 50. Bond yields also pulling back just a bit, so that seems to have eased some of the jitters we've seen in the market. The 10-year Treasury there yielding about 1.53%. President Biden prepares to address the nation as the country marks 1 year since the pandemic began. The president looking to make the case for his economic relief package after the House passed the $1.9 trillion bill. The president expected to sign it as soon as tomorrow. And the state of the NBA 1 year after the league moved to halt all of the games. We will hear from NBA Commissioner Adam Silver a little later in this show. Let's begin with some of the economic data we got out today, though. Initial jobless claims rising less than expected. You see the number there, 712,000 Americans applying for unemployment benefits for the first time last week. Certainly seems to point to the economy moving in the right direction. Let's bring in Jeff Schulze. He is ClearBridge Investments investment strategist. Jeff, I'd love to just get your reaction to where things stand right now, because we are looking to hear from the president today, certainly trying to get the public on board with what is really a massive stimulus bill here. But we've also got some data recently that seems to suggest that even without the stimulus in place, things are moving in the right direction.
Yeah, thank you for having me on the program. And the data is very much moving in the right direction. I don't think that we needed the December stimulus package. I don't think that the economy needs the new $1.9 trillion package that's going to be signed into law this week. But nonetheless, we're going to get it. And it's going to create a situation where it's going to add fuel to the economic fire here for 2021. My base expectation for real GDP growth is 7%, which would be the strongest year of economic activity that you've seen in the US since 1984. And one of the key considerations that I was really monitoring in the first quarter is whether or not the COVID cases would continue to rise, and that would hinder economic activity. But looking at retail sales that we got from last month, coming in at positive 5.3%, which blew out consensus expectations, tells me that you're seeing an accelerating economy, and it becomes a much better reality of us hitting that 7% real GDP target. But nonetheless, we're getting stimulus, and it's going to continue to help the U.S. economy grow way above trend levels.
Yeah, Jeff, I mean, we've been taking a look back at kind of how this all played out. And when we look at unemployment, we often look at it at a state-by-state kind of level here. We talk a lot about a K-shaped recovery, but right now, I mean, it's kind of shocking when you look at those rates over the last few months here in the way that states have been hit and came back. Hawaii being one of those standouts. It led the country with the worst unemployment rate and has seen a pretty rapid recovery based on the way that they tested and locked out travelers to the island without having been vaccinated or tested beforehand. I mean, what do you make of maybe the way that the nation as a whole, state by state, might be recovering at different levels here this point a year into this, and maybe how that stimulus might fix things moving forward?
Well, if you look across the entire U.S., you've seen cases come down dramatically across every part of the U.S. And I think that really is going to continue to be the case. And I think you're going to see a disproportionate reacceleration of economic activity on those states that have more service-oriented jobs. My expectation for job creation this year is at 8 million, which would be close to 700,000 jobs created per month. And the key reason why I think that that's the case is about 80% of the jobs that were lost during this recession were COVID-sensitive industries. And when you reach herd immunity sometime in the May or early June period, you're going to see a drastic reacceleration of that part of the economy. And I think you're going to see much faster job creation than what you've traditionally seen coming out of a recession. So I think the stimulus is certainly going to help. It may hinder job creation because the unemployment benefits are quite generous until September. But nonetheless, I do think that you're going to see us grow much quicker than anticipated, certainly a lot quicker than what you saw coming out of the global financial crisis.
And Jeff, you mentioned earlier, you don't think that this $1.9 trillion bill was a necessity when you consider where the economy is today. What's going to be the impact from it then? Are you in the camp that you think that this is really going to take inflation even higher?
Yeah, in the near term, I think you're going to see an inflation scare over the next 3 to 5 months. That's a combination of two things. You're going to have really easy year-over-year comps in March and April as the economy locked down. So you're going to just see inflation naturally grind higher near term, but you are seeing some inflationary pressures across the economy. First off, if you look at inventory to sales in the retail sector, right now, they're at the lowest levels on history. So you're certainly going to see some goods inflation near term, but also with the services sector, most of these areas cut costs to the bone in order to survive in this type of environment. And when you reach herd immunity, you're going to have massive re-engagement with services, but you don't just have the capacity that you had 12 months ago. So I think you're going to see a near-term burst of inflation. But given the amount of slack that you see in the US economy, I do think that this is transitory. But again, with this near-term burst of inflation, I think that's going to be a catalyst for probably some higher 10-year Treasury yields and a continued rotation into value in some of your more epicenter stocks that you've seen over the last 5 months.
Jeff, it's good to get your insight today. Jeff Schulze, investment strategist at ClearBridge Investments. Well, the leisure and hospitality sector has been among the hardest hit during this pandemic, with 4 million jobs lost over the last year. The number of jobs in this sector aren't expected to return to pre-pandemic levels until 2023, at least according to the American Hospitality and Leisure Association. Let's bring in Jay Stein. He is the CEO of Dream Hotel Group. Jay, give me a sense of where things stand for you 1 year on. What does capacity look like?
Yeah, it's still rough. Some markets have improved dramatically. As I'm sure everyone's heard, that Florida is doing very well. So we have hotels in Miami, and they're doing nicely. LA is starting to bounce back a little bit now, but most of the markets are still fairly soft, unless it's a real drive-to market for a leisure destination. The main cities, we have a lot of hotels in New York City. They're still most of them are still closed, actually, for a couple of different reasons. But the biggest one being lack of demand. There's still almost no demand coming into the large urban areas.
And Jay, other business leaders in your sector have kind of criticized the idea that, if you are one of the hardest hit sectors, more should be done to kind of make your workers whole. And there have been a lot of things done, but how do you look at it and assess the relative relief that the hospitality sector here in the U.S. has gotten relative to some others to kind of weather all this and protect their workers?
It's complicated. It's hard to understand it unless you're really living it. Many of our employees, and certainly the lower level line employees, are doing okay because of either PPP loan and they've been able to work in the hotels and we've been able to keep them on, or they're on unemployment and the unemployment is equal to and sometimes even more than what they were earning. So I don't think they're getting as impacted. Of course, they want to be working and we want them back. But from the ownership side, for groups like us that own hotels, or for some of our owners that own the brands that we own and manage, especially the smaller ownership groups, and they're big assets. The assets are worth $100 to $200 million in many cases, but those are the ones that are really getting hurt because the revenues have dropped either 100% for the ones that are closed, or as much as many of them 80, 90%. They're struggling mightily. And they're not getting the kind of aid. The real estate taxes haven't dropped really at all, particularly in New York City. So we're getting crushed on the real estate taxes that are due, millions and millions of dollars with zero revenue coming in. And when you think of hotel business, you think of Marriott and you think of Hilton and IHG and Accor and Hyatt. And that's what people think the industry is. But those companies don't generally own hotels. They're just management companies. And they've laid off a lot of corporate employees to meet the needs of the hotels that are open. And so they're not getting crushed, so to speak. They've reduced staffing, but our industry, or at least where Arizona is, we are really taking it a very hard hit. And it's hard for the government or for people to understand that we're the ones that really need a lot of help and are just not getting it.
So Jay, what is Dream Hotel doing right now to at least build confidence or a little more comfort for those who are potentially looking to start traveling again? Are you thinking about having testing on site? Are you thinking about contactless services? What's that experience going to look like?
Yeah, sorry about phone ringing in the background. I was working from home stuff. It's crazy. Yeah, I think the only thing that gets us there is herd immunity, is vaccine. So, we've done a great job in the industry of making hotels safe and a better cleaning. But that's really not the issue. To get people on planes, to get people traveling, to get corporate back into the marketplace is going to require, some level of herd immunity where people are comfortable. So I don't think it's really a technology thing. I don't think it's a cleaning thing per se. The hotels that are open, people have felt comfortable. We've done a stringent job. We've implemented a lot of techniques to make things safer. But even with all that, the levels are still very low. So until we get the vaccine, and they're coming. I mean, I'm very optimistic in the next 3 or 4 months, it's going to be dramatically different. And we'll start seeing the hotels in New York start to open, and the hotels that have been open in the other markets, they'll start hitting 40% and 60% and 70% occupancies and really start. And I think it'll come back quick once we're at that herd immunity. I think the ability for our industry to thrive will come back quite quickly. The pent-up demand for travel, for leisure is dramatic, and even for corporate.
Yeah, and Jay, I mean, when we talk about kind of that lumpy demand, whether it's corporate or kind of just people looking to get a vacation in after being cooped up for so long, I mean, Dream as a brand is a little bit different than some of those other ones you've been talking about there, because you have leaned a little bit more into kind of that residentialness. But there is, of course, Airbnb now in this, and I wonder how much overhang you project from people getting comfortable with Airbnbs that maybe never even thought about them before and have now maybe stuck with that kind of model. I mean, are there risks that you see ahead that, since people had been staying in Airbnbs before this, that it might weather and dampen the recovery for hotels?
I don't. I think the impact from Airbnb that we had before before COVID will still be there after COVID. It's a great concept and people like using it, but it's not a hotel. They're not any safer. In fact, they're probably less safer. They don't have the cleanliness levels that we have. And many big city situations now are forcing Airbnb to act like responsible corporate type businesses, where they have to have insurance, they have to pay the taxes, and they're just not that attractive a discount anymore to travelers. So I don't see that changing.
All right, Jay Stein, Dream Hotel Group CEO. Appreciate you coming on here to chat with us today. Be well. I want to turn our attention back over to a stock that we are watching move in today's session. That would be dating company as well as social connectivity company Bumble. Shares catching a pop, up more than 10% after the company reported its first quarterly report since going public last month. The company notching $165.6 million in revenue, a net loss of 1 cent a share. Bumble also updating investors that it had 2.7 million paying users in the fourth quarter. That was up just over 35% from Q4 in 2019. The stock, of course, opened at $76 a share, trading at $70.18 now. We're going to take a quick break here, but when we return, continuing our coverage of a look back on the year that was since the WHO declared the coronavirus crisis a pandemic. We'll chat with Ford about their efforts to help boost production for much needed PPE throughout all of this. Stay with us. We're back in 2. Well, we are continuing our look back on the year since the World Health Organization declared the coronavirus crisis a pandemic. And in that very same week, back in March 2020, when it all began, America's largest manufacturing companies were rather quick to jump in and play their part, including Ford, jumping in that same week to prototype how they could make PPE, as that was much needed early on in the pandemic and basically every day since. And for more on that, I want to welcome Jim Bombyk, Ford's Vice President of Enterprise Product Line Management, joins us now. And Jim, I mean, for you personally, just looking back to all that, it's not easy, I assume, to kind of just shift complete manufacturing lines from cars over to masks. But as you reflect on it, I mean, what do you make of how far we've come in the year and your guys' efforts there at Ford to play, as I said, your part?
Yeah, so I mean, it really was an incredibly fast shift. What was really inspiring to me is the way that all of our employees, our UAW partners, our supplier partners, all just kind of raised their hand. I mean, everybody wanted to see what they could do to help. And what started for us is a conversation around what Ford's legacy has been. You know, we've been around for 117 years. And I remember it was March 17th. So we're coming up on our 1 year from really when we kicked this off. And there was this like a groundswell discussion around we've built bombers, we've built iron lungs, and there has to be something we can do. And that was really the catalyst for us to kind of reach out, identify where we could have the biggest impact. And from there on out, we've been kind of pedals down, doing everything and anything we can to help those first responders as well as patients alike.
Jim, there's been so much focus on vaccine distribution over the last few months, but I wonder where demand stands right now with PPE. What are you seeing in terms of this initiative for Ford? You know, how long do you go with it?
Yeah, so we're willing to kind of go as long as is necessary. We want to make sure the job gets done, and PPE has been a constant need since March of last year. We're actively very much involved in distributing PPE. So we've distributed 117 million level 3 surgical masks through our Ford dealers and the Ford Fund to get those out into communities that may not have access to PPE. And the important part of that is that we know if we wear masks and we leverage safe COVID protocols, we could save lives. But at the same time, all the way back to March, when we were thinking about how do we get back our employees into the work environment, we quickly identified that wearing a cloth mask can take away somebody's senses in many respects. For those that need to lip read, maybe hard of hearing, it just becomes an incremental challenge. And so, from those early days, we were inspired to how would we actually help those employees. And in fact, we've been actively working. We have a patent pending on a Clearview respirator, which our goal is to get that to N95 certification and make that available as an incremental device to protect occupants in these types of environments until we are at a point where we're back to normal and we've got that herd immunity and this under control.
Yeah, and Jim, I mean, it's going to be a bit, well, we're just hearing from medical experts, the timelines there to get to herd immunity. And you guys have shifted kind of your manufacturing lines, I'm sure, to kind of make it safer through all this, whether or not it is social distancing or using those masks you're talking about. But now vaccines playing a pretty important piece of this too. So what does it look like for you guys that have kept up manufacturing, whether it's on cars or masks, through all this? What vaccines and kind of what you're hearing from employees wanting to be safe on the line looks like? How's Ford handling that?
Well, from the very early days, our employees are our most important asset, and so we need to make sure that they were safe when they went back to work. And we've had a very effective playbook, return to work, on all the safe protocols for COVID interaction in the workplace, and that's actually proved quite well for us over the course of the year. As vaccines start to become available, certainly we're going to make that available, working with partners to our employees as a choice for them to make, and certainly something we would encourage. But we're going to continue to use all of those playbook items, safe protocols, using the masks, and all of the monitoring and tracing as a mechanism to ensure we robustly get through this and again protect our employees in any way, shape, or form.
Jim Bombyk, Ford's Vice President of Enterprise Product Line Management. It's good to talk to you on this 1 year anniversary. Coming up, TikTok takes on online bullying and harassment. Dan Halley is going to walk us through the new features for this week's tech support. That's on the other side of the break. Welcome back to Yahoo Finance Live. TikTok is unveiling new features to tackle online bullying and harassment. Yahoo Finance's Dan Halley here with that story. Dan, I know you've been looking at some of these features. So many of these platforms have tried to really crack down. What's different about what TikTok is trying to do?
Yeah, TikTok is launching 2 new ways to deter trolls. And I got to say, like a long forgotten porta potty at a college tailgate, trolls are best avoided at all costs. And I think one of the ways that TikTok is trying to do that is by introducing features that allow you to filter out their comments on your own story. So to be able to do that, what you're going to want to do is go into your app and tap the Me tab at the bottom of your homepage. You'll see the settings menu. It's that little 3 horizontal dots at the top of the screen. Tap that, and then you're going to go into the privacy section of your settings menu and then over to comment filters. And then from there, you'll be able to tap filter all comments. And when you're in there, you'll be able to set it up so that whenever someone posts on your own TikTok account, you will be able to see what they do, and then you'll have the ability to filter them out. Now, unfortunately, you're still going to see what trolls or bullies have to say, but you don't have to have that appear on your story, and that's really what they want. One of the other things that TikTok is doing is adding a feature that alerts you if you're the one being the jerk and tells you that your comment may be offensive. So it's rolling this out. It will be automated. If you say something negative on someone's TikTok story or video, you'll immediately get a pop-up at the bottom of the screen telling you, hey, maybe rethink that. That's not the nicest thing to say. And their hope is that that will deter a good amount of trolls from posting on TikTok. But this is something that social media platforms, as you said, have been trying to do for some time. Instagram, Twitter, Facebook, all trying to cope with this. And this is really a good step forward for TikTok, considering that so many of its users are so young. So any way that they can kind of get trolls out of the way, it's a good step forward.
All right, Dan Howley bringing us the latest there. Appreciate that. We're going to take another quick break here on Yahoo Finance Live, but when we return, breaking down the recovery in sports, a conversation with NBA Commissioner Adam Silver, marking a year since the league announced it would be suspending its season March 11th last year, as well as a discussion with pro skater Tony Hawk and what his latest entrepreneurship endeavor is. He'll join us right after the break live. Stay with us. Welcome back to Yahoo Finance Live. We are again continuing our coverage here in the way that the world has changed in the 1 year since the World Health Organization declared the coronavirus crisis a pandemic. And one of the biggest impacts had been felt in the sports community, not just 1 year since the NBA suspended their season back in March of last year, but also the way that we've seen a lot of Americans turn to extreme outdoor sports, including skateboarding, if you want to call that extreme. And for more on that, I want to bring on our next guest here, a man that is directly related to Tony Hawk himself, who's also now very busy with a new series co-hosted here by GoDaddy, talking about entrepreneurship. And Tony, I mean, there's a lot to get in here with you because, you know, we can talk about the way that you've kind of navigated the changing entrepreneurship around Birdhouse, your skateboarding brand. But I guess we'll just start with kind of how sports, specifically skateboarding, has been impacted by the pandemic and what you've seen through your brand and your expertise in that area. How crazy has the last year been?
It has been a big surprise in terms of interest and sales in skateboarding. I understand it because people were stuck in one place and they were looking for new outlets. And I feel like there's a population of people that have always been somewhat curious or interested in skateboarding, but never had the incentive, and them being stuck in one place was their incentive. And it's something you can do on your own. You don't need a team. You can go to the skate park, and there is a community there, but at the same time, it's an individual pursuit. And so I get it, but it was very surprising that it took a pandemic to sort of get skateboarding over the tipping point.
Tony, let's talk about this GoDaddy series that you've launched. In many ways, extreme sports, particularly skaters, have been quite entrepreneurial over the years, whether it's on the content side or the branding side. What prompted you to try and wrap this up into a series?
Well, I felt like there are a lot of entrepreneurs in our field of action sports, and it's such a DIY attitude of what we do anyway. So to actually follow these athletes and businessmen trying to make a career out of their passion, excuse me, I identified with that very closely, and I thought it'd be fun to share their stories and also to lend my expertise and my experience along the way.
Yeah, people might not know a lot about that kind of expertise and all the stuff that you've learned over your years in the business community through Birdhouse and your other endeavors. Talk to me about that, because I actually didn't even know that skateboarding kind of as a concept and the excitement around it kind of, I guess, tailed off in the early 90s before resurging later in the 90s. Talk to me about that and what you've learned over your career in business.
Well, yeah, I think skateboarding had a small boom in the 80s. I mean, for people who were in it, we thought it was the biggest thing in the world because we were making a living doing something we never imagined having a career as. But the interest waned, the skate parks were closing. And then somewhere in the 90s, skating came back into the limelight because of X Games, because street skating had emerged. And then our video game series blew up in the late 90s. And I feel like that's when skateboarding set a foundation that was here to stay. But I would say over the last 20 years, it has some ebbs and flows in popularity. And now we see it front and center. We see it in so much of pop culture, in marketing, and now in the Olympics. And so I sense that skateboarding will be something that kids choose to do as readily as they choose any team mainstream sports.
Yeah, I know Akiko has a question on the Olympics that she'll want to sneak in here, but before I let her do that, you mentioned the video game, and Tony Hawk Pro Skater is forever, I think, one of the greatest video games and will forever be in my mind as one of the first that I really enjoyed. Now sold more than $1.4 billion in terms of games from that release back in '99. But I guess if I can ask you one more business question tied to all that and the success you've seen, we always like asking people who have had a career in that kind of their biggest maybe lesson or takeaway. I know you talk about a lot of it in the GoDaddy series, but maybe your biggest mistake that you'd go back and change in your career?
I think the biggest mistake I made, well, just in terms of financially or trying to start a business, was getting into something that was way beyond my expertise. We tried to start a high-end denim brand in the early 2000s, and the designs were great. The artist that we got was really well respected, but it just was way beyond what we knew how to do, and ended up costing us quite a bit to try to fund it, to try to keep it going. And who knew back then that nobody wanted to spend $200 on jeans?
Tony, you've had to wait an extra year for the big debut of skateboarding as an Olympic sport. But I'm curious, as you look to Tokyo, what do you make of the prospects of the U.S. team, number one? And where does this elevate the sport? It's already such a global sport, but to be included in the Olympics, what specifically do you think that means?
I think it has a lot of potential for the growth of skateboarding internationally. I think that in the places where you see it, especially in obviously in Northern America, in South America, Australia, and in a lot of Europe, skateboarding has already set its place there. But now that we're going to have this international stage, I think that we're going to see it in more unlikely places, places like Africa and in China and Thailand and places like that. So that's exciting to me. I have a bit of a mixed feeling, obviously, about the Olympics, because I feel like we were never looking for their validation. And if anything, they need our cool factor for their summer games to bring in a younger viewership. So I have that sort of cavalier attitude, but at the same time, I see the benefits of it. And I'm excited that these places where people have been discouraged from skating will now be embraced for it.
Yeah, it's interesting you mentioned that because it does change the way that the Olympics can try to brand itself, to your point. Who do you think has the inside track here? If we're talking about who is a gold medal favorite, which countries are you looking at?
Oh, wow. I think the U.S. obviously has a very good team. We've got Nyjah Houston on the street side, who is a technical wizard, and other countries. I think. Oh, that's a good question. There are a couple of really good skaters from France and Australia. Shane O'Neill is one of them. Aurélien Giraud, and I don't know. It's going to be exciting. I think that the fun thing about it is when it's actually, you see it on TV, there are plenty of people that watch skateboarding and they think skateboarding is just people trying and failing stuff over and over. And when you see the level of competitors that they will have, you'll see that these tricks that seem impossible or only possible on video games, that they have consistently and they could do it in competition.
All right, Tony Hawk, once again, thanks again for coming back on. Everyone can catch him in that GoDaddy series. Go forth for more entrepreneurship tips, as well as, I just got to say, everyone out there, it's a phenomenal follow on Twitter, Tony Hawk. I've enjoyed the jokes you've been making out there, too. Thanks again.
Thank you very much.
Tony Hawk. We're going to shift over here. I mean, it's not just skateboarding that we've been watching here in the pandemic when it comes to sports. Of course, it also marks 1 year since the NBA suspended its season last year before shifting over to the bubble model. And sports writ large has actually lost quite a bit of money, according to a new report from Reuters, when you compare the major leagues, the NBA, the NFL, the NHL, MLB, losing out on about $12 billion across the season. And that's going to be a big impact, especially as we move forward to try and see how sports leagues are going to reopen and invite fans back. And for more on that, Yahoo was actually able to sit down with NBA Commissioner Adam Silver. For more on that, the man who chatted with him, Hunter Walker, Yahoo News White House correspondent, joins us now. And Hunter, I mean, that's going to be the big question, what sports leagues do about this as we enter kind of this new chapter with vaccines. So what did you learn in your discussion? And I think you might be muted. I'm not sure if you're still muted there.
Can you hear me?
There we go. Yep.
Yeah, so our conversation was very focused on the decision that Adam Silver made 1 year ago about on March 11th to shut down the NBA. And as you may recall, he was the first, that was the first major league to do so. And, you know, what struck me from the conversation was sort of how the NBA had a built-in early warning system because they had employees in China that experienced the initial lockdown in Wuhan. And also because he had a sort of chance encounter with this doctor who worked with the NBA initially around Magic Johnson's HIV diagnosis and ended up coming on as a volunteer earlier last year ahead of the pandemic to sort of help them establish protocols. And now, as you were saying, we're moving into this area where, you know, there are reasons for optimism. Vaccines are starting to get out there. We've seen the NBA and other sports leagues start to have crowds back in the stands. And, you know, that's what Adam Silver said to me. You know, he is more optimistic going forward and even can envision, you know, at some point full arenas, which seemed unthinkable for a moment there. So you'll see that in our conversation right now.
So on March 11th, we knew we were dealing with a potential situation that would require us to reduce the number of fans in buildings. A few national public health officials, most notably, my recollection is Dr. Fauci testified at a congressional hearing on March 11th that the NBA and other leagues should consider playing without fans, but not shutting down the entire league.
We would recommend that there not be large crowds. If that means not having any people in the audience when the NBA plays, so be it. But as a public health official, anything that has large crowds is something that would give a risk to spread.
Earlier in the day on March 11th, we had convened a meeting with our Players Association, led by Michelle Roberts, and we had done some sort of some planning and some theorizing about various scenarios. And that included at that point potentially taking a short hiatus because we realized that we might not have in place the appropriate protocols on cleanliness. And so to me, at that point, contact tracing was not a familiar term. Certainly social distancing wasn't. So my recollection, it was more about cleanliness and are the things that we can do in terms of proper cleaning procedures. But even on that call on the afternoon of March 11th, we still were not seriously planning for an entire shutdown of the league. We were at that point looking at the potential for a market by market reduction in number of fans. We were talking about what that could mean from a competitive standpoint, if some teams had full arenas and others didn't. So when on March 10th, I guess it was, Rudy Gobert from the Utah Jazz first had some symptoms that seemed flu-like, and he was yet another one of those players that we had tested. He was in Oklahoma City because that was the team they were playing on the evening of March 11th. And so under the auspices of the Oklahoma City health authorities, he was administered a COVID test. Everyone was aware that there was a game that night. Because he wasn't feeling well, he wasn't scheduled to play in that game, but he had contact with other teammates. And I received a call from our general counsel at the NBA, whose name is Rick Buchanan, and he said, we just got a test result from Rudy Gobert and he's COVID positive. And, so the immediate issue was, should we cancel the game? Now, he was not in the arena. He hadn't stepped into the arena. He'd only been around his teammates the day before. And we knew also that the game was scheduled to tip off roughly at 7 o'clock local time in Oklahoma City. So that was going to be in 15 minutes. I remember as I was talking to Rick Buchanan, I saw another call on my cell phone, and it was Clay Bennett, who's the principal owner of Oklahoma City Thunder. And he said, I've just heard that there's a positive case from the other team. What are we going to do here? So at that point, we, the NBA, I made a decision that we needed to call that game and then work with the team to announce to the assembled crowd, the 19,000 people or so, that they needed to exit the arena.
Now, they don't have the services of Rudy Gobert, East Coast swing in Detroit.
I think they just called the game off
on the second night of a back-to-back. And we're not really sure.
So now, still on the evening of March 11th, the question became, what about the other teams that are playing? We made a decision that at this point, it didn't make sense to stop in progress those games that were ongoing. And there's a shot that stands out in my head of Mark Cuban, who was sitting courtside one of the games, and clearly he gets a text message or some sort of alert on his phone that the season had been suspended. But we had one other game that evening that hadn't started yet, and that was out in Sacramento. And New Orleans was scheduled to play them that night. And so the question became now, what should we do with that game? Because the fans were now already in the building. We then learned that one of the officials who was scheduled to work that game that night in Sacramento had officiated at a Utah Jazz game earlier in the week. So that made that decision relatively straightforward. And we then canceled that game, and we announced we were now on, I think what we were calling at the time, a hiatus. I will say at that point, I couldn't have imagined that we were about to shut down NBA as we knew it for essentially, the next 9 months or so. I mean, it was, to me, at least in that moment, it seemed like we would be dealing with a relatively short-term issue. Still, there'd be new protocols put in place, and that we would restart the league in a few weeks. I'd say relatively shortly after that evening, all my attention turned to what's the new normal for us, or is there going to be a way for us to operate during a pandemic? And I think what I've come to understand is that this virus is firmly in charge, and that while doesn't mean there aren't things we can do to respond to it, and there are difficult decisions to be made in response to it, but that we all have to become comfortable with living with this huge degree of uncertainty. I think the biggest difference now from a year ago is that there is light at the end of the tunnel. I think when last March 11th, when we were shutting down, there was a sense of a dark cloud that was overhead, and that there was, no sense that things were going to improve anytime soon. And I think now, as we're seeing vaccines being distributed at increasingly rapid rates, something no one was predicting back then. I mean, timelines for vaccines were usually measured in years, not in months. And even to the extent that there were predictions about the timing of vaccines, no one was talking about 94, 95% effectiveness. And so as I look now a year later, I feel fairly optimistic. I mean, I have a sense that certainly by next season, while there may be some changes in protocols, I at least can imagine scenarios of full buildings. And I'm actually very excited about that. I'm proud of our organization. I think that when I now look at the year that's transpired, the sacrifices that players have made and all team personnel under very difficult circumstances to find ways to operate that, especially in retrospect, have been certainly on a relative basis very safe and healthy compared to virtually anything else that's been happening in our society. So for me, I'm proudest of how we found a way to reopen rather than the fact that we may have been the first to shut down.
NBA Commissioner Adam Silver, they're reflecting on March 11th, a year ago, when everything really halted in the NBA. Hunter, I know you spoke to him about a number of things, and we heard him say there that he expects next year there will be arenas that will be full. But in the meantime, how do you think he's going to be adjusting up some of these health and safety protocols as we look to the playoffs? Because we've already heard him say we're not going back to the bubble. And Hunter, you're still muted.
When this initially happened and they came up with the bubble plan, they didn't have that ready to go. I talked earlier about how they were sort of prepared. That was largely a testing and contact tracing infrastructure. So, as this pandemic has continued to change, they have kind of repeatedly been coming up with stuff on the fly. And I think as we see fans being allowed back in, they have some infrastructure for that, but it's certainly something that could be changed somewhat improvisationally going forward.
Okay, Hunter Walker bringing us that interview with NBA Commissioner Adam Silver. Thanks so much for that. Well, coming up, the largest IPO this year, South Korea's e-commerce leader making its debut in the U.S. We're going to be talking about Coupang after the break. Also, an update on that Christie's auction for artist Beeple's NFT. We'll tell you how much it actually sold for. A lot of activity in the last few minutes of that auction. Much more ahead here. We'll be right back. Welcome back to Yahoo Finance Live. We are getting an update out of Washington on that $1.9 trillion economic relief package. President Biden expected to sign that bill at 1:30 p.m. Eastern. Of course, we've been tracking the progress over in Congress. It passed the House yesterday, and President Biden is expected to sign it this afternoon. He will also be addressing the country later today, really trying to get the public on board with what is a massive stimulus bill here. So we will be watching that. Let's turn our attention back to the markets because we've got a big debut today. South Korean e-commerce player Coupang debuting on the New York Stock Exchange. We saw shares open at $63.50. It's come back just a bit, but it is up 60%. This is the largest IPO so far this year, the second largest foreign offering in the U.S. after Alibaba back in 2014. And Zach, this is an interesting company to watch. So many people have called it the Amazon of South Korea, but really it's kind of an Amazon combined with a DoorDash because of its delivery services. And when you look at the growth here, it has been quite incredible. Generated nearly $12 billion in annual revenue last year. That is nearly doubling the previous year. Its net loss did narrow to $475 million. And one of the reasons I think it's interesting to watch how South Korea is growing in this space, because it is one of the largest or fastest growing e-commerce markets behind China and the US, and it is expected to be the third largest this year. So certainly a lot of excitement in the market here, and worth noting that with this trading here, where it is right now, a valuation of about $108 billion, that is bigger than Uber, Zoom, and CVS, as well as 3M, or Jared Blickery with some of those notes there. A big debut.
Yeah, and I mean, I every time one of these companies, right, that doesn't necessarily have a big U.S. presence comes to market, I'm always interested to see how it's going to be priced, because we talk so much about kind of that behavioral aspect of interacting with brands and the way that U.S. investors might value them differently when it's just operating in South Korea. But to your point, the Amazon of South Korea is a pretty apt name considering how much money they are losing. I think that that's another one of those key things to point out. As you said, almost $475 million lost in 2020. I mean, that is an expectation that you're not going to want to have that operate at a loss for too long. And obviously investors have different time horizons for different companies, but this seems like one where you'd want to start to see, I don't know. I mean, if you think about how long Amazon was able to get away with it, maybe there is a longer runway here, Akiko. But I mean, how do you maybe compare this back to a U.S. company in the way that maybe investors will be looking at it moving forward?
Yeah, and it's also drawn those comparisons to Amazon, sort of the thinking around it, that it's not so much profit as it is just continuing to invest in this larger ecosystem that they have there. Let's talk about another story we have been following. Zach, I know you've been following it very closely. That Christie's auction for the digital artist known as Beeple, the first non-fungible token here in terms of an art auction. $69 million. That is an incredible price tag.
Yeah, and it's large enough to make Beeple, an artist that I think a lot of people here in the world had never heard of before this NFT thing really started taking off. That's large enough now for the third most expensive art piece ever sold among living artists. Number 3 behind Jeff Koons and David Hockney. So, I mean, it's record-making for a lot of reasons, not only the first NFT being sold by Christie's, which we talked about yesterday with them on the show, but also just that crazy price here. I mean, we're talking about digital art. It's a complete repricing of digital art across the board, not just necessarily for Beeple, but really signaling that NFTs have a, keep in mind, this started at $100, Akiko. That was the opening bid. So to go from 100 all the way up to 70 million, it just speaks to kind of the craziness we're seeing right now in this space. And I don't think Beeple's the last one to catch in on the rally.
Yeah, 200 bids roughly in the final hour. It went from 30 million to 60 million in the final few minutes. Just craziness here. But of course, we've got much more coming up here on Yahoo Finance Live. We will pick up our coverage on the other side of the break.
All right, stand by. 10.
That's very cool. Well, Stephanie, welcome to the team.
Hello, everyone, and welcome to the 1 p.m. hour of Yahoo Finance Live. I'm Alexis Christoforous, and here are your headlines. Stocks are higher across the board as investors jump back into those beaten down tech names. Here's a look at where things stand right now. We've got the Dow Jones Industrial Average up more than 300 points a day after closing above 32,000 for the first time ever. Get a load of the Nasdaq bouncing back, now up more than 300 points, propelled higher by those big cap names like Apple. We've also got Amazon much higher today, and the S&P 500 is now up 54 points. New filings for unemployment benefits last week near their lowest level since the pandemic-fueled surge in layoffs that we saw last March. Jobless claims fell to 712,000. That is down about 200,000 from the prior week, and it's more evidence of renewed growth in the labor market. And there appears to be no time like the present for President Biden to sign that $1.9 trillion stimulus bill into law. He was supposed to sign it tomorrow. Looks like he's pushing that up to today after the House Democrats passed that bill along party lines. Of course, it's going to include another round of stimulus checks, extended unemployment benefits, and billions more for vaccine distribution. We've got our Washington correspondent, Jessica Smith, following this story for us, and she joins us now. Jess, what's the latest?
Well, Alexis, President Biden is expected to sign the bill at 1:30 this afternoon, so in less than 30 minutes. As you mentioned, he was expected to sign this tomorrow. That was the original plan, but the White House says they received the bill faster than they anticipated, so they're going to go ahead and get it signed into law now. They say they will still have the celebration with congressional leaders at the White House tomorrow. President Biden is also going to give an address to the nation tonight in the 8 o'clock hour. He's going to look back at this past year and then look ahead to what comes next. And we are seeing lawmakers on the Hill look ahead to what comes next. Speaker Pelosi told reporters today that House Democrats are not giving up on raising the minimum wage to $15 an hour. Of course, they wanted to do that in this relief bill, but it just was not possible. Speaker Pelosi said today she's trying to show that while some may support a $10 an hour minimum wage, what they're trying to do is a gradual approach. So it won't be $15 right away, but still that's going to be a very tough sell for Republicans, especially when you have the 50-50 split in the Senate, and 8 Democrats voted against doing this during the relief negotiations earlier this month. Infrastructure is also going to be something that they are working on. Of course, the debate over that is going to be how to pay for it. Speaker Pelosi talked about that earlier today in her press conference. Let's watch.
There's no question. The most expensive maintenance of our infrastructure is no maintenance. It only just gets worse. And so we see this as a tremendous opportunity all across America, creating jobs.
Speaker Pelosi said she hopes that will be bipartisan, but we will have to see if Republicans get on board here. Another issue that the Senate is really looking at is competition with China. That could be one of the big issues that they tackle first now that stimulus is out of the way. We know that Majority Leader Schumer has directed his committee chairs to put together a bill on this that they can vote on sometime this spring. But again, Alexis, President Biden signing the relief bill at 1:30 this afternoon.
All right, much awaited, so we can get those stimulus checks out to the people who need them right now. Okay, I want to bring in Claudia Samrau, a former Fed economist and current senior fellow at the Jane Family Institute. Claudia, just how do you say your last name? I want to make sure I'm getting it correct.
Sam, thank you.
Okay, great. Well, thanks so much for joining us. We appreciate it. Glad to have you here today of all days, because I know it was a year ago today that you were on Capitol Hill briefing House Democrats on the need to go big on economic stimulus. Can you take us back to that meeting and what was said a year ago today?
Right. It's hard to imagine how far we have come since March 11th, 2020. It was a really important time. We were understanding that the pandemic was here, it was real, and the economy was going to go into free fall to keep us safe. And so Jason Furman and I had the opportunity to speak at the House Democrats breakfast, and we both firmly said, you have to go big and broad and fast. And within a few weeks, they did. It was absolutely amazing to see that response. This was the response we needed in 2009, and they delivered. And they have continued to, and we saw a historic relief package that is going to pass this afternoon or be signed into law. And this is so what we need.
What would you tell lawmakers if that meeting were taking place today after the package, this economic relief package, has been passed? What would you say today?
Stay the course. And this was something that I said March 11th of last year. You have to go big, but you cannot walk away. What we are seeing right now is what we needed to see in 2012 and 2013 when Congress said, you guys can go it alone. They even threw it in reverse. That was so painful. It took the recovery so long. And that's what this package is. It's saying we are going to keep fighting and we're going to give you money. Like, that's what people need to get back on track.
Has the outlook among Democrats overall fundamentally changed from March of last year to today, or their appetite for going big? I mean, or what's the big takeaway? Because I have to think $1.9 trillion, is certainly going big. So what changed within this past year for Democrats, other than the fact that now they have their own in the White House?
Right. The big change is going broad. So as soon as I finished speaking to the Democrats and was pushing for the stimulus checks and to go to everybody except the highest income, Speaker Pelosi stood up and addressed the whole group and said, I am not for the stimulus checks. She wanted, and I agree with this, we have got to get aid to those hardest hit. And yet, within a few weeks, and I am so amazed at her leadership, and it was so needed that the Democrats opened their mind, they changed their course, and they did it all. Right. So, and this really proved to be so smart. We had over half of US households lose income from jobs last year. That is unbearable for many families. And those checks have really helped. And we needed that, and we needed everything else they did. And there's no way to go broad without going big. And it's a risk, but it is absolutely a risk we need to take. And they are.
I know that you've pushed hard for things like the child tax credit. What's the Democratic plan to make that permanent going forward?
Right. I think what we've seen throughout this package is a real shift in thinking that cash transfers, no strings attached, no real income requirements except for the highest income. And with the child transfers, this is a sea change from telling parents you have got to work to get money to help your kids. I firmly believe in the culture of work in this country. I also believe that families need to be able to feed their kids. And so I think we're seeing policy that is empowering families to do what is best for them instead of policymakers and wonks like me trying to figure out what's best for them from afar.
All right. Well,
I think they should
yeah.
be permanent. So.
Right. I figured you would say that. All right. Claudia Sum, former Fed economist and current senior fellow at the Jane Family Institute. Thanks for being with us. And coming up here on Yahoo Finance Live, we're going to break down the latest job numbers for you and take a deep dive into the markets with Tim Holland of Orion Advisor Solutions. That's up next. Welcome back to Yahoo Finance Live. The markets are having a pretty good day. We've got stocks higher across the board, and investors seem to be jumping back into the tech sector. The Nasdaq is now up more than 2.5%. Been a real volatile ride for people with those big tech holdings. I want to bring in Tim Holland now. He's Chief Investment Officer at Orion Advisor Solutions. Good to see you, Tim. Welcome to the show. Would love to get your thoughts on the bounce back we've been seeing in tech. Do you think we're in a rebuilding mode, or are we going to test those lows again for the Nasdaq?
So we think that's near term the $64,000 question, sort of the growth to value rotation that's been pretty violent the last month or so. Is that permanent? Are we seeing a real regime shift, or is it sort of more temporary in nature, and is it going to revert back pretty quickly? And at Orion, particularly within Brinker Capital's destinations portfolios, that's the brand we go to market with. We take a long-term view of things. And our outlook right now is pretty neutral, growth versus value. We're not surprised to see value doing well near term, given all the stimulus. You were talking about that on the previous segment, what's about to hit the economy. So value's got a real tailwind. That said, once you get past that huge fiscal push, which is going to be huge, if you think back to sort of the economic conditions pre-pandemic, they were good, not great, 2.5% growth, low interest rates. That's the kind of environment growth really does well in, and has obviously done well in for a long time. So that's a question we're really working on as an investment team. We're taking more of a neutral view between growth and value, and not all that surprised to see a bit of a bounce back in growth the last couple of days, considering how violent that shift has been the last 4 weeks.
Now, in actually a few minutes from now, President Biden's expected to sign that $1.9 trillion relief package into law. Everybody seems to think, yep, it's going to help the recovery, but it's also going to mean higher inflation. Are you in that camp as well, Tim? And if so, what changes are you making to the portfolio and an expectation of inflation heating up later in the year?
Yeah, so not to have two $64,000 questions, but that's the other big one, right? 1.9 trillion hits on top of the 3 trillion last year. The Fed's got rates at zero, and they're still spending $120 billion a month on security purchases. And I think it was Milton Friedman who once said, inflation is always and everywhere a monetary phenomenon, right? All this money hitting the economy. So my thinking aligns with Chair Powell's thinking, which is you're going to see a backing up in prices. I have some friends who are contractors here in southeastern Pennsylvania. Lumber prices are through the roof. Raw material prices are through the roof as the economy reopens, and those supply chains aren't caught up yet. And then the big question is that transitory or does it stick? And we just won't know. So that's something we're also paying a lot of attention to: inflation expectations, bond yields. That said, we do know in a rising rate environment, rising bond yield environment, traditional fixed income struggles. And you're seeing that year to date. There's a lot of green across most equity categories, not so much in traditional fixed income. So that's where the pain has been, will likely continue to be felt. That said, there's only one great hedge for equity exposure. That's good old fashioned high quality fixed income, but we're pretty conservatively positioned within fixed. We think that's where the pain is going to be, not so much on the equity side as inflation pressures build, at least temporary, because of all this money.
All right, Tim Holland, Chief Investment Officer at Orion Advisor Solutions. Thanks for being with us today. Don't go anywhere, because coming up next, we're going to hear from Penny Pritzker, former Commerce Secretary, right after this.
One and
welcome back. Our editor-in-chief, Andy Serwer, recently had the opportunity to speak with Penny Pritzker, former Secretary of Commerce and the newest board member of a company called Icertis. It is a growing enterprise software company. He got to sit down not only with Penny Pritzker, but also with Icertis' CEO, Samir Bodis. He was able to ask them why they're excited about their partnership. Here's what they had to say.
Sure. Well, there's three reasons that I'm really excited about Icertis. First is the category they're in. Second is the company. And the third is the people. You know, contracts, Icertis is in the business of helping you manage your contracts. And contracts are at the heart of all things commerce. You know, contract management is, in my mind, the next big enterprise software category. Marrying data, insights, risk management allows companies to optimize their business decisions and creates tremendous efficiency for enterprise companies. Second is, you know, it's a great company in terms of it's the contract management leader, as evidenced by its customers, its channel partners, the talent the company has been able to attract. And in fact, Forrester just named Icertis the clear leader in its category in the Forrester Wave report. And then finally, the people. And you'll hear from Samir, but the people are amazing. You know, the team that Samir has brought together has phenomenal leadership, great culture, incredible energy, passion for what they're doing, and extraordinary customer focus. So I'm very excited about the future of Icertis.
Samir, what is the opportunity for the company? What do you guys see as the most promising lines of business, and how does that all work?
Yeah, and great question. So the category itself is about a $20 billion category, and we are the leaders. And the number of contracts that we have under management are about 10 million, with a total contract value of about $1 trillion. And we service customers in 90 countries and 40 languages to essentially help them take their contracts and make sure that the intent of every contract is fully realized. And think of this as a very horizontal category. Every industry vertical in every geography and every company does contracts. And you need a system, a software system, to manage those contracts. It's very similar to a CRM category, which every customer needs, right? And that's the size of the opportunity, $20 billion in TAM, and growing actually at 30% year over year.
Penny, you guys both have a Microsoft connection, right? I wonder if you know each other from Microsoft, number one. And number two, you have a lot of different opportunities that must come your way. What was it about this company that actually made you take the leap?
Well, you know, actually, our Microsoft commonality, if you will, is nice. But frankly, you know, what really got me enthusiastic about Icertis was, as I said, the category, which you've just heard Samir talk about. But most importantly, Samir and his leadership and his commitment to really a strong integrity-led culture that has a very open and transparent communication style, and a massive passion for delivering upon the potential of creating insights for businesses about their contracts and helping them maximize the potential of their contracts. So the potential of this opportunity is very large. But frankly, it's most important to me also to do this with people who I really respect and trust.
Samir, Karen Smith, the general counsel of Twilio, also joined the board. And Penny was just talking about the culture. Can you kind of dig into that a little bit more and talk about your board and what kind of culture you hope to build at Icertis?
Yeah, no, that's a great question. And our culture is sort of encapsulated in our values. And our values are sort of, we have sort of an acronym for it called FORTE, which is fairness, openness, respect, teamwork, and execution. Now, these are big words, because fairness to you might mean different to fairness to me, or respect in Japan is very different respect in Australia or America. And what we believe is that we define fairness, openness, respect, teamwork, and execution in our vision. And that sort of comes out as our culture, so that every assertion makes sure that whether it is with ourselves, within the company, with our customers, with our suppliers, or with our community, we behave and deliver what we do with forte. And our board kind of reflects that. And thank you, Penny, for those kind words and joining the board. And Karen Smith, as you mentioned, joins us from Twilio. She's the general counsel at Twilio. And what we wanted is somebody who, of course, embodied forte. But what's wonderful is she's a sitting general counsel at Twilio. And as you can imagine, contracts sort of originate in business, but legal is substantially involved in that. So we are really excited to have her on board to guide us with respect to the product, to guide us where future of contracting is, because this category is going to evolve a lot. Now, think about it from what AI and ML can do, where you can read what's inside a contract and the software system can make sense of what it is, and then look outside the contract in the real world and say, hey, is what's in the contract actually happening in the real world? Is there more opportunity? Is there some risk? Et cetera, et cetera. So we are very excited about the whole board with Penny and Karen joining, with our culture, and then really building a very enduring, compelling company that is high growth and is consequential.
Last question to you, Penny, and maybe sort of jumping off that last point that Samir made. What is the future of this company? Are you looking to do an IPO soon, or maybe a SPAC in this year? What do you see down the road?
Well, I think the company has lots of potential options. Right now, we're really, really focused on our customers and making sure that we're delivering for the customers on a day-to-day basis. But we're continuing to develop our governance and our capabilities so that we can take advantage of many different potential options for the business.
All right, coming up next on Yahoo Finance Live, we take a look at the battered restaurant industry 1 year into the pandemic with chef Naisha Arrington after this. Welcome back to Yahoo Finance Live. I'm Alexis Christoforous. You may know our next guest from Top Chef, Selena and Chef, if you've caught that on Netflix, or Chef Hunter, where she was a winner. Naisha Arrington is a restaurateur and award-winning chef, and she joins us now. Naisha, it's so great to have you here. I know that you don't own any brick and mortar restaurants. They're sort of more pop-up style restaurants, but tell us what this last year and all its restrictions because of the pandemic has been like for you.
Yes, thank you, Alexis. So, for me, being a native Angelino, I'm very sort of spoiled. I've had a very good year. This year, for the first time in 18 years of owning and operating some very successful restaurants, two which were named top 100 in LA and top 10 dishes of all of Los Angeles. I've really had a great amount of time to sort of stop and do some self work, right? And go in and really watch what I'm eating and work out. And it's been a place of replenishment for me and also a place of therapy for a lot of my chef counterparts. I've been able to really pivot, right? The operative word of 2020 and help my friends in the chef world empathize with, everything that they're going through and building teams and nurturing their teams and all of these new struggles that we're all facing and the injustices and the pandemic. It's definitely been a space that's been broken wide open, and honestly, a space that has been very overdue for a lot of change.
It truly has, and I think the pandemic has forced change on a lot of industries and certainly hastened things for them. Talk to me a little bit, though, about your efforts to help your fellow restaurateurs who have been suffering. They've been looking for relief anywhere they can get it, federal, city, state. What have you been doing with regards to that?
Yeah, so most recently, I competed on a cooking competition on the Food Network called Tournament of Champions, and also another food installment called Guys Grocery Games, where I was able to raise over $10,000 for my local neighborhood restaurant here called Gilbert's in Santa Monica, and I was able to bring $10,000 to their bottom line. Which those are the dialogues of communication, right? They are a family-owned and operated business. The owner, Chavella, and her mother used to come to my restaurant, and to be able to go there and see their families, the cousins, the tios, the tias, operate that amazing restaurant, Gilbert's in Santa Monica. They're there every day making it happen. And so to be able to bring $10,000 to that operation brings me great joy.
Well, that is awesome that you're able to do that. I know that you said the word pivot has been the operative one for 2020 and how true that is. And I know you've done some pivoting in your own business, and you actually took this time to launch a new product online. It's a sauce, right? Tell us about that.
Yeah, so the sauce, Isoon sauce, it is a sauce that is inspired by my Korean grandmother. I'm a biracial human. And, she was a Korean immigrant, and she came here with nothing, with my grandfather, who was a chef in the Korean War. And I've been working on this sauce all through the pandemic. It's not quite available for the consumer yet, but it'll be out soon, and it's called Isoon, Aisoon. And she is the biggest inspiration, food influence of my life. And, I just absolutely adore sharing stories and connecting with people through food. And, it's just a joy. So I feel like if I came up in Michelin starred kitchens, pre Me Too movement, pre any talks of inclusion, in a very Eurocentric environment, all 18 years of my life. And so to be able to have found my voice and find some success, as a creative and as a nurturer, and to be able to, bottle that up, for example, and share that and get into the homes of people and on the tables of those families who are able to connect, is something that's very special to me. So it'll be out about spring 2021. So everyone, and look out for that. But you can find us on Instagram at isoonsauce.com.
Yeah, what a great way to honor, your family roots and their legacy. I know that you're also on the board of a nonprofit called the Collective Identity. Tell us what that's about and what your role is there.
Yeah, well, it's a mentorship program, and I was able to raise over $50,000 for them this year, and it's just been a very much a labor of love. Um, I've been able to connect and engage with the community and really rally and fundraise a lot of capital to them. And I think that through the social unrest, right, I had a lot of time, right? I don't have a brick and mortar of my own that I was trying to keep afloat. And as I saw the decimation of downtown Santa Monica, I mean, that I've lived here and been a resident of Santa Monica for 20 years, and it's a very safe beach community. And to see people in the streets battering businesses and breaking down and spray painting and had firearms in the streets, and just it being obliterated, seeing army trucks and tanks in the streets. And I went out there, I protested, I marched, and I had to ask myself, like, what am I actually doing to further the dialogue and to create systemic change through this social unrest? So I thought, better to apply my efforts. And I sit on the board of a couple different nonprofits as well. And I think nonprofit work is a way for me to give back, because I've had great, amazing mentors in my life, and I don't think I would be who I am today without mentorship. So I think that's a very important piece to who we are as humans and what we are leading into the next generation. I think those through lines help us be, not just tech people.
Right. No, absolutely. Mentorship, even in my own life, has meant a great deal. Nyesha, when you talk to others in your industry, how do you think this past year, the lessons learned are going to impact what the restaurant experience will be like for all of us for years to come? Are there changes that took place over this past year that will now be with us?
Yeah, well, absolutely, there will be changes that will reconstruct the fabric of what the proverbial recipe is for success in a business. I think chefs are innate nurturers. We always want to feed the soul of another, and while that also feeds our soul. So I don't think that will ever go away. I do, however, think that when we're looking at the bottom line and we're looking at our P&L statements and we're looking at the margins of what it takes as a burden, from a burden standpoint and the reward standpoint, and what it takes to get there in between that food, that nurture piece, there's a lot of levels, right? So I think what we saw in 2020 was a lot more micro concepts. We saw a lot more of these sort of delivery applications doing very well, and this sort of dialogue that happens between restaurants and food delivery apps, and what those percentages should be. But it's interesting. I think as business people, we have to progress with the times, and there's no mistake that the reality is that tech will continue to be in a big part of our lives, right? As Homo sapiens, but we have to remember, right? If we still want that experiential piece, if we still want to drive home those thoughtful food data that we can keep in our soul, maybe we do that in a different way, but I think that we always have to continue to innovate and stay progressive,
Absolutely. All right, we're going to leave it there. Nyesha Arrington, chef and restaurateur, thanks so much for being with us, and best of luck to you.
Thank you.
All right,
Appreciate it.
Coming up next, we're going to take a look at what the pandemic has done to our mental health with Dr. Lynn Bufka right after this.
stand by and go.
Hello and welcome back to Yahoo Finance Live. We want to talk about our mental health 1 year into this pandemic. And joining me now is Dr. Lynn Bufka of the American Psychological Association. Doctor, tell us, I mean, a lot of us have gone through really challenging times this past year, losing loved ones to the virus, being sick ourselves. Tell us what some of the major mental health issues have been over the past year.
You know, both in APA's own survey research and in survey research from many, many other organizations and entities, we're seeing higher levels of stress, more diagnosed anxiety disorders, diagnosed depression. We're seeing a segment of the population that has had traumatic reactions to everything that's going on. So overall, an increase in mental health concerns across the board for people who've been affected directly by the virus or people who have experienced changes because of what we've needed to do to try to contain the virus.
I also went through this report, and I think a lot of people can relate. 42% reporting they gained more weight than they had intended to, calling them, right, the pandemic pounds. Of those, they gained an average of 29 pounds. Talk to me a little bit about how people can sort of get out of that rut as we come out the other side of this thing.
Yeah. And the other part of it, we had almost 20% telling us that they lost an unintended amount of weight as well. So clearly, stress has been affecting our behaviors and how we're coping during this time. Some of it could be because we're just not as active as we may have been prior to shutdowns and lockdowns and all of that. And some of it is how we have tried to cope with times that have been really difficult. So, don't judge what's happened. What's happened has happened. What's going to be important is how we do things moving forward. And things like finding a buddy to be accountable with, maybe somebody else that has gained some weight that they didn't mean to. How can you work together to support each other to return to your healthier habits of regular activity and healthier food choices? And also things like what can you do in your day-to-day life to move more, to ensure that the kinds of snacks and foods that really nourish your body and make you feel good are readily available, like keeping apples or fruit near you as you work as opposed to a candy dish. So really, it's sort of making it easy for ourselves to make the choices that are healthier and better for us.
Another thing that a lot of people were doing more of during this pandemic is drinking. I mean, all you have to do is look at sales, especially of hard alcohol, to see that with all the time spent at home and bars closed, they were buying more of that top shelf liquor and drinking it. And according to this Harris poll, nearly 1 in 4 adults reported drinking more alcohol to cope with their stress. What would your advice be to those folks, and maybe to the people who don't realize that they are now having a drinking problem?
Yeah, for any of us over the past year, we've probably done some good things to cope with our stress and some things that haven't been so healthy. So it's really a good time to evaluate, what am I doing to take care of me and take care of me in a way that is healthy? Occasional alcohol, the experts tell us is going to be okay. But if our increased drinking has gone above what's a healthy amount, then we really do want to try to find other things to do instead of turning to alcohol. For some of us, it may be a habit where it's easy, it's accessible, and so that's what we do. So it might be inserting some other kinds of behaviors instead, making sure you have a glass of water and drink the whole glass of water before you have some sort of alcohol. But for others who really are finding it very hard to stop the amount of alcohol that they're consuming, that might be time to reach out to a professional or to connect with a group like Alcoholics Anonymous or other support groups that really work with individuals who have identified that substance use is something that's really a problem in their lives at the moment.
And what would you say finally to those people who feel really desperate and isolated right now? Because I mean, with all the Zooms that we've been doing, even though we are still able to connect on some level, that can feel really super isolating for a lot of folks. What are some practical things they can do to feel like they're sort of part of the mix?
Yeah, absolutely. And in fact, we know that Zoom all the time is really hard for a lot of reasons, which we don't have to go into right now. But finding things that are engaging with you and connect you to others. So technology is one way we can connect with others. For much of the country, as the weather becomes a little bit nicer, we have more opportunities to be outside. So thinking about, are there ways to have physically distanced, maybe masked get-togethers with another friend, whether it's going on a hike or being outside together and sitting spaced apart and having a conversation in the flesh as we used to do. So finding activities that abide by still the current public health expectations, but are also enjoyable and able to be done. So we're really encouraging people to think about how they can be outside to do that. Other kinds of things to think about, are there activities or hobbies that really are kind of new and engaging? So it's not just so much a talk to your friends over Zoom, but maybe you all bake a pie together. It doesn't have sort of that same Zoom pressure, and it's an activity that everybody maybe enjoys doing, or whether it's quilting or crafts of some sort. Many people are finding that activities help them connect to others who share similar interests. And we would suggest people do that in a pandemic or not. I guess the last thing is to really, if you're having a hard time connecting, make a little extra effort. And it's so hard when we feel depressed or anxious, it's harder to make the effort to do the things that are good for us. But be honest with somebody that you're close to and let them know, I've been really struggling. I need to feel more connected to people. Would it be possible for us to just set up a regular phone date? Or what could we do so that we are more in each other's lives than we have been? And try to find that person who has been a good source of support to you in the past, that you feel like you have sort of a relationship there where you can talk about some of the things that you've really been struggling with.
Well, sound advice, and it can be really tough to feel like we're not just in this alone, but we have got plenty of company. Dr. Lynn Bufka, Senior Director of the American Psychological Association, thanks for your time today. And we'll be back with more Yahoo Finance Live right after this. Welcome back. I want to bring in our correspondent Brian Chung now with a new report out by Goldman Sachs about Black women in the workforce, and some really startling numbers here, Brian.
Yeah, absolutely, Alexis. This report comes from Goldman Sachs. They released it on Tuesday, and it highlighted the earnings gap between Black women and white males in the workplace across the country. And the statistics are that Black women are 10% less likely to be employed and paid 35% less than white men, as the chart ahead of you shows, which shows really just the large gap that there is between Black women in the workforce and the broader workforce at large. Now, the reasons for this could be because of the structural issues that Black women face when it comes to accessing education, specifically the bridge between high school and also college, in addition to access to capital for Black women that are hoping to be entrepreneurs, and also the infrastructure for healthcare. There's data that shows that they are more disadvantaged in just being able to get access to high quality healthcare compared to the larger population at large. Now, what's really interesting about this Goldman report is they have a number of policy recommendations, things like from the public sector at least, enforcing pay equity and fair housing laws, in addition to raising the minimum wage, a very hot discussion that unfortunately collapsed in the Senate about 2 weeks ago. There's also things like maybe increasing affordable housing, and that's something where they said the private sector can play a role. Goldman Sachs is advocating for its other banks in its industry to also try to improve the amount of investment that they have into Black female-led businesses, for example. So to that tune, Goldman Sachs actually released alongside this report a commitment to invest about $10 billion over the next 10 years to invest in Black women. Of course, this comes for a banking industry that has had historical issue with representation even within the business. Consider, for example, that at the 4 largest banks in the country, there are only 3 women on those boards of directors that are Black women. So a very interesting conversation happening right now during a time where obviously this pandemic has also disproportionately impacted that group of people as well.
Absolutely. A very timely report there from Goldman Sachs. Brian Chung, thanks so much. I want to get the latest now from our Washington correspondent, Jessica Smith, on the signing of this $1.9 trillion stimulus bill by President Biden. He was supposed to sign it tomorrow, but he has moved that up to today, and it could be happening any moment now from the White House. Let's check in with Jess for the very latest. Jessica?
Yeah, we are waiting any minute now. President Biden is set to sign the $1.9 trillion relief package into law. He and Vice President Harris will be in the Oval Office for this signing. And then tomorrow, they're going to have the celebration with congressional leaders that they had planned. But the White House says that the bill made it to the White House earlier than they expected. So they wanted to move quickly and go ahead and get this signed into law. We also learned in just the past hour that the president will be traveling to Georgia next week to sell the benefits of this package to American voters. Of course, voters in Georgia were key to getting this done. If those 2 seats had not been won by Democrats, there is no way that the president would have been able to get this deal done. But again, he is expected to sign it any minute now. We are waiting to see the president and the vice president. We'll keep you updated on what they have to say when they do sign this bill.
Thanks, Jess. Before we let you go, I know people really want to know when they can start expecting those $1,400 stimulus checks. Not as many people are going to be receiving them as those 2 prior checks, and that's mainly because lawmakers changed the eligibility for these checks. They wanted to make them much more targeted to make sure people who were getting them were the people who needed them the most. When can we expect those checks to start hitting people's accounts and mailboxes?
We don't have an exact date yet, but Democratic leaders and the president had said that it should be sometime before the end of this month. So as soon as he signs this legislation, we'll start looking for those specific dates, but they do hope to get them out by the end of the month.
All right. I mean, I know you'll be watching. We'll be watching here and bringing it to you live when President Biden sits down to sign that much anticipated stimulus relief bill into law. So keep it right here on Yahoo Finance Live. As for the markets, a pretty great day all around. We've got all 3 major indexes higher. We've got both the Dow and the S&P 500 reaching record intraday highs, and the Nasdaq composite. A lot of volatility there, we know, over the past few weeks as that rotation out of growth and into value continues. But at least for today, those tech stocks seem to be back in vogue, with the Nasdaq up 338 points. On a percentage basis, as you can see, it's the big winner, up 2.5%. We've got those recently high-flying tech stocks leading the advance today, with Tesla, Amazon, Apple among the stocks doing quite well. We've also got a new stock coming to market, a new Chinese company that's going to be going public on the New York Stock Exchange. To talk about that and just the overall outlook for the IPO market, which we know has been dominated by SPACs and direct listings. We're going to be joined by the New York Stock Exchange's Vice Chairman, John Tuttle, coming up in the next hour of Yahoo Finance Live. So don't go anywhere. We're back with much more programming for you right after this. Hello, everyone. Welcome to the 2 p.m. hour of Yahoo Finance Live. I'm Alexis Christoforous, and here's what's happening. Stocks higher across the board as investors jump back into those recently beaten down tech names. We've got the Dow Jones Industrial Average at a record intraday high, ditto for the S&P 500, and this is a day after the Dow closed above 32,000 for the first time ever. The Nasdaq snapping back, the big winner of the day on a percentage basis, up better than 2% right now, propelled higher by a jump in those mega cap tech stocks, including Apple, Netflix, and Facebook. Also today, we learned that new filings for unemployment benefits last week neared their lowest level since the pandemic fueled a surge in layoffs last March. Jobless claims fell to 712,000. That is down about 200,000 from an early January peak. And it is more evidence of renewed growth in the labor market. And also, the European Central Bank said it would accelerate its purchases of Eurozone debt after a rise in borrowing costs. It's a surprise decision that diverges from the Federal Reserve as it tries to prop up the struggling economy there. All right, let's get to Jared Blickery now, who has a look at some of the big movers of the day. And Jared, a familiar stock we've been talking about a lot here on Yahoo Finance Live, and that is Tesla. What's the latest?
Yeah, got to hit Tesla at least once a day. Now, we do have some analyst comments here, and this is Mizuho calling it an energy market disruptor. And here's what they're saying about Tesla. Tesla's in-house battery supply is key to, quote, defensible EV leadership and cost reduction roadmap, disrupting the 100 million light vehicle production market. and they have a price target of 775 on Tesla. They expect it to remain the leader across the globe in EV. And we can see here it's up 3.5% today. Now, it was down 40% from its highs. And we'll take a look at that movement right here. So from peak to valley here, that was 40%, still down about 23%, but nice to see it off of its lows there. This is an important stock and a sentiment indicator for the market in general. Now, they also have initiated a buy on NIO, and they're saying that this company, which is a Chinese EV maker, has a key differentiation from its peers, a premium EV offering with a lower cost of ownership through its novel battery as a service battery swap module. So expansion into China, entrance into Europe possibly in the second half of the year, and potentially into other geographies. Those provide substantial market share upside, as NIO currently has just 0.1% share in the global LVP space. And they have a price target of $60 even on NIO, which it was just as recently as earlier in the month, Alexis.
All right, I know that we've been talking about tech stocks bouncing back, but one that is not today is Oracle. In fact, I think it's having its biggest one-day drop in about a year. What is behind that action?
Yeah, it comes down to the earnings yesterday, and their growth was roughly flat, and that missed guidance of about 1 to 3% growth. So Jefferies, which has a hold on it, is saying as management continues to push out the timeline for an uptick, they prefer Microsoft's fundamental position. Also saying that growth deceleration in an industry which is accelerating, quote, boils down to ongoing share loss. Now, Cowen is also writing about it. They're saying it was a mixed third quarter, but they did know that Chairman Larry Ellison's optimism regarding database growth, quote, while not the quarter and guide that we hope for, we remain encouraged by strong enterprise resource planning growth fundamentals, which we expect to continue. Cowen has an outperform rating on Oracle. And as you said, this is the worst day in quite a while for Oracle, giving back a lot of the gains that they had this year. Now you take a one-year view, still up 50%, and that's largely from those lows that we saw 1 year ago in March.
All right, want to shine a light here on a new stock to market. It's a Chinese company called Coupang going public on the New York Stock Exchange. And wow, what a debut. It's trading at a valuation of about $108 billion. I guess that's more than Uber, more than Zoom. Tell us about this company.
Yeah, you could call this the Amazon of Korea. It was founded in 2010 by a Harvard dropout. So familiar theme there. It seems that Harvard dropouts go on to found quite a few multi-billion-dollar companies. But there is something kind of strange about the way that the IPO shares were awarded. Now, they IPO'd at $35 per share, and I'll pull up the chart here so we can see it. This is going to be one-day price action, of course, since they came out today, still up 53%. But they allocated 80% of the shares to 25 investors, and these were investors that the company, Coupang, selected themselves. And Goldman Sachs, which was running the deal, didn't get to pick the shareholders. So you got to wonder internally what Goldman might be saying about that. But put that aside, this is a really nice showing for this particular company. They had an 80+% pop on day one, and I'll just show you two others that had 86% pops. This would be RLX Technologies. And you take a look at the max chart on this, didn't do so well after that first day. And Affirm Holdings, they also had an 86% pop, trading below that first day low, as you see.
Also, can you give us a quick update on Roblox, the video gaming app? I know it had a pretty spectacular IPO yesterday, and it looks like it's able to build on those gains today.
Yeah, it's looking like it's up another 5% or so. So this is up 62% from the IPO price of $45. And this is a pretty common household word in a lot of households, maybe yours too. So yeah, the IPO market is definitely hot. We are on pace for record issuance this year when you also include SPACs, and probably not going away anytime soon, Alexis.
Oh, yeah, I'm very familiar with it in my household, Jared. Thank you very much. All right, Yahoo Finance Premium Investment Idea of the Day, a bullish call on Dick's Sporting Goods, which, by the way, is now run by a female.
Exactly. So let's check out what Argus Research is saying about this company today. Now, they're saying that Dick's Sporting Goods has a bullish trend. They like the strong dividend hike. Let me get rid of that line. And they're raising their target to $82 from $80. And here's their reasoning. On March 9th, Dick's reported a fiscal 21 adjusted profit of $225 million or $243 per share. And that is up 84% from the prior year and much stronger than the company's forecast for 181 million or $2 per share. Also, they are reasoning if the company earns $5.55 per share in fiscal year 23, then grows 6% in each of the next 2 years, EPS would rise to $6.25. At a multiple of 18 times, the shares would be worth about $112 in 4 years. So you break that down, that becomes 8% for the 12-month target. And also saying, along with fourth quarter earnings, Dick's raised its quarterly dividend by 16%, or about $1.45 annually. The current yield is about 2% for this stock. And you take a look at what they've done over the last 6 months. We got some liftoff this year, up 32%. Over the trailing year, up 143%. Not bad, Alexis.
All right, Jared, thanks a lot. We want to go right to the White House now, where Joe Biden is about to sign that stimulus package into law. Let us watch.
Weeks that this bill has been discussed and debated, it's clear that an overwhelming percentage of the American people, Democrats, independents, or Republican friends, have made it clear, the people out there, made it clear they strongly support the American Rescue Plan. Yesterday, with the final passage of the plan in the House of Representatives, their voices were heard and reflected in everything we have in this bill. And I believe this is, and most people I think do as well, this historic legislation is about rebuilding the backbone of this country and giving people in this nation, working people, middle-class folks, people who built the country, a fighting chance. That's what the essence of it is. And I'm going to have a lot more to say about that tonight and the next couple of days and be able to take your questions. But in the meantime, what I'm going to do is sign this bill and make the presentation tonight. And then there's going to be plenty of opportunities. We're going to be on the road, not only talking about what I'm talking about tonight is the impact on the virus and how we're going to end this pandemic. And we're going to talk at all the elements of the bill beginning Friday, Saturday, and through the week. So thank you for being here. Got it. Thank you all. Appreciate it.
Thank you guys. Thank you. Thank you guys for coming. Thank you guys. Thank you all. Thank you guys. Thank you guys for coming. Thank you guys for coming. Thank you.
And there you have it, a historic moment that came early for President Biden in his presidency. A victory for the Biden administration as he signs that $1.9 trillion stimulus relief bill into law. Of course, he did it on the backs of the Democrats with little to no support from Republicans. We've got our Washington correspondent, Jessica Smith, joining us now. Jess, this is definitely a big win that I know he will speak about tonight when he addresses the nation.
He definitely will. And I think, as you heard there, he is going to continue and try and stress that the majority of Americans support this legislation, even though not a single Republican in Congress voted for it. That is going to be the message that the White House is trying to put forward, that this was bipartisan across the country, though it wasn't bipartisan in Washington. And you'll hear him, as he mentioned there, he's going to be selling the benefits of this package across the country. He and Vice President Harris are now headed to Georgia next week to really kick that off. Georgia, of course, so important in order for this bill to get done. It would not have gotten done if the Georgia voters did not elect 2 Democratic senators in those runoff elections. So now the White House is going to be selling the benefits of this package across the country. That is something that I've heard from Democrats, from the White House. They are going to try and avoid what they see as mistakes made in 2009 when Democrats didn't take enough credit, as they put it, for the rescue package at that point. And then it really cost them in the 2010 midterms. That is what Democratic lawmakers are saying they're trying to avoid this time around.
All right, Jessica Smith, thanks so much. And again, President Biden signing that $1.9 trillion stimulus package into law, saying just moments ago at the White House that he's trying to give the American public a fighting chance during this virus. And he's going to be addressing the public tonight in a primetime address, his first as president to discuss the White House's next steps as it relates to the pandemic and vaccine distribution. Want to get back to the markets now because looks like stocks are holding on to those nice gains we saw this morning. Let's bring in Liz Ann Saunders. She's Chief Investment Strategist at Charles Schwab. Liz Ann, always good to see you. I know you were here in the Google Hangout watching President Biden sign that piece of legislation into law. What are your expectations for what it's going to mean for this economy? And of course, what it's going to mean for inflation?
Well, we certainly can use as a guide the two prior stimulus bills, the main one last year, the CARES Act, and then the supplemental partial bill that kicked in December in terms of what it meant for the boost to the savings rate, how that filtered into consumption, where we saw that consumption biased, and then also a lot of survey data being done with regard to this particular package, and at least from the perspective of consumers, how they anticipate they might parcel that out. And what we've gleaned based on what we've already seen with prior stimulus is that only about a third has actually gone into consumption. It's somewhat evenly divided between boosting savings, paying down debt, and used for consumption. We don't know whether that's exactly going to be the case this time, but I think what the question that is important to think about, we don't know the answer to looking forward, is given that the savings rate is expected to jump from 20% to 27 or 28% once these checks start to be distributed, can we assume that ultimately savings will be brought down to recent trend levels of around 7%? That's where some of the most lofty economic assumptions rest on, is that move well down to normal levels of savings. I just think we might want to consider whether this crisis maybe unleashed a bit of a paradox of thrift and a bias by at least some consumers to maybe sock a little bit more away or use it to pay down debt. So that's the unanswered question at this point.
You know, last year when the market was hitting new highs, even though we were in the throes of the pandemic, we talked a lot about this disconnect between the stock market and what was happening in the economy. Do you think that that's still going on, that disconnect, and to that same degree?
Well, I'm not sure there actually ever was as much of a disconnect as people perceived. Yes, on the surface, if you looked at eras like late August, early September, when the S&P and the Nasdaq broke out to new all-time highs, and the only GDP report we had at that point was the 30% plus drop from the second quarter, it seemed to be an obvious disconnect. But the reality is that, number one, the market almost always moves in anticipation of a coming turn in the economy. So seeing stocks reflect future possible economic growth is not abnormal, but also leadership was so narrow into the fall of last year, just the big five dominating performance, which to some degree was reflective of what was going on in the economy. Then when you got the vaccine news and that prospect of broadening out and reopening, that broadened the market out into more cyclical parts of the economy. And I think, again, that reflected what was going on in the economy. I worry a bit now that we're seeing pockets in the market of extreme speculation, really not supported by fundamentals. It's not pervasive broadly in the market, but there is some risk that maybe the market has priced in a rosier outlook looking forward than ultimately what we're going to get, that maybe the pent-up demand story is overbilled on the good side, given that we've really met that pent-up demand all along. And I think the nature of pent-up demand on the services side is just a little bit different. So I think there is some froth in pockets of the market.
What do you make of the bounce back that we saw in the volatile tech sector recently? I mean, we were in correction. We hit a correction on the Nasdaq just a couple of days ago. Do you think that there's going to be another shoe to drop here, and we're going to test those lows again, or are we sort of in a rebuilding phase of tech right now?
The honest answer is I don't know. What we have seen in the past year, particularly recently, is really extreme shifts on a day-to-day basis, on a week-to-week basis, in where leadership is concentrated and where the laggards are concentrating. And you particularly recently have seen so many of these flip-flop days, these mirror image days, where you have a day where at opposing ends of the performance spectrum, you've got tech and financials, or tech and consumer or communication services, and financials and energy. And then the next day they completely flip-flop. and reverse that, who's the leader, who's the laggard. And that has resulted in not quite fully historic extremes, but the spread on a rolling monthly basis between the best performing sector and the worst performing sector, and the volatility around where that leadership resides has been quite extraordinary. And I think that's likely to continue. I think that's the nature of the beast that is the market environment right now, making it somewhat tricky, particularly for individual investors. And I think the idea behind it is not try to figure out in the next month or next 2 weeks or next day what's going to be the winning sector, but maybe consider rebalancing a bit more frequently so that you stay in gear by effectively reacting to these extreme swings and forcing yourself to add where there's short-term weakness, trim where there's short-term strength, and stay in gear that way versus trying to forecast what the next short-term leadership shift is going to be. I think these dramatic rotations are going to persist for a while.
Yeah, and we better get used to it. And it can be dizzying. Liz Ann Saunders, Chief Investment Strategist at Charles Schwab. Thanks for being with us.
My pleasure.
All right, want to check in with our senior columnist, Rick Newman now for reaction to what we just saw moments ago. Rick, that victory for President Biden, the first of his administration signing that $1.9 trillion relief package into law. What happens next, I guess, is the big question. The fact that the government's spending all of this money, what is next on Biden's to-do list, and where's he going to get the money to do it?
Well, hopefully the economy comes roaring back, in which case Biden, of course, would declare victory. But I think, yes, we heard Jeff Smith just a moment ago saying Biden and Vice President Harris and other members of the administration, they need to get out there and tell Americans what's going on, take credit for this bill. And then we know that the next big legislative package is likely to be something involving green energy and ways to address climate change. In fact, right now on my other screen, I'm watching a big conference on what is the Biden administration going to do? What are the opportunities? How are we going to make money on this? What's going to change and so forth? So that's going to be a big deal, but I don't think we're going to really see a bill on that until probably the summer. And in the meanwhile, all the committees in Congress are going to be working on their elements. Based on what I've been hearing, it sounds like they're going to try to realign some major tax incentives to really trigger investment in new types of green energy. One other thing I think we could get before that is something relating to China, whether it's out of Congress or whether it's some kind of executive action from the White House or both. And that might focus on supply chains, things Biden has talked about, critical infrastructure, think medical supplies, which we didn't have enough of. We were too reliant on China for masks and PPE and things like that. And also semiconductors. We've got a giant semiconductor shortage right now, and we are just not making enough of that stuff here in the United States. So I think that's something we're going to hear about from both Congress and the Biden administration in coming weeks.
All right, Rick Newman, thanks so much. Appreciate it. And coming up here on Yahoo Finance Live, we're going to take a look at the Broadway industry 1 year into the pandemic. Welcome back to Yahoo Finance Live. I'm Alexis Christoforous. The pandemic has been especially painful for people working in the arts. 1 year ago today, Broadway theaters went dark, leaving thousands of actors and stage crew members out of work and with little to no options. Joining me now is Kate Schindel. She is president of the Actors Equity Association, whose labor union represents more than 51,000 professional actors and stage managers in live theater. Kate, thanks so much for being with us. I want to start with a little light at the end of the tunnel, because we know that there are some select Broadway venues that are going to allow audiences in some capacity to some shows in April. What does that mean for your industry?
I think it's huge. I mean, Actors Equity is a national union. So we represent stage managers and actors who work on stages of all sizes across the country, from storefronts all the way up to Broadway theaters. But it's hard to deny that despite the range of work we represent, Broadway is a bellwether. It was a bellwether when it shut down. And I believe that it sends a really positive sign that we are still on a long path back to normal, but normal may be coming sooner than we feared.
Talk to me about what today's stimulus bill that has now been signed into law by President Biden just moments ago, what is in that law that will now help your industry in particular? I know there's been an issue with health insurance running out for lots of people in the theater industry because now they're going on more than a year of not having worked.
Yeah, it's funny. I got a little emotional watching it, and I was just sitting here thinking, "Don't cry," because I was about to come on with you. There are so many pieces of this legislation that are important to our industry. If it was just the stimulus checks, if it was just the unemployment, if it was just the COBRA subsidies, or if it was just the vaccination piece, it would still be significant. But having all of those things rolled into one piece of legislation is going to be really meaningful. As you mentioned, we have an employer-based health care plan. Many of the arts and entertainment unions do. And the biggest challenge is obviously that when you're not working, you're not accumulating work weeks toward retaining your health insurance. And COBRA is so expensive, as everyone knows. So we've had a year of watching a really large percentage of our industry gradually falling off their health insurance. The idea that people will no longer have to bear that expense themselves at a time when many of us have lost not only our careers, albeit temporarily, but it's a long temporary, but also our survival jobs at restaurants and bars and all the other things that we do to make ends meet between performing jobs. The COBRA subsidy is going to be a really big deal.
We keep hearing time and time again that in order to open up the economy fully, testing is going to play a crucial role. I know that you've hired a doctor to help you guide your members and the theater community at large through the reopening process. Talk to us a little bit about what is it going to look like for us when we go back to the theater, and how are you handling this bear of an issue, which is getting everybody tested?
It's not small. I mean, we've watched our colleagues in the film and TV industry have to go through the same thing, but in many cases, those employers aren't operating at razor thin profit margins. So they can afford to do the testing and upgrading their HVAC systems so that it's safe for people to be inside the building without teetering on the brink of bankruptcy, having just come through an entire year where they had little to no income. So I think the testing is incredibly important, but so too is vaccination. We work in one of the only industries that I can think of where it's not only legal, but completely normal to go to work and kiss your colleague on the mouth as a condition of your job. And so to look like theater looked in, let's say, February of 2020 is a challenge, but vaccination is going to make a big difference.
When we do finally start to reopen theaters in a big way, commercial theaters, because it's my understanding that many of them are not opening, if at all now, with just 10% capacity, which is what Governor Cuomo has okayed for the time being. If we get to, say, 50% capacity, do you think theaters would begin to open then, or is it still going to be a lost proposition for them opening at that level?
I certainly hope that there are some ways to make that work. But I am not an expert on that side of the business model. We have repeatedly been told that it's incredibly difficult and cost prohibitive to open at less than 100% for Broadway theaters. That said, there are theaters all over the country that can open at a lower capacity, and those are really important to us too. And when we focus on what we're going back to, we've spent a lot of time talking about not going back to the way things were, because the way things were fundamentally unjust. We need to have, we need to take care of ourselves. We need to not abide by the old adage that the show must go on no matter what, even if you're sick or injured. We need to move towards, I think the pandemic has pointed out that we need to move towards a universal federal health care plan so that people don't have to deal with these kinds of issues like falling off their health insurance. And we need to really be serious about diversity and inclusion in our industry so that everybody has a chance to participate in the live theater.
All right, Kate Schindel, president of the Actors Equity Association. We can't wait for theater to get back up and running. Best of luck to you and to your members.
Thank you. Have a good one.
You too. Coming up next, the latest developments on the vaccine front with our healthcare reporter, Anjali Kamlani. President Biden says he will announce the next phase of the U.S. COVID-19 response during his prime time address to Americans this evening. The president's address will commemorate the one-year anniversary marking the government-imposed shutdowns to try and curb the pandemic. Joining us now for the latest on the vaccine front is our health correspondent, Anjali Kamlani. Anjali, today we learned that J&J's one-shot vaccine received emergency authorization in the EU. How long before people there will be able to get that shot?
Well, they're under a different timeline, but sort of similar constraints. We know that here in the U.S., we've seen just a little bit of a slowdown in production. Meanwhile, they're under pressure to make sure that they get those vaccine doses out by the second quarter, and meet the deadline of the second quarter. So they're looking to roll those out as soon as possible, but still be able to produce as many as is necessary to meet their commitments. Here in the U.S., we know that J&J had to loop in Merck to get additional vaccine doses out, with President Joe Biden saying yesterday that the U.S. has committed to 100 million more doses of the vaccine. And that is supposed to help for later this year, with preparation and making sure that if there are any variants or if there are any reasons to continue vaccinating or revaccinate individuals, that will have enough supply on hand. So a lot of pressure right now on these vaccine companies to not just produce vaccines here in the U.S., but also globally.
All right, Anjali Kamlani, we're going to leave it there. Thanks so much. Coming up next, we take a look at the IPO market with the Vice Chair of the New York Stock Exchange, John Tuttle. Welcome back to Yahoo Finance Live. Despite the pandemic, 2020 turned out to be a record year for new stock offerings. At the New York Stock Exchange alone, companies raised well over $80 billion, and 2021 is off to a banner start. My next guest oversees IPOs at the New York Stock Exchange. We are talking about John Tuttle, Vice Chair and Chief Commercial Officer, who is joining us from the exchange, I'm happy to say. John, good to see you. And speaking of 2021 getting off to a banner start, I know you had one of the biggest IPOs in years roll out today on your exchange. It's the South Korean company Coupang, that I guess is the equivalent of Amazon in the US or Alibaba in China. Tell us about that offering and how you wooed them to your exchange.
Well, first of all, it's great to be with you. Great to be back here at 11 Wall Street. First of all, it's not only been a busy day, it's been a busy week, a busy year as well. But yesterday we had Roblox with its direct listing come to market. Their opening trade was one of the I believe it was the fourth largest opening trade in the history of U.S. markets. And that led into today with Coupang listing on the New York Stock Exchange. As you mentioned, Alexis, South Korean e-commerce company involved in logistics and payments, everything in between. Raised over $4.5 billion, which means not only is it the largest non-U.S. IPO since Alibaba, it's one of the top 4 IPOs by size in the last decade in the United States. So exciting morning. It took a little while to open the stock, but one of the things we're very focused on, as you know, is taking as long as necessary to get that first price and open it for trading. And we're pleased to welcome Coupang here today.
You mentioned taking a little longer than usual. We saw that yesterday with Roblox. I think it started trading well into the early afternoon. I think it was something like 1:30 in the afternoon. Roblox is up again for its second straight day. But was there anything in particular about yesterday and Roblox that caused that to get off a little bit later than usual?
Well, it was a direct listing, and what we realized with the direct listing is there's a lot of volume, there's a lot of shares, a lot of free float. And one of the things that we're very much focused on and uniquely positioned to do is execute large and complex transactions. And so we watched the price discovery process play out in a very transparent manner here at the exchange. We wanted to open it at the right price, and just given the size of these transactions, whether it be Roblox or Coupang today, those can take a while. So both of them went into the afternoon or close to afternoon, but they're both open and trading and trading up.
So the Korean company, obviously an international company coming to market. Can you tell us what the appetite has been like for companies outside the U.S. to go public here? We're still in the throes of this pandemic. What are you hearing?
There are companies from around the world that are looking to raise capital in the United States and on the New York Stock Exchange. And so today it was South Korea. We have a strong pipeline of companies from South America, from Europe, even from China, despite some of the rhetoric that had been going on over the past 6 months. So the U.S. capital markets continue to attract high quality companies from around the world. And we're also continuing to see it from across sectors as well. So domestically, it's everything from healthcare to technology to, of course, SPACs and everything in between. So right now, the markets and their investors have been rewarding companies that have been listing, and we have a strong pipeline of companies set to come between now and at least through the second half of the year.
You know, if you had to pick a couple of words that were sort of the words of the pandemic, I think unprecedented, pivot, and SPAC would be among them. Talk to us about how popular the SPAC has become, especially at the New York Stock Exchange. And as more companies come to you and say they want to go public, how are they choosing to do it? Direct listing, SPAC, or the more traditional IPO way? It's
a great question, and there's the past year has been full of surprises, including the words you just described were appropriate. But what I would say is a year ago, if you were talking to us and talking about the IPO market, never would we have imagined that 2020 would have been a record year, not only for the New York Stock Exchange, but more broadly across the U.S. capital markets. Companies also are thinking about the different pathways they have to come to the public markets. For a long time, it had just been the IPO, and we had been working for years to create the direct listing plus capital raise, to put rules in place to allow SPACs to list in the marketplace. And now companies have options, and that's what's encouraging. And so in those conversations we have with CEOs, CFOs, public or corporate boards, as they think about coming to the market, we can describe to them the different pathways that may be best suited to meet their objectives as a company and their investors' objectives. So yes, the SPAC has seen a increase in 2020 and even in 2021, but it's one of several different pathways that have really emerged over the past 12 months, in particular during the pandemic, for companies to come to market.
You know, I know that this pandemic forced the physical closure of your building there at 11 Wall Street. I think it was the longest stretch we had ever seen last year, although you were still able to keep trading going, a testament to your technology and to the exchange. But tell us what things are like there on the floor 1 year later, and what capacity is like, and when do you hope to ramp things up?
Yeah, it was an unprecedented year for sure. And certainly we were prepared for that temporary closure of the trading floor due to COVID. But we're back, and every day we're welcoming more and more of our traders, the market makers, and other participants back into the building. Of course, we have safety protocols and we're thoughtful about how we do that. But as each day goes by, you feel more and more energy here at 11 Wall Street on the trading floor. And we felt it this morning with Coupang and what was the largest IPO of the year so far.
I'm going to play devil's advocate for just a moment. You were able to continue trading really without missing a beat, even though your floor was shut down for an extended period during the pandemic. There's been talk for years that the stock exchange, the physical building, would go away. Are you having internal talks about making the footprint smaller? I know it has shrunk over the years. I mean, when I started reporting from there in the mid 90s, it looked like a very different place. But what about the footprint now and going forward? What are you all thinking about?
Well, it's a great question. And one of the things we realized during the pandemic is that we were able to run an experiment that under normal circumstances, we never would have. And that was the question of how much of our outperformance in trading company stocks is due to our model or due to the trading floor. And what we realized is that even with that trading floor portion offline, we continue to outperform because of our model. Now, once we were able to allow more folks back into the building and safely, we were pleased to bring that part of our offering back online and support our listed companies and the companies looking to come to market.
All right, John Tuttle, Vice Chair of the New York Stock Exchange. Good to see you. And we'll be watching all those IPOs this year.
Great to be with you. Thank you.
Coming up next, we're going to speak with the CEO and co-founder of the skincare company Heyday and how they are pivoting during the pandemic. Welcome back. The New York-based skincare company Heyday just raised $20 million in a Series B funding round to grow its brand nationally via a franchise system. And that latest funding round was led by Level 5 Capital. Joining me now Heyday CEO and co-founder Adam Ross, as well as Level 5 Capital's Managing Director Chris Kenny. It is great to have you both with us. Adam, I'm going to start with you. And before we get into this latest funding round, just want to talk to you about your business model over the past year, because you are in a very high contact industry, talking about customized facials. What have you been able to do with the business to pivot during this challenging time?
No, it's a great question, and thank you for having us. It was actually like literally a year to the day, Alexis. I remember sitting around a table with our management team, and the debate at the time was, do we close our shops for 1 week or two? I think little did we know we'd be here, 12 months later. And to your point, our business was disproportionately affected. Our New York doors didn't actually reopen until end of September. Our Philadelphia door only reopened a week ago, and in Los Angeles County, unfortunately, we remain closed. So the impact on the shop business has been, transformational. But I think a silver lining with the current environment is how we, it forces us to think a lot more, strategically around the work we want to be doing in the product roadmap. So there's a bunch of changes we made to, I think, better service our clients when they come back in through our doors. And we're huge proponents of a high touch, personalized experience. So we expect a lot of pent up demand. And based on what we're seeing in New York, clients are coming back and they're spending more, they're having a great experience, and they're rebooking at rates that we've never seen pre-pandemic. On the digital roadmap, it's been a great moment, I think, with the store closures to figure out how we can take some of the competitive moats and advantages in the business and translate that to the expertise, personalization, and guidance that we see lacking in the skincare world. So, it's been a good moment to, I think, pause and reflect and sharpen the pencils and in different areas of the business where you can always do better.
Chris, I know over there at Level 5, you have a history of backing sort of wellness and lifestyle brands. I know that Orange Theory Fitness is in your portfolio, as well as Core Power Yoga. What was it about Heyday that wanted you to make this $20 million investment?
Yeah, Adam and his co-founder Michael, really have just established a really unique four-wall experience that focuses on people's skin exclusively. And, the amount of time that people spend thinking about their skin and going to dermatologists was just not enough. And when we got introduced to Adam and Michael, it was just really clear there was a great opportunity nationally to make people's lives better by giving them a more convenient, more affordable avenue to work on their skin monthly, weekly, daily. And that was the opportunity we sought out. And then combined with their execution during the pandemic and their ability to, as you said a few minutes ago, pivot, it just provided a great opportunity for a partnership.
Chris, I know as part of your investment, you're going to become sort of an anchor franchisee as Heyday now moves to a franchise model. Tell us what that commitment is going to look like.
Yeah, we're going to open 40 stores. We think there's north of 500 stores that Heyday can open nationally. And those 40 stores will be in the DC area, LA, likely Atlanta. We'll evaluate Texas, areas that we know and love and that are growing quickly in order to get some really significant brand momentum. This is a concept where when we got to know the brand and the ability to partner with Adam and Michael, we saw the opportunity to go deeper and wanted to get there first.
Tell me what you're going to do with the $20 million at Heyday, Adam.
Yeah, I think 2021 for us is going to be a year of investment. As we work with Chris and the L5 team, there's a lot of upfront investments we want to be making around the franchise platform in particular, ahead of what we see as door openings in Q1 of 2022. And part of that, Alexis, is I think we've seen, and you can look across the industry at successful case studies from a franchising perspective and those that were less successful. So I think we want to invest the funds upfront and be very thoughtful, considered, methodical about approaching this the right way with the right franchise partners. So that's that's sort of like one pillar of the store. And the other big one is, I think like the team and the technology and the investments into, other competitive moats, both within the store experience. So we continue to have that elevated level of service any heyday location you walk into. And again, like taking some of that unique data, the personalization and that experience to online. And I think today you've got clients that have never been more discerning. They don't necessarily look at physical and digital the way we talk about it within a company. So, to our minds, to be the brand that wins the hearts and minds of clients across the country, you need to offer a leading physical experience and you need to offer a leading digital experience. So they're the two core areas that we see the capital getting directed towards.
All right. Well, lots to look forward to there at Heyday. Thanks so much, Adam Ross, Heyday's CEO and co-founder, and also Chris Kenny, managing partner at Level 5 Capital. Stay with us. More of Yahoo Finance Live to come on the other side of this break. Just a short while ago, President Biden surprised us all by signing that $1.9 trillion stimulus bill into law a day earlier than expected. So just who will be getting another round of stimulus checks? Joining us now is Denitsa Tsikova with your money report. Denitsa, who is going to be getting these checks and when?
Well, the good news of a bill being signed earlier is people are getting the checks a little bit earlier. We heard from the White House that people are getting those checks as early as this weekend. We saw similar things with the last round of checks. By the time former President Trump signed the bill, 2 days later, Americans already got the checks. So similar thing will happen here. The eligibility criteria is pretty similar to the last round. The income thresholds this time are slightly lower. So a single filer making up to $75,000 would receive the full payment. Those making up to $80,000 would receive a reduced payment. For joint filers, similarly, $150,000 to get the full payment. Those making up to $160,000 would receive a smaller payment. And this time we expect 158 million Americans to receive a payment. This is a slightly smaller number than the last round, but I think it's around 98% of the people that received the previous round. the checks are bigger. Of course, this is important to say, $1,400 per person and $1,400 per dependent. Another good surprise for the people that are eligible for the payments is much more, many more dependents will be eligible for the bonus. So college students, disabled adults, adult dependents, they will all get the extra payment, which wasn't the case in the last previous checks. And eligibility will be based on your adjusted income in your most recent tax return. So if you filed for 2019, that will be it. If you filed your most recent one for 2020, so now, that will be the tax return that will determine whether you get a check or not.
Okay, real quick before we let you go, I know there are some tax changes in this bill regarding unemployment benefits. Fill us in on that.
Yeah, great surprise for people who haven't filed their taxes and people who have already filed them as well. If they received unemployment benefits in 2020, they can get a pretty good tax break. So the first $10,200 of unemployment benefits you received in 2020, you don't have to pay tax on them. And this break is for every household that makes up to $150,000 a year. So this can be a pretty good benefit for all those people. For the people that have already filed their tax return, they can still get the benefit. They just have to file an amended tax return.
All right, Denise Siskova with your money report. Great info. Thanks so much. And be sure to tune in to Yahoo Finance Live at 4:30 today for a Yahoo Finance special, the Biden presidency, the first 100 days. We're back right after this.
Stocks surging to all-time highs. The S&P jumping more than 1% to a new record, its first since February. The Nasdaq up just around 2.5%, driven by a rally in some of those big tech names. We will discuss whether or not this type of momentum is sustainable. Now, President Biden signing the historic $1.9 trillion COVID relief package into law earlier this afternoon, authorizing $1,400 in direct payments and, of course, much much more. We're going to talk to Congressman Richie Torres. He will join us to tell us why he thinks the child tax credit is the most critical part of the bill. And the relief bill also includes $14 billion lifeline for airlines as the industry struggles to get back on its feet. The CEO of Hawaiian Airlines joins us to discuss the stimulus package and, of course, when he expects demand to return to those pre-pandemic levels. We've got an hour to go in today's record-setting trading day. Welcome back to Yahoo Finance Live. I'm Shauna Smith.
And I'm Adam Shapiro, and as Shauna said, it is a record day. The S&P 500, as she pointed out, hitting an intraday high, now trading up about 45 points. The Dow also hitting some highs. It is up 232 points. Nasdaq Tech is recovering. Tech stocks on the surge. Nasdaq up 326 points. It's positive again for the month of March. And we are taking a look at all of this because as we head toward the closing bell, there are also some stocks we want you to pay attention to. First, our parent company. Let's talk about Verizon. Shares were down 1.5% in the first hour of trading, and right now they're down about 2.5%. Here's what's going on. So our parent company has paid $8.2 billion to the U.S. Treasury as part of the 5G mid-spectrum airwave auction, and the company still owes about $36 billion. It's going to the credit markets, to the debt markets today to raise the money to pay that off, and that money due this month. Verizon has also told investors that it plans an additional $10 billion in capital expenditures over the next couple of years because of Verizon is expanding its 5G network. Those expenses will reduce profit, according to Verizon, by about 10 cents a share next year and 20 cents a share in 2023. On the other side, though, Verizon is saying that revenue growth will increase 4% or more by 2024 as the 5G phenomenon scales up. Then there is Boeing, flying high today. Shares up right now about 2%. Here's what's going on. The Southwest returning the 737 MAX to service this week. Also, Reuters reporting that Boeing, excuse me, is close to a multi-billion-dollar deal to sell dozens more of its 737 MAX 7 jet to Southwest Airlines in what could be the company's largest 737 MAX order since they grounded the plane, almost 2 years ago. So keep an eye on Southwest, keep an eye on Boeing. Shauna?
Adam, I'm taking a look at Bumble. It's one of the huge gainers in today's market. Shares are surging today. They came out with its first earnings report as a public company. They topped revenue expectations, revenue jumping 31%. They reported 2.7 million monthly paying users. That's up 33% from a year ago. Investors also encouraged about their guidance. Bumble saying that they expect dating to pick up once people get vaccinated. Shares today up just around 17%. Then we got a public debut here from Coupang. It's trading under the ticker symbol CPNG. Shares are surging today. You can see it up just around 50%. It's a South Korean e-commerce giant. It opened at $63.50 a share. Right now trading at $52.74. But when it did open at $63, that market cap was over $100 billion. We're going to talk to an early investor and also a former board member, Eric Kim. He's going to join us later in the show to talk about this huge public debut and, of course, what he expects from the company going forward. But again, shares up right now just around 50%. But let's take a step back and talk about the broader market action today, because like we were saying, it's a record-setting day. The S&P reaching an all-time high, its first since February. Jared Blickery, of course, is watching all of the action for us. And Jared, what's behind some of today's big wins?
It's really about tech, but it's a pretty broad-based rally, except for maybe financials, and we'll get to those heat maps in a bit. But I do want to highlight the price action on the Wi-Fi Interactive. Nasdaq up 2.5%. This is the best day Nasdaq has had since Tuesday. S&P 500 also up more than 1%. Dow up more than 0.75%, and the small caps, Russell 2000, up nearly 2% as well. And you take a look at the Nasdaq 100 components, lots of green and dark green. Communication services standing out because we got Alphabet and Facebook each up more than 3%. Guess what's also up more than 3%? Tesla. That's bouncing back. That really important sentiment stock having a nice run here, but still about 20% or more off of its recent highs. But then you take a look in some of the other industries here. Let's take a look at semiconductors because those had a nasty spill a couple of days ago. Lots of broad-based gains here. You look at software. Software is doing well. You look at Bitcoin. Bitcoin hit a record high on certain exchanges. You see a lot of red in the other cryptocurrencies there. But I do want to show the banking sector because that's one area of weakness. And it's kind of interesting, maybe a little bit confusing because we do have the yield curve slightly expanding today. We got the 10-year T-note yield higher, It was kind of the reverse yesterday. So financials bucking the trend here, but everything else looking like we have some nice gains. And just rounding out the discussion with the sectors, tech and communication services each up more than 2%. Those are in the lead. Financials and staples, those are the two laggards in the red, guys.
Jared, thanks so much. We're going to check in with you in a little bit. We want to continue this conversation, talk about what's behind today's gains. And for that, we want to bring in Brad McMillan. He's a chief investment officer at Commonwealth Financial. Brad, great to talk with you again. You're looking at record highs. Jared was just going through some of the sectors, some of the leadership in today's market. Is there reason, though, to think that this type of momentum can continue?
I think we're seeing a shift. I think tech has had a great job, has done a great job today. I mean, they continue to be great companies, but when we've seen that pullback as interest rates normalize, that says to me we may be getting close to the end of the story. I think we're going to see cyclicals start to outperform as we move forward.
Brad, when you say interest rates normalize, I mean, there's nothing normal about the era we live in. So what, if you're an investor who's concerned about this constant back and forth with the 10-year yield or the spread between the 2 and the 10, what does normal look like so that I could be comfortable continuing to invest in equities?
Well, if you felt that the economy was normal before the pandemic, if you went back to January of 2020 or 2019, those interest rates kind of reflected a growing economy. And what we've seen with the interest rates right now is we're getting back to those levels. And that says to me that, first of all, they're probably about where they need to be in the short term because they are back to where they were. But it also says to me that the future gains are going to be constrained by Fed policy, just as they were back then. So I think we are close to normal. Maybe we got a little more upside on rates, but I think most of the damage has been done as far as the market goes.
Brad, we talked about energy, obviously a huge underperformer last year. It's bounced back pretty significantly this year, still has a ways to go. Are you finding investment opportunity there? And if so, I guess, where are you looking?
I think there are two things going on with energy. First is regulatory. You know, with the Democrats in control of Washington, I think we have to be aware that there's going to be a very different regulatory environment going forward. And that takes us to the next part of the discussion, which is supply and demand. U.S. supply went up. Now it's dropped down. It'll come back, but maybe not as fast because maybe capital won't be as available. Maybe regulatory issues will be out there. And if supply is relatively constrained and demand is coming back with the economy, that means the price increases we've seen probably have some more to run.
So when we talk about oil specifically, do you worry that as the U.S. government's about to borrow even, $2 trillion more to pay for what was just signed today, that's going to have an impact that will drive the price of oil higher as the dollar might become cheaper?
We haven't seen that yet. I mean, we actually see the dollar edging up again. There's a lot going on. For the dollar to weaken significantly, first of all, we'd have to see it become less attractive. We don't see that in the world. You know, we don't see Europe or China becoming more attractive. So right now, our fiscal imbalances are pretty much what we're seeing elsewhere in the world, too. In other words, there's no reason for the dollar to fall off a cliff. I'm not worried about that, at least not yet.
Brad, taking a look at the earnings reports that we've gotten, clearly we've seen a bit of a bounce back in terms of what we could expect going forward. What's your read on that? And I guess how healthy and how strong are corporations at this point? Because that was a big question mark for investors going into this latest earnings season.
Well, the story with earnings is we keep outperforming. Analysts keep thinking they're going to adjust up expectations, and then they keep missing the mark. So it's not because of the economy. I mean, the fourth quarter, we had the third wave of the pandemic. So it's not about that. It's because companies are learning to be more efficient. Companies have been forced to adapt to the pandemic. And those adaptations are going to persist even as the top line starts to improve. You know, you look at the numbers, we've been consistently outperforming. I think we've still got some more room to go on earnings growing. I think it's going to be a great year this year.
Brad, when you have the title of Chief Investment Officer, not your colleagues in the industry, but your friends who are not perhaps in the finance world, what are they asking you right now about the future?
They're saying, is the pandemic over? And of course, there are no guarantees, but we are moving in the right direction, especially with the vaccinations. They're saying, can the economy keep going? And it can. It is. In fact, we're going to see a better year this year. And they say, is the market going to crash? And the honest answer is, I don't know, but I don't think so. I think it's going to be a good year there as well because of the economy.
Brad McMillan, always great to have you, Chief Investment Officer with Commonwealth Financial. We're going to take a quick break, but when we come back, coming up, a new study is giving critical insight into the effectiveness of Pfizer's COVID-19 vaccine. Johns Hopkins Dr. Brian Garibaldi, he's going to join us with his analysis right after the break.
We're about 45 minutes to the closing bell. Markets trading higher, but we want to turn our attention to the pandemic because it is still very much a force and a factor in the issues that drive your investment decisions. Anjali Kamlani has news for us that is encouraging regarding that Pfizer vaccine. Anjali?
That's correct, Adam. We got news today that Pfizer, based on real-world vaccinations, which is really the metric that health experts were saying is going to be key to understanding how these vaccines work, got some news out of a study done in Israel as they've done, a much larger rollout and a much better vaccination campaign, noting that 97%, that is the number of efficacy that Pfizer's vaccine has against symptomatic hospitalization or symptomatic of the virus, COVID-19, hospitalization and death, and then 94% on the front of asymptomatic. And that's also a key number because when we're looking at what these vaccines do, you've heard health experts say that, vaccines are not 100% effective. And even if they do block you from getting major symptoms or, ending up in the hospital, you could still end up with some form of the virus in your body. So that number, that 94%, is still very high. Remember, the baseline in clinical trials was 95%. So it's just a little under that. But this real world at 97% really is great news for the company.
Anjali, just on the vaccine front, we had Biden announce securing additional doses of J&J's vaccine yesterday. The supply across the U.S. has substantially increased during the month of March. But where do things stand right now?
Well, so that additional dosage of purchase is actually not going to affect the initial future, the like near-term future of supplies of vaccines, and that's important to know because that indicates what the U.S. Federal government is thinking when it comes to sort of creating almost a stockpile or just having extra doses down the road towards the end of the year when we're thinking about variants and what the impact might be there. So President Biden saying yesterday essentially that. Listen to what he had to say.
I'm doing this because in this wartime efforts, we need maximum flexibility. There's always a chance that we'll encounter unexpected challenges, or there'll be a new need for a vaccine effort, a vaccination effort. A lot can happen, a lot can change, and we need to be prepared.
So as you can hear, a really cautious tone there, looking at, again, not just the challenges that arise from variants, but also generally, we don't know what the situation will be in terms of needing to revaccinate individuals later on this year, probably around flu season. So the federal government really taking a step to ensure that we don't go through this chaotic rollout later on this year. Shauna.
Angelique Emlani, thank you very much. You're going to stick around, I believe, because we have Dr. Brian Garibaldi joining us. He is with Johns Hopkins Biocontainment Unit. He's the medical director, and thank you for being here. That's got to be encouraging that the Pfizer vaccine has that efficacy so high about asymptomatic transmission. Could we expect that the other vaccines will probably have some kind of similar results?
I would think so. I think it's also important to look at what viruses are circulating in Israel right now. They have a high percentage of people who are infected with the B117 variant from the UK, which suggests that, at least from the Pfizer data, that vaccine is likely to be effective against that variant. The other news is that Moderna is now looking at a new vaccine that's targeting the South African variant. They just are starting to enroll patients in a trial that's going to give either a combined vaccine that's been targeted with the initial variants of the virus, but also against this South African variant, as well as another shot of the regular vaccine to see how that performs against these other variants.
Doctor, there's been lots of questions about some of the steps that states have taken across the U.S. over the past couple of weeks. Texas this week scaling back or eliminating their mask mandate. They're allowing businesses to operate at 100% capacity. Any fear there that we could reverse some of these gains that we've made over the last 6, 7, or 8 weeks?
Yeah, I think that is a very real concern. We've made great strides over the last several weeks, but when you look at where we've been, it's been a marked improvement, but we're still having close to 60,000 new infections per day. The only country with a higher per day infection right now is Brazil, and we're really worried about what's happening in Brazil, being a hotbed for potential new variants and their health system struggling, particularly with hospitalized patients. So even though things have gotten better, we have variants on the rise. We're doing great with vaccines right now, but we still have only had about 20% of the population vaccinated. So the vast majority of the country remains vulnerable. So I think it's too early to be pulling back. We're very much at risk for a fourth surge if we're not careful.
Doctor, if I'm going to botch this as I ask you the question, so correct me, but you'll understand the genesis of it. If what we do in New York is different than what they do in Texas, and yet the per capita death rate, and I don't want to minimize the tragedy of this, is essentially worse in New York than in Texas, and maybe Texas is doing the right thing opening up?
Well, I think there's lots of things to the per capita death rate, and I think if you remember what happened in early spring last year in New York, initially the death rate was really being driven by home patients and people with high health comorbidities. So it's not just the per capita death rate, it's who's actually becoming infected and what that burden is on the healthcare system. So while death rates are definitely coming down, we're still having almost 2,000 deaths per day. And I think it's very likely that we could see a rise in those hospitalizations again if we start to see this flattening out across the country. And cases are on the rise in New York, they're on the rise in California, they're on the rise in Texas, they're on the rise in New Jersey. So the vast majority of the country has had good gains. There are places where we're starting to see those cases start to rise again. So, we're not out of the woods yet. We're doing better than we were several months ago, certainly. This is the best we've looked since Halloween, probably, but there's still a lot of anxiety about what happens next if we're a little bit too aggressive in reopening. We've seen this happen 3 times, right? Every time we reopen aggressively, we've seen a resurgence of this virus. Things are different now, obviously, now that more people have been vaccinated and more vaccines are on the way, but I think we need to be careful.
Doctor, a lot of that anxiety that you're talking about rests on whether or not, or how quickly, I should say, we get the population vaccinated. We have states and cities that are setting different rules when it comes to vaccine eligibility. I'm curious if you think this has slowed down the process at all, or if there's any harm in doing this?
Well, I think it's been hard to, switch from having a state-run response to the virus to now of a federal presence in trying to, provide recommendations about mask wearing, about travel, about how people can interact with each other, and seeing a much, I think, stronger role of the CDC and the White House in trying to set policy. And so it takes time to, I think, steer away from those local jurisdictions and have more of a federal or overarching response. But I think it does potentially, send the wrong message if we're not transparent about how these vaccine rules and regulations or recommendations are being made. And certainly we're still seeing, large groups in the population who have lower vaccine, not acceptable, lower access to the vaccine. And I think that's something that we have to be really mindful of as well.
We appreciate your being here. Dr. Brian Garibaldi is the medical director. President Biden has now signed the $1.9 trillion stimulus bill into law. How long will workers and businesses have to wait to start seeing the benefits? New York Congressman Richie Torres will join us next for details.
President Biden signing the $1.9 trillion COVID relief package into law today was a day earlier than we initially expected. Here to talk a little bit more about this, we want to bring in Congressman Richie Torres. He represents New York's 15th district. We're also joined by our reporter, Reggie Wade, who's joining the conversation. But Congressman, it's great to see you. Thanks so much for hopping on here on Yahoo Finance. We're excited to talk with you. I want to start with what President Biden has said about this bill. And he says that it gives essential workers, the working people who built this country, and the people who keep this country going a fighting chance. I'm curious, just in your words, what you think this bill will do for your constituents.
I share the sentiments of President Biden. The American Rescue Plan is a historic investment in the essential workers and families of America. The centerpiece of the American Rescue Plan is an expanded child tax credit, which will cut child poverty in half. I represent the South Bronx, which is said to be the poorest congressional district in America. And I can tell you there's no single policy that will do more to lift the South Bronx out of poverty than an expanded child tax credit.
Congressman Torres, Reggie Wade here. We know another initiative that is very near and dear to your heart is Puerto Rican statehood, and you're an advocate for the Puerto Rico Statehood Admissions Act. Could you tell us a little bit about that, and how do you think statehood would impact Puerto Rico's economy?
Yeah, so, a wise person once said, if you do not have a seat at the table, then you're probably on the menu. And in the United States, statehood means a seat at the table. It would mean billions of dollars in new resources, as well as representation for Puerto Rico. It would mean 2 US senators and 5 members of Congress. It would mean billions of dollars in funding for critical programs like Medicare and SNAP and higher education and infrastructure. My view is that Puerto Ricans are American citizens. And so why not make them equal citizens under the law? Like, the best solution, the only solution to inequality is equality, which can only be conferred by statehood. And I see the colonization of Puerto Rico, I see the disenfranchisement of 3 million Americans on the island to be a deep rot at the very core of American democracy. I mean, how can we claim to be a democratic society when we deny the fundamental right to vote to 3 million American citizens? How can we claim to be democratic when we subvert the government of Puerto Rico in favor of a financial control board that is neither representative of nor accountable to the people on the island?
Representative, what would the process be? Assuming that it does pass in the House, could a filibuster in the Senate stop statehood from becoming a reality for Puerto Rico?
The filibuster as configured could prevent statehood from succeeding in the Senate, but Senator Joe Manchin has expressed a willingness to make the filibuster, quote, more painful and to reform it. And there's a long history of creating exceptions to the filibuster. One of those exceptions is the reconciliation process. So I'm cautiously optimistic that we have more momentum than ever for Puerto Rican statehood. And it's worth noting, what matters is not my opinion. What matters is not the opinion of any member of Congress. What matters is the will of the people on the island. The people have spoken. In November of 2020, a majority of the Puerto Rican electorate cast their ballot for statehood. And when the people have spoken, we in Congress have an obligation to legislate what the people voted for. That is self-determination. That is democracy. That is decolonization.
Congressman, your colleagues Nidia Velasquez and Alexandra Ocasio-Cortez in the summer of 2020 introduced the Puerto Rico Self-Determination Act. How does that differ from the legislation that you're proposing?
Well, I have a difference of opinion with them. I think their legislation ignores the will of the Puerto Rican electorate as expressed in a plebiscite. It's not the place of the United States Congress to micromanage the manner in which the people of Puerto Rico make their own decisions. If the people of Puerto Rico decide to express their political will through a plebiscite, we should respect it. We should legitimize the results of the plebiscite rather than delegitimize a process simply because we disapprove of the result that it produces. And keep in mind, if Puerto Rico had statehood, there would be no financial control board, right? Promesa, which established the financial control board, deprived Puerto Rico of self-governance. It deepened the crisis of colonialism on the island.
Congressman, I want to ask you, I guess it's a two-part question here, about the child tax credit. You were saying earlier that it was the most important. What are the most important parts of this $1.9 trillion tax deal? Is that enough? And I know you're looking to extend this and make it permanent. Is this something that you think you will be able to reach across the aisle and get some Republicans on board with? Because bipartisanship, we know President Biden has been focused on it, yet we haven't really seen it reflected within his first 50 days.
There is broad support for the child tax credit. There's bicameral, bipartisan support. Having said that, the best opportunity to make permanent the expansion of the child tax credit could be a second reconciliation bill. So I'm more concerned with the outcome than I am with the optics of bipartisanship. For me, it would be profoundly inhumane and cruel to lift millions of children out of poverty only to plunge them back into the abyss. So we have an obligation to make permanent the expansion of the child tax credit. I'm partnering with Congress members Rosa DeLauro and Susan Del Bene to advance the American Family Act, which would permanently expand the child tax credit. And President Biden himself has come out in favor of a permanent expansion.
Congressman Torres, with all the division and the rancor within Congress and the U.S. government, what are some of the things that you're hopeful for going forward?
I'm thankful that Joe Biden is the president of the United States. I mean, we have a president who's treating the COVID crisis with the seriousness that it deserves. And we have a president who's just focused on governing effectively and delivering for the American people. You know, the magnitude of the American Rescue Plan is hard to overstate. And it represents, to me, a transformation of the Democratic Party. The Democratic Party is no longer the party of draconian welfare reform. We are the party of families and children. We as a party have returned home to our roots as the party of FDR. And that's exactly where we should be. And that's where the American people are.
Congressman Torres, great speaking with you. Thanks so much for hopping on Yahoo Finance. We look forward to having you back again in the future. And of course, our thanks so much to Reggie Wade for bringing us this interview. Coming up next, the U.S. airline industry's future is suddenly looking a whole lot sunnier. And who better to discuss it than with the CEO of Hawaiian Airlines? He'll join us right after the break.
25 minutes to the closing bell, and this day on which a year ago they declared a global pandemic, the WHO, markets are recovering. So is the airline industry. Let's bring into the stream our next guest, the CEO of Hawaiian Airlines, Peter Ingram. It's good to have you here, and it's a first for us to talk to you. And what's interesting to me is everything is going right. The new American Relief Plan has more assistance for the airline industry. Short interest in your airline is at a level, it's below 5%. It's below what it was before the pandemic. Your stock has been going up, although today I don't understand why they might be selling off. And you've just launched more service from the mainland to Hawaii. So what do you want people to know? Because we know you're ready to travel.
Well, good to be with you, and certainly we're feeling a lot better about things right now than we have throughout much of 2020. I think we still have a lot of road to travel to get back to something that resembles the pre-pandemic normal, but we see some very positive trends. We've had bookings improving over the last several weeks. We feel with vaccines more broadly in distribution that people are more optimistic about travel for the summer, and we are excited to launch the new routes. We started a Long Beach to Maui route a couple of days ago, and this afternoon I'm going to be over at Honolulu Airport with our first flight departing for Orlando. So we're very excited about a year of recovery after a very, very difficult 12 months.
And Peter, as you look at it now, you talk about how the last 12 months has been so difficult. You're feeling much better, but we still have a ways to go. How much longer, if you could try to estimate at this point from the trends that you're seeing in your business, do you think it's going to take to get back to those pre-pandemic levels?
Well, I think it varies for certain parts of our network. What we communicated to investors at our last quarterly earnings call is that we expected for this summer for our North America to Hawaii business, which is a little over half of our revenue, that we expected to be up to between 80 and 100% of capacity by summer. We're actually on track to be in that range with our April schedule now. So we're feeling good about how that has recovered. Certainly not back to normal load factors that used to average 85 to 90%, but bookings have been improving, and we see some encouraging results there. Our international business is going to take a little longer, and that really depends on the pace of vaccine distribution and how the virus progresses in some of the key international markets. And for us, particularly, that's Japan, which is such a big part of Hawaii tourism.
We should point out to people who are watching that prior to the pandemic, in calendar year 2019, you flew almost 12 million passengers. So do you think the stimulus checks that are going to be going out to people, some who need them because they're unemployed, but others who will qualify for them, might help encourage people to, I need a break, it's been a year, and now I'm going to use that money for that?
We think we see a lot of indication that there's pent-up demand for travel, particularly on the leisure end, which is the core of our business. I think people have been, the biggest impediment is probably not financial, although that varies because the financial impact of the virus has been so different. Certain people have been affected not very much at all. They've kept their jobs. They've been able to continue working remotely. Other people have had much more catastrophic financial impacts. I don't know that it's all about financial as much as it is about are there activities to do when I get to a destination? Will I be able to go out and enjoy the vacation? And I think as soon as people have confidence that those factors are going to be in place, I think they are going to say, gosh, I haven't had an opportunity to travel for a while, and I want to go and do something different and take advantage of the freedom to be able to do that.
I would love to go to Hawaii. I got to ask you, I think you were one of among the first airlines to offer the pre-flight testing to make it easier for people to get there. Should that be something that's required going forward? And just lastly, among the monies that were given and lent to airlines like yours, I believe you had drawn down about $45 million from the original $622 from Treasury. Will you keep drawing down from that, or will that not be necessary?
So let me start by talking about the testing. We were largely constrained from having many people travel on our airline through the second and third quarter of last year when Hawaii had a very strict quarantine in place, and that deterred almost all travel. Starting in mid-September, on September 15th, there was a program initiated called Safe Travels Hawaii, which allowed people to avoid quarantine by getting a pre-travel PCR test within 72 hours of travel. And one of the needs we recognized for our airline is we know that cost is going to be an impediment for people, but we don't want the availability of tests to be an impediment to travel. And so we set about identifying partners to provide testing, and we actually worked with a company called Worksite Labs to set up testing locations near some of our key origination airports in Los Angeles and San Francisco and Las Vegas, so that people could have access to a test and know that we were supporting having that those results get back to them within the 72-hour window. And it really has opened things up and given people an opportunity to travel. As far as how long that should continue, I think we've got to continue to evolve these policies based on the science and data of how the virus is progressing. And so as vaccinations help to bring the case rate down and hopefully get us to a point of herd immunity, I would hope that we can remove some of the restrictions, remove quarantine restrictions, remove testing requirements when they're no longer necessary. So we're not putting up impediments to travel that are no longer necessary for the situation. The second part of your question was about, I was going to answer the second part with regards to the federal support. So we have accepted payroll support. We had initially drawn a loan under the CARES Act of $45 million, but we chose to refinance that loan in the private markets and have now exited that loan facility as of February of this year.
We wish everybody at Hawaiian Airlines the best. Peter Ingram is the CEO. Thank you for joining us, and we'll be right back.
We are 1 year into the pandemic, and one thing that has certainly been noticeable is that people are spending more time outside, outdoors, whether that's hiking, biking, walking, and the list goes on. Well, our next guest has been directly impacted by all this, and we want to bring in Andrew Altschul. He is the CEO of Outdoor Products. And Andrew, great to speak with you here. I know your company sells everything from backpacks to travel bags, duffel bags, camping accessories. What are the trends that you've seen in your business over the past year?
Well, I would say that, Outdoor Products is our flagship brand. We're a division of the Outdoor Recreation Group, and we also have hunting brands under Field Line and Timberhawk, and we have fishing brands under Samurai Tactical Fish and Okeechobee Fats, along with Mantis Yoga. And I would just say that traditionally, during the summer, during the spring, people are planning vacations, beaches, traveling, airlines, summer camp for kids. And, at the beginning of the pandemic, things were very challenging. But as things opened up, we just found that everyone was just really very much looking forward to getting outdoors, whether that meant camping, fishing, or hunting, which is our sweet spot.
We had a guest on about 2 weeks ago from SimilarWeb. They do data analytics on the web, and the top search destinations were to national parks. So I'm curious, all this pent-up demand we keep hearing about, are you seeing that now in the sales as people head for spring break and perhaps their summer planning?
Very much so. Our number one customer, our key partner, is Walmart, and we saw a huge surge of customers going out, family camping, renting RVs, taking road trips, whether it be to Utah, Colorado, Arizona, whatever the case may be. So I really think our category, Outdoor Products, really benefited. I feel very fortunate to say that, given what's been happening in the world. It's been a wonderful outlet for people to really just get outdoors and try and overcome the challenges of COVID.
Andrew, well, now we're seeing people get vaccinated, and that, of course, it could change some behaviors that we're seeing amongst some of your customers. Any fear that that could potentially negatively impact your business, that we could see slower growth or even a pullback in some of your sales?
I really don't see it in the immediate future. I don't see it through, maybe you'll start to see a slowdown in Q4 of this year, but overall, the demand is still very strong. Along with Walmart, we sell Target, Dick's Sporting Goods, Dunham Sporting Goods, Big Five, and Amazon. And we have just seen pent-up demand. And I think until everyone is vaccinated, which I think will take another quarter or two, I think the demand is going to remain strong.
All right, Andrew Altschul, we wish you all the best, CEO of Outdoor Products. We're going to take a quick break, but when we come back, TikTok is rolling out new tools to combat a surge in bullying. Yahoo Finance's Dan Halley joins us on how this is all going to work and the potential impact to the platform. That all happens in just 2 minutes.
got about 9 minutes to the closing bell. Dan Howley is joining us now with our tech support topic, which has to do with TikTok and some of the steps they're taking to help support anti-bullying efforts. Dan?
That's right. Like a porta potty at a college football tailgate, internet trolls are a fact of life that are best avoided. And I gotta say, TikTok is taking some steps to make sure that you can do that now on the regular. Now, what they're doing is introducing a new feature that allows you to filter out any comments on your post. So if you put something online, all of your comments will be able to be viewed prior to showing up, and then you'll be able to decide which ones you want to show there. Now, to do that, what you're going to have to do is go to your homepage, tap on the Me icon at the bottom of the screen, and then at the top of the screen, you're going to see 3 horizontal buttons. That's going to take you to the settings menu. From there, you're going to want to choose privacy, scroll all the way down till you get comment filters, and tap that. Now, in there, you'll find the comment filters page. And once you tap that, that will allow you to then set it up so that any comments on your page will automatically be filtered out, and then you can approve them. Now, this will make sure that trolls can't post whatever they want on your comments. I posted a TikTok zooming out from my glorious beard before. I got no comments, but if I did, I would want to make sure that they were all good. And so this is what this is essentially going to be able to let you do, so that nobody will be able to see the mean things or ugly things that people say. You, however, will still see them prior to filtering them out. Now, they also introduced something to make sure that you're not a jerk to other people. Basically, if you go to post something that comes across as negative, TikTok is going to put up a little notification saying, hey, maybe don't post that. And it's going to show up if you post anything. The example that they gave was posting something that says you're ugly underneath someone's video. It would then say, that's offensive, don't post that, or maybe don't. You can then go ahead if you want to, but hopefully you don't. If you do, though, then this new feature will also allow the user to filter that out. So it's one of the big things that they're doing here to prevent bullying, and obviously on a platform with a lot of young people, that's very important.
Dan, your beard, at least on Facebook, gets a thumbs up if they still allow the thumbs up on Facebook. All right, we're going to be back with the closing bell right after this. A little over 3 minutes to the closing bell. Joining us to get us there are Chris Retzler, Needham Small Cap Growth Fund Portfolio Manager, and Megan Horniman, Director of Portfolio Strategy at Verdance Capital Advisors. Megan, let's start with you. A lot of people talking about the need to sell tech, but that may have been overdone because now we see them buying. What do you say?
The reason I think that they're buying this week is because you've seen some settling in the interest rate market. That was one of the big sources of volatility that we saw over the past couple of weeks. So not only did we get some decent bond auctions this week that helped settle the markets down a bit, but then the ECB this morning came in and announced that they would be more aggressive in their bond buying. So this has all helped to settle the volatility in fixed income, which has given technology another bid here in the market.
Okay, Chris, hang on. We're going to get to you in just a minute. But first, we want to head over to our markets reporter, Jared Blickery, who's watching some of the action into the close. And Jared, what sticks out to you?
Well, tech is still the big leader here, and we're going to delve into some heat maps in a second. Just want to show the Wi-Fi Interactive where we are for the day. Nasdaq leading the pack up 2.5%. Small caps close behind. Russell 2000 up 2%. S&P 1%. And Dow, the Dow is up about 0.5% here. And guess what? We got tons of markets set for record closes, including the Dow, including the S&P 500, and a bunch of sectors like financials, communication services, materials, industrials, list goes on. So here's the Nasdaq 100, and now Google, Alphabet is up over 3% along with Facebook. Tesla's building on its gains, up almost 5% now. NVIDIA and PayPal each up 4%. So those software and semiconductor names that we saw take a spill a few days ago, those are doing well today. Also checking in on the banking sector one final time before the close. That's where we've seen the most weakness today. Also seeing some weakness in staples, but look at JP Morgan, that's down 0.5%. It looks like Credit Suisse is down the most. That's down 4.5%. But the cannabis space is something that we haven't talked much about today, and that's seeing a lot of money love here. We got Afria, that's up nearly 12%. Tilray's up 17%, and looks like Canopy Growth, that's up 7% as well. Well, I want to take a look at the VIX because that has come down. We're seeing it approaching the 20 level. Now, it hasn't been able to dip materially below 20 for since before the COVID panic sell-off began, but we are seeing it come down, which is good to see. NASDAQ volatility, however, still a bit elevated, though it's coming down too. You can see it has a 30 handle on it. And we're talking about the bond market. That settled an hour ago, but worth noting that the 10-year T-note yield up 1 basis point there. And finally, taking a look at the US dollar index, that is down. So some pressure taking off right there. I'm going to go back and we're going to take a look at the Dow now. We took a look at the Nasdaq 100 before, and we can see some weakness in some of the staples and financials that we've been talking about. But for the most part, seeing some really nice gains here heading into the closing bell.
We're closing out a record day here. As you can see, Dow, S&P, and NASDAQ all closing in the green. Dow up 189 points. S&P, as we shake out the final last trades, S&P up just around 1%. The NASDAQ was a big outperformer. That was the case for most of the trading day, up just around 2.5%. Jared was just going through some of those big tech names moving to the upside. Apple up just around 1.5%. Microsoft, Amazon, both up just around 2%. Facebook and Google, those were big gainers, up just around 3% today. In terms of the sector action, technology, consumer communication services, consumer discretionary, and real estate leading the way today. And then, of course, the Russell 2000, the small cap index, up just around 2%. We want to bring back in Megan Horniman and Chris Retzler to help us break down the action that we've seen not only today, but what we've seen over the last several weeks. And Chris, let me go to you on the Russell 2000, because I know you closely watch the small cap index here, up just around 2% today, up around 18% since the start of the year. Where do you see, I guess, what's fueling that buying? And do you see this momentum carrying forward into the future?
So small caps have certainly had a recovery after a lot of the large cap tech that did very well the last few years. Well, if you break down the Russell, where the strength has been this year has been much more focused on the value names. Energy and financials have recovered quite substantially, while technology has corrected some with the NASDAQ pullback that we saw over the last few weeks on higher interest rates, higher inflation risk. But when I look forward at high growth and areas that we want to be investing in, it continues to be technology. We think that the tech names in the Russell will come back and probably outperform more in the second half over the value names. We think that there's a lot of pent up economic activity, stimulus being put into the market. At this point, tends to take a little while to filter through. But there's also just some major secular growth stories: 5G, infrastructure, communications, electric vehicles, just tremendous amount of opportunity out there. You see semiconductors are sold out. That's a supply issue, not a demand issue. And that's very good for long-term investors, we think, in technology.
Chris, Megan, stand by because Anjali Kamlani is joining us. There's breaking news with Novavax. What have you got, Anjali?
That's correct, Adam. We just learned that Novavax has released their final efficacy results of their COVID-19 vaccine in studies in the UK and South Africa, and that's showing really high efficacy rates. We got 96.4% in the UK with the original strain of COVID-19, as well as 86% against the UK strain, that's the B117, that we know is of concern here in the US and is highly transmissible, as well as an aggregate of 89% in the UK. Moving to South Africa now, that is 55% in non-HIV participants. So that is showing some pretty strong results and kind of on par with what we've seen. Novavax is supposed to be one of those that is of higher efficacy compared to others, but we can't do necessarily an apples to apples comparison to, say, Pfizer and Moderna that saw similar results here in the US, but we did see lower results, from Johnson & Johnson when you looked at the global sort of effect. Right. And so this is important because we know that Novavax is trying to use some of this world data to get approval here in the US.
And we should point out that shares of Novavax closed up almost 9%, and right now after hours they're trading up about 7% on this news. Anjali, thank you. Megan, want to go back to you because a lot of people are concerned about inflation, and you've raised an issue that inflation or the cost of lumber and the items that are needed to build a house, those are going up and could have an impact on the housing market. What warnings would you have for people who are expecting housing to keep going up on that?
So I think there's a couple things that go along with the housing market. There is demand for housing. We've seen that. We see that in a lot of the surveys. But at the end of the day, the inventory is very low. Interest rates have ticked up. They're now above 3%. So affordability has come down. When you look at the higher interest rates, home prices surging, the cost of building a house much higher, there is a risk that you could see some of the housing market slow as we get through the summer months.
Chris, how are you looking at inflation fears? Because they seem to be moderating a bit as you look at the broader market, but what are you anticipating that we'll likely see?
I think we're going to have some moderate inflation near term. A lot of this stimulus is going to be money that's put into various pockets where I just don't think it's going to have a very long-term inflationary impact. What it does is it levers up more debt on the nation, which is unfortunate that it's at this level. I think you'd really like to see more to those that were really impacted, no fault of their own, in those industries that really need help. But I think inflation long term, we were combating deflation for the last 13 years. I just don't think, $1.9 trillion solves the deflationary global situation. So I think it's temporal. And again, I think you look for good quality companies run by good management teams, and that's where you make money long term in the equity markets.
Chris, you've also talked about, and you mentioned it just a minute ago, about 5G being one of those areas where you should look. And yet our parent company, I won't put you on the spot to ask about Verizon, but Verizon got hit today because it went to the credit markets to borrow $36 billion because we're trying to buy, or we are buying, we owe the Treasury Department, those mid-spectrum airwaves. Is the debt load that companies like Verizon or AT&T that they take on to finance the 5G expansion, is that of concern to an investor going forward?
Well, I would say your parent company is a very long-term investor, and that's what they're matching the capital up with. Where we would, as investors, look is, well, where else are they going to spend that money when they put and deploy that spectrum? And that's capital equipment. the towers, the equipment that goes on the towers. Those are areas, again, a lot of semiconductors, radio frequency. All of that is where the dollars are going to be spent. And so as investors, that's what we look to. But again, your company, parent company, great long-term investors, and these are long-term investments. So they're doing the right thing.
Megan, I want to quickly ask you about jobs because we got that jobless claims number out this morning. It was better than what the street was anticipating. We also got that stronger than expected February jobs number. How is the market looking at the jobs market? And I guess how big of a worry is it that before this, the latest numbers that we've seen, we saw a pretty significant slowdown?
I think a lot of that had to do with the fact that there was still a big portion of the country that was in lockdown. But you're seeing very rapidly more and more states and counties opening up. So this should definitely help the labor market going forward. You're seeing it better with the jobless claims. You're seeing it better with the continuing claims. You're seeing it better even with the job openings that we saw today. So all we need to do is get the economy open. We have the fix for that. It's the vaccine. I would mention, we talked about the stimulus package. I wish that there was a little bit more in the stimulus package to actually get the vaccine out and moving in the economy, because that is the fix. If we get things reopened, the job market will gradually heal, and that is the what will lead to the multi-year acceleration that we believe we're going to see in economic growth.
Megan Horniman is Director of Portfolio Strategy at Verdance Capital Advisors. Chris Stretzler, Needham Small Cap Growth Fund Portfolio Manager. Thank you both for joining us. When we come back, South Korean e-commerce giant Coupang surges in its U.S. public debut today. One of its early investors will join us on whether it'll become the next big rival to Amazon.
Coupang, the South Korean e-commerce giant, making its public debut today, shares soaring in its first day of trading, hitting a high earlier today of $69 a share. You can see it closing up 41% at $49.52. We want to talk more about this with Eric Kim, co-founder and managing partner at Goodwater Capital. And Eric, great to speak with you. I know Goodwater did a deep dive into Coupang's business. Before Goodwater, you were with Maverick, an early investor in Coupang. You were also a board member. So you've been involved now for quite some time in this company. What do you think of today's massive IPO?
Well, first, it's a huge congratulations to the team that has worked so hard for this day, but it's really just the beginning. If you look at the South Korea market, it's a $500 billion market opportunity. And while Coupang did $12 billion last year in net revenue, it's nothing to sneeze at, and they grew 90%. There's still a large market opportunity ahead of them here going into the 2021 and beyond years.
So when you say that their mobile-centric and customer-oriented approach allows it to out-innovate Amazon or Alibaba, what does that really mean?
Yeah, so on our website, goodwatercap.com, there's a lot more charts and details about the company. I think one of the most interesting things as you compare it to Amazon and Alibaba, some these other household names that people may know better at this point, is that if you take their model, they actually don't really match up that well versus what Coupang has done. So in the United States, for example, we're excited if we get next day or 2-day delivery, and we're ecstatic if it comes on time. That's a great experience for us here. In South Korea, with Coupang's model, they've really innovated to a whole nother level. You can order by midnight, 12 a.m., and get things delivered by 7 a.m. the very next morning. They call it dawn delivery. You can also order things same day, and they'll get to you by the evening as well. So this rapid delivery service is giving customers a very unique experience that the rest of the world hasn't actually seen yet. And if you think about why is this possible? Why is this possible in South Korea, a country with a population of 50 million plus, the 12th largest economy in the world? Part of it has to do with not just the IT infrastructure, 95% of people have smartphones in South Korea, but also the density. It's one of the most urban countries in the world itself. And so Coupang has taken advantage of this with their innovation to now create one of the most innovative, what we would call innovative, e-commerce models around the world, just with regards to how quickly they can get goods and services to the end customer here.
Eric, that dawn delivery almost sounds too good to be true. But then that, of course, begs the question, so it works in South Korea, but what about outside? If you're looking to expand internationally, is this type of business model, is it going to work, and is it going to be as effective in other countries?
It's a great question. I think Baum earlier today gave an interview where he talked about the razor focus in South Korea. And obviously there's lots of greenfield opportunity outside of South Korea as well. But if you think about just the South Korean opportunity, again, they did $12 billion last year in revenue. They can 42x that with the market opportunity they have ahead of them. The e-commerce opportunity in South Korea today is about $130 billion. And I think of note, Coupang recently went into fresh grocery delivery. It's called Rocket Fresh, as well as Coupang Eats, or what you might call the Uber Eats equivalent in South Korea. And so those two categories they've expanded into have effectively 2 to 3x their market opportunity today that they're pursuing. So though they have 24% market share of the e-commerce segment of the market today, there's a huge, huge opportunity ahead of them, which I think will keep the company continue to be very, very focused on the South Korean market alone. Now, can this model work elsewhere? It's still a great question. I think that it is one of the most innovative components to it, and it's not just the density in the IT infrastructure. If you look at the Coupang team, what they talked about in their S1, they have artificial intelligence experts, they have ML data scientists, and so they have a really, really sophisticated team that has allowed them to build the IT infrastructure that allows them to dominate the South Korean market, and then we'll see where it goes from there.
So that expression, if you can't beat them, join them. Why even bother to compete? The questions that some people are asking about the United States, when, like California, is essentially the same population as South Korea. Could they partner with the existing platforms in the United States and use their technology, sell it, or partner with an Amazon and make money that way? Is that anything that they would ever consider or look at doing?
It's a great question. To your first point, why even bother to compete? I just want to point to one historical really interesting factoid that in, I think, 2009, eBay actually bought a South Korean company called Gmarket and was one of the market leaders in e-commerce in South Korea for a long time until Coupang came along. And recently, I believe it's been rumored that at least that Gmarket has been put on the block to be sold in the press. And so I think there's an element of Coupang's dominance being really on display in South Korea up until this point. Around your question, whether a state like California, this is my home state. Certainly, this is where we've had our three kids born and raised, and so I think it's an interesting question. If you think about the infrastructure that's required for a civic, an economy and a democracy to blossom, in some ways, being able to work with private enterprises is really, really necessary because companies like Coupang or Amazon are creating the rails through which food delivery is happening. Education could happen, financial services, healthcare, all these basic components of what is required to run a democracy, actually private companies are engaging with as well. And so you could wait for the government to save you. I don't know if it will, but if you can partner with private companies, if private companies can have the ability to impact society and citizens with their goods and services, I think that is where you actually have an enormous amount of change. And that's why at Goodwater, we only invest in consumer internet companies and technologies because of that impact that is possible. So I don't know if that's a partnership, but I do think these companies are really focused on how they serve citizens and customers in an even better way over time.
Eric Kim, great to speak with you. Goodwater Capital's co-founder and managing partner. We'll be right back.
So on this year anniversary since the WHO declared a global pandemic, we've been talking to different businesses, how they got through it. And we invite into the stream now Ben Midgley, the Crunch franchise CEO, and it's good to have you here. Good to see you again. You operate in more than, I think, 40 states. How did you manage to keep operating? Because it was different in each of the states.
Sure. Yeah. Nice to see you again, Adam. It was very tricky. I don't want to sugarcoat it. We've had different restrictions in different states that we've had to work with, as I'm sure you know, in talking to all the businesses that you talk to. So, some states were closed for 6 to 9 months. Other states had capacity limitations or restricting different activities, such as group fitness or childcare, and then of course you had to put all these different processes in place, whether it's temperature checking or air filtration, sanitizing stations. So it's been a bit tricky, but our network really has done what I would say an amazing job in very challenging circumstances. And we've actually grown our membership over the last year. So very fortunate there.
Yeah, Ben, talking about growing your membership, I saw that it's up 4% at a time when a lot of your competitors are just trying to get back to the levels that they saw pre-pandemic. What do you attribute this to?
Well, a couple things. I mean, Crunch as a brand has been around for 30 years, so our members are really committed to us, and we've got to give a big thank you to them. They're the reason we're here. So our owners took this situation obviously incredibly seriously, as all business owners did across the country, and they wanted to do everything they could to make sure members felt safe and comfortable. So they did everything they could very quickly. We did a lot of communication with our members. We stopped billing exactly when we should have, credited anybody who got billed an accident. We had a 40-page readiness plan ready for the network just a few weeks into the pandemic. So as an organization, I think, fortunately, we were ahead of that compared to some of our industry counterparts, and that gave us a big advantage coming out the other side. I think we felt a little more prepared that way, even though we were working with challenging and sometimes changing information. So, pat ourselves on the back. They did well.
The different stimulus and relief bills that Congress has passed, were you able to assist the different business owners in accessing available assistance?
That was a big help. The PPP loans, and they also had another loan, disaster relief, called the EIDL loan. The qualifications changed a little bit with EIDL. They had a higher cap at one point, and then they reduced that, so that was a bit challenging. But the benefit of the PPPs can't be underestimated for the franchisees. Certainly there's a lot of record keeping in that, and there was some ratio issues with how much you had to go to payroll versus rent, so it made it a little bit challenging to keep up with your bills. But the franchisees took advantage of that. There's another round coming out now. And then, of course, they all spent a lot of time working with their landlords for potential rent abatements or adjustments to their leases, and as well as other creditors. And overall, I'd say, though it wasn't perfect, everybody worked pretty well together to help get us through.
Ben Midgley, Crunch franchise CEO. I know people talk about the COVID-19. I stepped on the scale this morning. It's actually 11. So I think I need to be looking at some memberships. All the best to you.
Bad.
We're going to go back to Jared for more market issues. Jared.
Yeah, we got some earnings to talk about. DocuSign and Ulta Beauty. We're going to tackle Ulta first because we got a change at the top. Mary Dillon stepping down as CEO. Dave Kimball, he's president. He's going to step in. And we also got their earnings. And it was a disappointment on the full year forecast. But I do want to go to the fourth quarter results first. So we have adjusted EPS beating at 37 cents versus estimates of 22 cents. Loss per share of 38 cents versus loss per share of 26 cents 1 year ago. So that's the GAAP number. Then we have revenue of $430.9 million. That's up 57% year over year. This was an early COVID play. The estimate was for lower at $407.4 million. So nice beat there. Billings up as well, 46%, with a nice beat at $534.9 million. And finally, free cash flow for the quarter ending at $44 million. And here's that full year forecast that caused a little bit of consternation perhaps for the stock. And we see net revenue for $7.2 billion to $7.3 billion. Estimate was for a little bit higher. And they're seeing EPS 8.85. That's $8.85 to $9.30. Whereas the estimate was for much higher, coming in at 10.51. That's $10.51. I do have some commentary from the CEO, the outgoing CEO. We are encouraged by the momentum we are seeing in store traffic trends. Although our visibility as to when demand will fully recover is limited, we are confident our business will continue to strengthen in fiscal 2021 as COVID-19 vaccines become more accessible. Also, one final stat here, merchandise inventories. They ended the year at $1.2 billion compared to $1.3 billion year earlier. So now on to DocuSign. That stock down 1.8% in after-hours trading. Now, it was a beat on their fourth quarter results, adjusted EPS coming in at 37 cents versus 12 cents a year ago, and the estimate was for lower, 22 cents, so a nice beat there. Revenue, $430.9 million. That's up 57% and is higher than the estimate of $407.4 million. And finally, billings, $534.9 million. That's up 46% year over year, and the estimate was for lower at $519.4 million. And then we have their first quarter forecast. They're seeing revenue of $432 to $436 million. That is higher than the $419 million estimate. And also their 2022 full year forecast. They are seeing revenue of $1.96 to $1.97 billion. The estimate was for $1.88 billion, so another beat right there. And we'll just take a quick look at this stock. This was actually what I meant to say was the early COVID play. You can see it's been kind of choppy over the last 6 months. You take a look at the 1 year, up 200%. Well, I want you guys to stay tuned for a special on the Biden presidency, the first 100 days. We're going to bring it to you live in just 2 minutes.
This is a Yahoo Finance special, the Biden presidency, the first 100 days. The new White House moving quickly to reverse Trump policies, Biden signing a slew of executive orders and pushing ambitious plans in Congress. We'll examine the key issues from climate change to taxes. The challenges for the new administration and the country are as urgent as they are great. The top priorities, COVID, jobs, and the economy. Biden and Harris also under pressure to deliver on a long list of election promises, including healthcare, education, immigration, foreign policy, climate change, and police reform. An effective majority in Congress may speed the plow, but the way forward isn't certain. Join us now for this Yahoo Finance special, the Biden presidency, the first 100 days.
Welcome to Yahoo Finance's special presentation, The Biden Presidency, the first 100 days. I'm Shauna Smith.
And I'm Adam Shapiro. It has been exactly 1 year since the coronavirus was declared a global pandemic and 50 days since Joe Biden assumed the presidency. So tonight, we will focus on both milestones, just a few hours after the $1.9 trillion economic relief bill was signed into law.
We're going to be covering it all in the next hour, including a preview of tonight's primetime address from the president. But let's start with a look back at Biden's first 50 days in office. And for that, Jessica Smith is here with more. Jess?
Hey, Shauna, since our last special looking at the first 25 days of the Biden presidency, a lot has happened. From President Biden's first known use of military force with airstrikes in Syria to the rise in unaccompanied minors at the border. But the pandemic is still front and center. And with today's relief package signing, the administration says it's taking a big step in getting the economy and the health of the nation back on track.
The motion is adopted.
The first 50 days brought President Joe Biden his first big legislative victory, his $1.9 trillion American Rescue Plan.
There is light at the end of this dark tunnel in the past year.
Democrats managed to pass the relief package without a single Republican vote. It took last-minute negotiations over jobless aid with moderate Senator Joe Manchin, but ultimately, Democrats prevailed.
Now, nobody said passing one of the largest, perhaps the most significant bill to help the poor and working people in decades was going to be easy, particularly with 50 votes. But it is done.
The bill includes state and local aid, $1,400 checks for most Americans, an expanded child tax credit, enhanced unemployment benefits, and more money for schools, small businesses, and vaccinations. Republicans say the bill should have been more targeted, and they bash it as a Democratic wish list.
This is a classic example of big government Democratic overreach in the name of COVID relief. I think this is actually one of the worst pieces of legislation I've seen pass here in the time I've been in the Senate.
But the president and progressives did not get everything they wanted. The Senate stripped the minimum wage hike from the package, tightened the eligibility for stimulus checks, and reduced the weekly boost to unemployment benefits.
It's not perfect. There's still work to be done, but it will make a huge difference. It's one of the reasons I'm quite optimistic about the chances for a relatively quick bounce back.
That bounce back still depends on beating the virus. And at the halfway mark, the administration is ahead of its goal of 100 million shots in 100 days. With 3 different vaccines now available, the U.S. is averaging 2 million shots per day, and the administration expects to have enough supply to vaccinate every American adult by May.
That's progress, important progress.
The president is still waiting on the Senate to confirm some key members of his cabinet, including the U.S. Trade Rep, Small Business Administrator, and the Labor Secretary. Senators rejected Neera Tanden, his first choice for OMB director. She withdrew from consideration when it became clear she did not have the votes.
The president's looking forward to finding a place for her in the administration.
The president continues to flex his executive authority, signing more executive actions than any of the last 3 presidents did in their first 50 days.
It is clear that President Biden wants to do more with the legislature. It is more a question of whether the legislature will engage with him, at least in terms of the opposition party, or whether they choose to be obstructionists on every policy.
The next big policy push is already in focus. Before the rescue bill made it through Congress, President Biden was looking ahead to an infrastructure package.
It's not only creates jobs, but it makes us a hell of a lot more competitive around the world if we have the best infrastructure in the world.
He's met with Republican and Democratic lawmakers, as well as labor leaders and CEOs, to talk about what an infrastructure plan might look like. Whether or not these talks will lead to compromise remains to be seen.
Another big legislative push will be focused on competition with China. Senate Majority Leader Chuck Schumer has directed the Senate to craft a bill that aims to establish U.S. dominance in areas like AI and 5G while strengthening U.S. supply chains. Adam and Shauna.
All right, Jess, stick around because we're going to bring into the stream Julian Castro. He is the former Secretary of Housing and Urban Development under President Obama, and he ran for president himself in 2020. Secretary Castro, thank you for joining us.
Great to be with you.
Want to start with a very basic question. We know we will hear from the president later on about the historic relief plan that has been passed. So what's next? Should the administration move on to infrastructure?
Well, I have no doubt that that the administration is going to continue to work on delivering on its promises to the American people. Look, the first 50 or so days of this administration have been a huge victory for Americans of all stripes, but particularly for the middle class and the poor, with the American Rescue Plan that already has saved tens of thousands of jobs. I'm sure you all have reported that companies like American Airlines that were going to furlough more than 20,000 workers are now saying they're going to preserve those jobs intact. The fact that we have people who are getting the vaccine today that would not be getting it if we were still under the slow vaccine distribution of the previous administration. So on the two things that people care about the most right now, their health and their jobs, their economic situation, this administration has done tremendously well in delivering. Infrastructure would be the next, I think, logical investment to make. During the campaign, Joe Biden had a $1 trillion infrastructure plan. Traditionally, infrastructure had been a very bipartisan issue. That's faced headwinds in the last few years, but perhaps there's the ability to make a big investment that will put thousands and thousands of Americans to work doing great infrastructure projects that need to be done in communities across the United States, big and small. My hope is that, that we're actually going to get to see some Republicans get on board this time, unlike what we saw with the American Rescue Plan.
Secretary, I wanted to ask you about that because bipartisanship, we know that that is extremely important to President Biden. That's been the case since day one of his presidency. What do you think needs to happen, or why do you think there's been this breakdown? And we have the $1.9 trillion package with absolutely no support from Republicans.
Well, look, if there's somebody who can bring about the kind of bipartisanship that I think a lot of Americans do want, it's Joe Biden. He had 36 years of experience in the Senate. He knows how Congress works. He has strong relationships with a number of key Republicans on the other side of the aisle. I think, though, that it's clear you have a Republican Party who has decided that its best strategy is to focus on culture wars, to focus on Dr. Seuss, to focus on Pepe Le Pew, to try and distract their base from the fact that Joe Biden and the Democrats are delivering on saving American jobs. They're actually demonstrating competence in getting this vaccine out so that we can have a healthier America and get past this pandemic. I don't think the problem is with Joe Biden and the Democrats. I think the issue here truly is with a party that thinks that its best play for the next election is to say no and, to be the party of no. How do you change that? I think that Republicans, the voters in that party, have to push their leadership to change. With the American Rescue Plan, poll after poll showed that even a significant number of Republicans, just everyday Republicans, supported that legislation. And still, not even one single congressional Republican voted for it. That's amazing. That's a challenge they're going to have to solve, or else I think they're going to feel the effect of that. They're going to get wiped out in 2022 and beyond.
I want to switch gears and talk about the situation in Texas. We're seeing the state open up again, mask mandates coming to an end. What are your concerns as you look at the state right now? And what are you hearing from people on the ground in Texas about these decisions?
There's a lot of confusion and a lot of worry here. A number of the biggest businesses in Texas have made a decision to keep a mask mandate. Grocery stores, for instance, that operate here in Texas that have had a mask requirement in place for their customers have decided to keep it in place despite Governor Abbott's decision to lift that mask mandate. Look, a year ago, almost a year ago, in May of 2020, the governor admitted that he made a mistake in opening up bars too soon, and he reversed himself. At that time, Texas had about 5,000 new corona cases every day. Today, we have closer to 7,000, 7,500 cases per day. Within the last 2 weeks, Texas led the nation in the number of new coronavirus cases. So if it was a mistake to open everything up last May, it's an even bigger mistake to open up now, and to do so in conjunction with lifting the mask mandate instead of staggering those two things is a double mistake. I believe that we're going to see the effect of that with more hospitalizations and unfortunately more deaths. It's irresponsible. We know that we can see the light already at the end of the tunnel, that the vaccine distribution the Biden administration is leading is being effective. And so I think the governor should have just asked for a little bit more patience. And you know what? Texans are willing to do that.
Texans may be willing to do that, but some of them are getting $16,000 utility bills. What do you think the fallout will be from the catastrophe of the grid failing in Texas? Would that be the kind of issue that would allow Democrats to finally turn that state blue?
I think the distinction that it draws is between competence and incompetence, and people who are serving well-to-do corporate interests and those who are really concerned about everyday ratepayers in the state. The grid failed in 2011, so 10 years, and these Republicans in charge of the state had 10 years to require that improvements be made so that we wouldn't see the same thing again. Not only did we see that, we saw it even worse. And now ratepayers are getting stuck with these outrageous energy bills, thousands and thousands of dollars that many people are going to owe. A lot of folks are angry. They're demanding changes. I think we're going to see, a lot of changes at ERCOT. We're going to see a lot of changes at the Public Utility Commission. We're going to see legislation probably trying to address these outrageous overcharges. At the end of the day, though, I don't think that it's lost on Texans that Republicans in this state had an opportunity to fix this, to do something about it, and they utterly failed because they were more interested in serving these big energy interests that fund their campaigns instead of protecting ratepayers. That does provide an opportunity for Democrats to offer a message of competence, and also that, hey, look, we're standing up for everyday hardworking Texans. Not big energy companies that are contributing to our campaigns.
President Biden has said that he wants to fight housing discrimination, and that is going to be one of his big priorities. Where would you say that the new housing secretary needs to start on this?
Yeah, I was excited to see Secretary Fudge confirmed yesterday. She has a wealth of experience when it comes to understanding America's housing needs. She's worked on these issues for a long time. She understands that we need to invest in fair housing. At HUD itself, we need to expand the staff, the number of people who are working on fair housing. There was an analysis a few years ago that showed that HUD was something like 500 staffers behind in terms of meeting the caseload on fair housing. So I expect that there will be a request for more resources for fair housing at HUD, also supporting organizations that do fair housing work on the ground. And very importantly, the administration has already done two things. It signaled that it's going to bring back affirmatively furthering fair housing, which holds communities that get federal taxpayers from HUD more accountable for ensuring that there's equal housing opportunity throughout their jurisdiction, and protecting the LGBTQ community when they go into the market for an apartment or a home, or someone from the community presents themselves at a shelter, that they're going to be treated fairly. They're delivering a message that everyone counts in this country.
Secretary Castro, always great to have you on Yahoo Finance. Thanks so much for taking the time to join us this afternoon. Coming up, some of the finer points of the economic relief bill for your taxes and also food supply. Former Agriculture Secretary Ann Veneman joins us next.
Welcome back. We're here with Rick Newman, who has been digging through the 628-page economic relief bill that President Biden signed into law this afternoon. Rick, there's a lot of things that jump out, but one thing that seems to be getting a great deal of attention are the child tax credits, which some people are referring to as a return to kind of FDR New Deal type of policies. What do you say?
Yeah, when you put it all together, the big picture is actually a pretty progressive agenda by Joe Biden and the Democrats who put this bill together. So there are four major components in this bill that you could call tax items or tax breaks. There are two that involve kids. So working families and people with kids, they're going to get larger child-related tax breaks than they did before. There's an expansion of the earned income tax credit for lower income people. And then the economic impact payments, the stimulus checks, those technically are a tax credit. And the Tax Policy Center has done some analysis and found that if you add those four items together, the average tax savings for a household in 2021 is going to be about $3,000. That's a big number. And for comparison, the average household saved only $1,600 from the Trump tax cuts that President Trump signed at the end of 2017. Even if you don't count the stimulus payments as a tax cut, the average household is still going to save $700 from those three other tax cuts. And they are heavily weighted, completely opposite of the Trump tax cuts. They are heavily weighted toward middle income families and below, which is everybody making, let's say, $80,000 and below. And there are also a couple of important expansions of the Affordable Care Act in there that is going to help more people get insurance they can perhaps afford to pay for. So, this is what Joe Biden is trying to do. And the scale of this bill is bigger than I expected at the outset of the process here. And I think Democrats are pretty happy with it.
I think it's bigger than many people had expected that we would see here. But Rick, stick with us because we want to continue this conversation, talk about some of these tax credits, specifically the child tax credit, and also the fact that this $1.9 trillion stimulus deal also provides food security for families. For that, we want to bring in Ann Veneman for more. She's a former executive director for UNICEF, also served as the Secretary of Agriculture under George W. Bush. And Secretary, it's great to have you on the program here. I know you recently wrote in an op-ed that addressing hunger and poor nutrition, that needs to be a priority for this administration. The $1.9 trillion package is a step in the right direction, but what else do you think needs to be done, and what would you like to see done over the next 4 years?
Well, I think one of the things that we have seen with this, the COVID pandemic, is the number of people who have been standing in line to try to get food in food banks, people that have never had to do this before. And I think that the Department of Agriculture has been quite responsive, expanding the school lunch programs, even when the children have not been going to school in person. They've allowed for pickup of school lunches and so forth. The food stamp program, or SNAP as we call it, the Supplemental Nutrition Assistance Program, has been expanded. And as well, there is additional money in the COVID relief bill that was signed today, both for SNAP and for the WIC program. So I think that the hunger issues are things that we have to address, particularly in this time of COVID, because the pandemic really has led to a hunger crisis, not just in this country, but all around the world.
Secretary, another agenda of the Biden administration that is coming into law is the Emergency Relief for Farmers of Color Act, which will forgive 120% of the value of loans from the USDA. So essentially, why is this important for the government to do this at this moment in history? Because it's coming under criticism from a lot of people on the right side of the political spectrum.
Well, I think it is important to address the issues of minority farmers who traditionally have had a more difficult time accessing USDA programs, accessing financing for agricultural production, and generally it has not been that easy for minority farmers, and this will help to address some of the
difficulties that they've had over the years. A lot of them have already sold their land or dropped out of the agriculture business because of the difficulties, but I think this will go a long way in helping those that are still farming as we know it.
And I wonder if you could give us an overview of how farmers are doing in the United States, if you happen to have a good idea of that. The Trump tariffs, especially with regard to exports to China, food exports to China, they did hurt farmers. There was a lot of bailout money for farmers, and now those exports seem to have picked up again, even though the tariffs are still in place. Are American farmers doing fine once again, or are they in a hole?
Well, I think a couple of things have happened over the last few years. One is that the trade has been very uneven. As you said, we had the difficulties with China brought on by some of the actions of the previous administration. Some of those exports are starting to pick up again, and that's very hopeful for the farmer. But more and more of the income of the farmer was coming from the government with these bailouts and so forth. The farmers also had a difficult time, some of them, because about 50% of our food was going through the out-of-home consumption. And so farmers that were selling directly to the restaurant industry or to the entertainment industry or to cruise ships or to the Disneylands of the world, those farmers had to redirect, and the food supply chain had to be redirected. And so I think that our supply chain has actually really made the adjustments quite quickly, but farmers have been challenged by these times.
I wonder if I could just follow up with you on the political parties in rural areas. Around the time when you were in the George W. Bush administration, Democrats actually had pretty good standing in rural areas. There was a time maybe 15 years ago when rural areas split around 50-50, Democrat and Republican. And of course, it's an article of faith now that Republicans dominate in rural areas. Do you think there's any chance that's likely to change in the foreseeable future?
Well, you know, it's always been looked at. The agriculture industry and the food issues have always been very bipartisan. And we've worked with the Congress in a very bipartisan way, traditionally on farm bills, on food assistance programs. And it's always been thought of as one of the more bipartisan areas, and one of the areas that the Congress has been able to work really in unison on so many issues. And so it's disappointing now to see more partisanship coming into the discussions around these critical issues, because it really is critical that people have enough to eat. It's basic to, you know, I mean, survival. And it's certainly not only important that we have food security, but we also have to think about nutrition security. And I know that Secretary Vilsack, who has come back for his second time as Secretary of the Department, is going to focus on nutrition security. He's already started talking about it, and we really have to think about that as we go forward.
We appreciate your joining us, former Secretary of Agriculture Ann Veneman, and it's always good to see you, Rick Newman. Straight ahead, our interview with New York Congresswoman Carolyn Maloney as we get her take on the historic stimulus bill and 1 year of living in a global pandemic.
Welcome back. Earlier, we spoke with Carolyn Maloney, the New York Congresswoman and chair of the House Oversight Committee. She voted for the passage of the American Rescue Plan yesterday. Now, here's what she had to say about that $1.9 trillion deal.
I am absolutely proud to support it and proud that the Democratic leadership under President Biden was able to deliver it to the American people in just 50 days. Knowing Congress, Shauna, this is an extraordinary accomplishment, and it's bringing relief to cities and states, which was the area that I oversaw it in the Oversight Committee, over $360 billion going in much needed states and cities and localities to help people.
Congresswoman, it's Adam. It's good to see you. And there's so much that's happened in the last year. I want to go back to March 11th, 2020, when the Oversight Committee and your chair held that hearing with Dr. Fauci.
Is the worst yet to come, Dr. Fauci?
Yes, it is.
Can you elaborate?
Well, whenever you have an outbreak that you can start seeing community spread, which means by definition that you don't know what the index case is, and the way you can approach it is by contact tracing. When you have enough of that, then it becomes a situation where you're not going to be able to effectively and efficiently contain it.
Looking back, do you reflect on that moment, that hearing?
It was, in my opinion, the Oversight Committee at its best. Our job is to bring the truth to the American people. And we were being told by our presidents and others in the administration that he was giving a very rosy picture of it. It's just the flu. And Dr. Fauci spoke the truth to the American people. I asked him to elaborate, and he said that our testing system was failing, that South Korea was testing far more people than we were with a fraction of our population. He was saying it's not the flu. He said that it had 10 times the chance of dying. He said some were estimating as many as 200 million could die, which was astonishing to us at the time. But now we know it's been over 500,000. And he spoke the truth about the crisis that we were confronting. It had a huge impact on the media that reported it as such. The New York Times went on television, the major reporter Baker, and said it was a turning point. Time magazine called it. And we had a reaction in the community where we started closing down our schools, our businesses, wearing our mask, and he told us to stay home and that we had to combat this crisis by really quarantining ourselves. He was the first one to say that, and it was astonishing. But it went out to the public, and people reacted to it and started following the advice of America's doctor.
Well, Congresswoman, as we sit here 12 months later, now 50 days into President Biden's administration, what is your thoughts on how the Biden administration has addressed COVID and some of the policies that have been enacted over the last couple of months?
Well, he has centralized the response as well as it should be. We had governors competing against governors for basic supplies and personnel equipment. He has centralized the distribution of the doses of vaccines, which we need. We are in a race against the virus. The virus is winning. The only way we win is to get out in front of it and vaccinate all of our people. He keeps announcing how many doses he's now able to get out to the American people. It can't come fast enough. The bill we just passed has $20 billion in it for vaccines, supplies, personnel to get out to our community. We need to vaccinate our people as quickly as possible. He's leading us in that direction, but he's also confronting the second crisis, the economic crisis we confront. We have to rebuild our cities better and our states, many of whom are reeling from the impact of the pandemic. Instead of firing all of our essential workers, we are now going to be able to keep them serving the American people as we recover from the virus.
You know, what's perplexing is that the states that lost the greatest amount of tax revenue in the last year, among them are some of the strongest Republican states in the country. And so when you talk about rebuilding, Republicans were not partners in the American Relief Act, What about infrastructure? We know that's on the agenda. Will they come to the table? Will Democrats and Republicans work together on the next round of rebuilding the economy in the country?
I would say that Republicans across the country supported the American Relief Plan. My committee was reaching out to all the cities and working with them on the aid package. And the cities' Republican leadership, not only elected, but in the communities, supported the American Relief Act. They're on the ground. They need the support. They were calling for it. I hope the Republicans that are elected would listen to the people they represent. Not a single elected Republican voted for this desperately needed package to confront the virus, to conquer it, and then rebuild our economy. It's an incredibly important piece of legislation. I'm so proud of being able to move it and be part of the team that delivered it to the American people in just 50 days. And I think we need the infrastructure package. I hope that Republicans will join us, but I can tell you the Republicans across the country, I believe, are going to support it. Every American knows that we need to invest in our infrastructure for our productivity, for our economy, and it creates good jobs. We used to have the best infrastructure in the world. We now have a crumbling one. We need to invest in it. I can't wait to go to work on it, and I hope President Biden can lead us quickly to bring it to the American people.
Congresswoman, I want to ask you a little bit more about that bipartisan part of the question, because we know President Biden, he talked about unity, he talked about the importance of bipartisanship really from day one and even on the campaign trail. What do you think needs to be done just on a broader scale for Republicans and Democrats to come together in order to reach some deals where both sides are supportive in the future over the next 4 years?
Well, I truly believe that the best legislation is always bipartisan. And if anyone can lead us in that direction, President Biden can. He's friends with everybody. He's worked in this institution, in this government on many different levels his whole life, and he's very well liked. But if they won't work with you, you have to proceed. He said, I want to work on the relief package with the Republicans. They responded with a $600 million plan that did not even include cities and states and did not include infrastructure and mass transit or healthcare. And it was ridiculous. Instead of trying to work with someone who's not honestly trying to work with you, he has moved forward on his own. And I support that. I think he made the right decision. We have to act quickly to combat this crisis in the economy and the virus. He will continue to try to work across the aisle because that's who he is. I don't think it particularly helped him in the election because a lot of people are very partisan, but he has a history of working across the aisle. He knows how to do it. He's respected. He's honest. He wants to, but you can't do it alone. They have to cooperate. And so far, they haven't cooperated. Even though, as I tell you, I have hundreds of letters from electeds and community leaders supporting the American Relief Plan that were Republican and Democrat together saying, we need this help, get it to us, give us the vaccines. I think what he's done with the vaccines is absolutely remarkable. Every day they're trying to produce more and more and get them out to the people. I know because I struggle every day to get vaccines to the people that are desperately waiting for them. And it's so important. They have prioritized the needs of the country. They're moving forward quickly. And as you know, because you've covered government, it's hard to make things happen. People think we're passing bills right and left. It's very hard to get that fragile flower called consensus and get it across the finish line.
So Adam, we heard the Congresswoman talk about the need to work together. She was pretty optimistic when it comes to possible future bipartisanship, but I think that remains to be seen. And of course, the big question is whether or not infrastructure maybe could be the thing where we see Democrats and Republicans come together and work together to reach a deal.
You would think, especially since they love to spend money in Washington, D.C., but every administration promises a major infrastructure bill. And I can remember, Shauna, being there on Capitol Hill in 2017, waiting for Infrastructure Week and the $1 trillion infrastructure package, and we're still waiting. So don't hold your breath. There'll be something, but let's see what happens. All right, when we come back, we'll be joined by Dr. Ezekiel Emanuel, who was President Obama's health policy advisor, and also is the brother of former White House Chief of Staff Rahm Emanuel. That's in 2 minutes. And welcome back to Yahoo Finance Live. We're joined right now by Anjali Kemlani and Dr. Ezekiel Emanuel is going to join us in a second. But first, Anjali, got to ask you, where do we stand in regards to vaccine distribution? Everyone keeps saying there's lots of demand. What's going on with the supply?
Well, the supply is ramping up. We know that the administration has prioritized that and has talked about on a weekly basis, giving us updates on their delivery and the fact that we're expecting even more to come out in the coming weeks as the Defense Production Act and as federal persons have helped these companies really start up and get access to all the supplies and equipment that are necessary. We know we heard about, increased purchases of doses, and we heard President Joe Biden just say recently that all Americans will have access to vaccines by May. And we know some experts are thinking that the general public should get access by the middle of next month.
Anjali Kemlani, thanks so much for that update. We want to continue the conversation, and for that, we want to bring in Dr. Zeke Emanuel. He's an oncologist, President Obama's health policy advisor. Now he's a senior fellow at the Center for American Progress. And Dr. Emanuel, it's great to have you back on Yahoo Finance. Thanks for taking the time to join us again. You were an advisor to President Biden's transition team on COVID. I'm curious to get your thoughts now that we're 50 days into his presidency. What do you think of the administration's efforts so far?
Oh, I think they've done an excellent job. I don't agree with every single decision, but I think everyone has to say, look at where Trump was. He promised us all these millions of people would get vaccinated. He didn't succeed. President Biden said 100 million people would, or doses would be delivered in 100 days. And he's going to way exceed that level. And so I think he's done an excellent job. And probably, as you say, by the middle of next month, May 1st, anyone who wants a vaccine will be able to get a vaccine. If we continue on the current path of about 2 million vaccinations a day, we get to 70% of the American population vaccinated by the middle of July. That's a major, major accomplishment.
Dr. Emanuel, why do we let the states, the 50 states, have control over the distribution of the vaccine as opposed to a one shot or one size fit all from the federal government?
It's really, really good question. It's a sort of vestige of federalism, but I think it has proven to be less than effective to do it that way. We have, as you know, a patchwork system, different states allowing different people to get vaccine. For example, New York has now brought the age down to 60. I can tell you in Philadelphia at the University, I'm at the University of Pennsylvania, so I know Philadelphia well. It's still 65 and above, just came down from 75 to 65. This is a very bad way to communicate. And bad way to do it. We really need to have much more central structure. As a matter of fact, a colleague of mine was arguing for states doing it individually. I said, no, we need a more national structure. This was 2 months ago. He just today wrote me an email, says, I think you're right. We should have had a more unified structure, unified message. We could have gotten everyone together, and we wouldn't have this problem of people feeling like, if I were in New York, I'd already be vaccinated, or whatever. If I were in Alaska, I'd already be vaccinated. It also means that over time we can get the infrastructure to each state much more upgraded uniformly if we do it more centrally and don't leave it to each individual state.
Dr. Emanuel, Anjali here. I feel like some of these criticisms are what we heard in the aftermath of the flu pandemic. So it'll be interesting to see how we move forward from this pandemic and the learnings. But I want to turn really quickly to the treatments and testing side, because that continues to also be sort of an obstacle. There are no really blockbuster treatments, and testing continues to be a struggle, especially for at-home or rapid testing, where we see, around the world, there is a lot more progress there. What should we be expecting now from the Biden administration, and are they up to par?
Well, I think actually I totally agree with you that on the therapeutic side, we have done quite poorly. I wouldn't agree with you that we don't have anything. The British did show that dexamethasone makes a huge difference in reducing mortality. That was a study they did in just a few weeks. We've also seen some of these monoclonal antibodies. But the real kind of therapeutic we need is an oral therapeutic or a spray into the nose therapeutic that can be done in the outpatient setting that would reduce the chance of hospitalization. And the sad fact is the NIH has not prioritized that kind of research. That's the first problem. The second problem is, how did we get so many vaccine producers in and get them to rush? Well, one of the things we did is to do these advanced purchase agreements. If your vaccine works, we're going to buy so much, so that people knew, manufacturers knew that they would have a guaranteed market. That changes the incentive structure. And I don't think we use that in the same way for all the for therapeutics, especially, again, scalable oral or outpatient therapeutics. We did, monoclonal antibodies, but those are very hard to scale because they're very hard to produce on a mass scale. They require healthcare workers to administer them. It's just not an optimal treatment for a disease that's, affected tens of millions of Americans. We have not done a great job on those things. I totally agree with you.
Dr. Emanuel, you just talked about centralizing this kind of response. We had that, say, in, I think it was 2014 to the Ebola scare, but then we dismantled some of the protocols we had in place to protect the country from pandemics. Now those assumably will be reinstituted, but what guarantee do we have that a future administration won't ditch them?
Oh, we don't have any guarantee. When President Trump took over, I talked with him and briefed him. He called me and I went in and briefed him. And I said, among other things, pandemic is a worry. You need a global health person. And I recommended to him Admiral Zimmer, who headed the president's malaria initiative and did a terrific job in bringing down malaria around the world. I had worked with Admiral Zimmer when he was in that role, and I was at OMB in terms of upping our contributions to the malaria program and just getting it to more places. And I thought he was very competent, nonpartisan, really terrific a person. He was in the role, attached to the National Security Council, and then they got rid of him. John Bolton got rid of him. Huge mistake. We have to have that as a permanent part of the National Security Council to coordinate it. We now, I think, fully realize that pandemics are a potential national security threat, and we need someone monitoring them and being able to respond to them and coordinate the response. We're also going to need an early warning system much better than we've had. I agree with you. We have a tendency to put in things, and then when nothing happens, which is good, we dismantle them rather than saying, this is like insurance. We're going to pay a small amount for insurance, for monitoring the world, for being able to coordinate, for having supplies ready. And that's a good thing that we don't ever have to use it. Just like fire insurance for your house. We need to change our mentality about this. Instead of saying that's a waste of money, saying, it's good nothing has happened. We're prepared in case something happened. If we had that, we'd be more like Taiwan and less like, a place that has 20% of all the world's deaths from COVID.
Speaking of that, we know that some other countries were better prepared for the pandemic and its response, and we've seen that in the numbers. What could you say about what we've done that we could change for the next time? Because as many health experts like yourself have said, there is going to be another one.
Yeah, I think most health experts now are really, really exhausted because I think they think, look, the advice we gave a year ago, March and April last year, was really the right advice. We need to speak with one voice. We need to implement all these public health measures. We really need to have a lockdown until we bring the number of cases very, very low and then slowly open up and be able to monitor and intervene with tracing if we actually see some outbreaks. That's what they've been able to do in other countries. We didn't want to do that. President Trump wanted to get the economy back rolling. Lots of governors wanted to open up rapidly. And what we saw was exactly what happened. We saw a peak in the spring. Then in the summer when we were out, no peak. And then because of summer vacation and a bunch of other things, we saw a big peak beginning in the fall. That was just bad behavior. It was not doing what other countries like New Zealand, like Taiwan, like Australia, like the eastern seaboard of Canada did. And all of those places had very few cases, drove the cases way down, and consequently had very few deaths. And in many of those countries have been able to open up and be perfectly normal, walking around, having full retail. But you have to get the cases very, very low. You can't stop when you have 60,000 new cases a day and say, oh, we can throw off mask mandates, open up all indoor dining, retail. That's just a mistake, and we're doing it again.
Let's hope that our doing it again doesn't lead to a resurgence of virus cases. Thank you so much for joining us, Dr. Ezekiel Emanuel and Angelique Hamlani. No rest for the weary. I know that you're going to be writing what we've just talked about. We're going to take one more break, and we're going to be back in 2 minutes with a preview for you of President Biden's primetime address, which is coming up in just a few hours.
Welcome back. In just a few hours from now, President Biden is set to address the nation to mark 1 year of the COVID pandemic. Here's how the president previewed what he will be saying tonight.
I'm going in prime time address the American people and talk about what we've been through as a nation this past year. But more importantly, I'm going to talk about what comes next. I'm going to launch the next phase of the COVID response and explain what we will do as a government and what we will ask of the American people. There is light at the end of this dark tunnel of the past year, but we cannot let our guard down now or assume that victory is inevitable.
We are joined now by Michael Isikoff, Chief Investigative Correspondent for Yahoo News. And Michael, great to speak with you. What do you think President Biden needs to include in his message tonight to the American people? What do you think will be the most important priority for his administration right now?
Well, look, first of all, this is a huge victory lap, right? I mean, he's gotten this major piece of legislation that is going to make a real impact for, millions of Americans passed. And, that's a pretty big deal. And he wants the American public to know it. I don't think he's going to be boasting too much, but he's going to be talking about it. And he's going to be talking about how he wants it rapidly implemented and how it's inextricably interwoven with fighting the COVID pandemic. And he's going to, as you played in the clip, remind people after everything we've been through, there's light at the end of the tunnel, but we can't let our guard down.
But Michael, help us understand something, though. If this bill that he's going to get the victory lap for tonight is so wildly popular among our fellow citizens, why is his approval rating not even higher? Because there are all kinds of stories today that it's actually kind of low compared to other presidents at this point in their first year.
Yeah, well, listen, first of all, we are a divided country. We've become increasingly divided into the blue-red state Cold War that we're in the midst of, and that hasn't gone away. I mean, I am less impressed with some of these polls saying that the legislation is popular. Of course it's popular when you tell people you're going to be giving them money. Now, I said free money. It is free money, but it's well-deserved money for people who've had their livelihoods disrupted over what COVID has wrought. But I don't think that this is, a sign that Biden is home free in any sense, or that he's going to be riding a wave of popularity. In some senses, I think they know that this, as hard as it was to get this passed, to go further in a divided Senate and with a divided country is going to be that much more difficult. Look at just in the last few days, you're starting to see, what's the Angus King from Maine, the independent, raising questions about the cost of an infrastructure bill. Where is the money going to be coming from? I think you're going to be hearing from the, small number of centrist Democrats more and more of that, and that's going to make it even more difficult for the Biden folks to get anything further passed in this Congress.
Yeah, Michael, I wanted to ask you about that. Infrastructure has been brought up a number of times by our guests over the past hour. What do you expect to be included in this? And I guess, do you think President Biden, will he be more successful than some of his predecessors on this?
Well, like I said, I think that the huge cost of this COVID relief package is going to act somewhat as a brake on how far you could go with the infrastructure bill. And not just, they're the people who actually do worry, strange as it may seem, about having to pay the bill for some of these huge expenditures. But politically, like I said, you're hearing more concern along those lines. So I think that's going to be a limit on getting an infrastructure bill. Look, I think they'll get something through, but I don't think it's going to be nearly as large as a lot of people would see.
Michael Isikoff, Yahoo News, thank you so much for joining us. And thank you for joining us as well, because we want you to tune in at 8 o'clock Eastern for Yahoo Finance's live stream of President Biden's address to the nation. That is tonight, 8 p.m. Eastern on yahoofinance.com. Until we see you again, have a great evening.
Leonardo da Vinci, Albert Einstein, and Steve Jobs, all figures who fundamentally shaped the world we inhabit today. And they've all had their lives chronicled by best-selling author Walter Isaacson, who has a special knack for identifying how a genius can leave society unrecognizable to those who came before. His new book, The Codebreaker, Jennifer Doudna, Gene Editing and the Future of the Human Race, tells the story of the scientist who discovered how to tinker with the biological inheritance using a science called CRISPR that defines each and every one of us. In addition to his writing, Walter teaches history at Tulane University and serves as a distinguished fellow at the Aspen Institute. On this episode of Influencers, Walter joined me to talk about how gene editing will become big business, why the scientific discovery has helped us fight COVID-19, and what the backlash against big tech means for the next Steve Jobs. Hello, everyone, and welcome to Influencers. I'm Andy Serwer, and welcome to our guest, Walter Isaacson, professor of history at Tulane University and best-selling author whose new book is The Code Breaker, Jennifer Doudna, Gene Editing and the Future of the Human Race. Walter, welcome.
Hey, good to be back with you, Andy.
So let's start off by talking about the new book. Who is Jennifer Doudna, and what is CRISPR?
CRISPR is a gene editing technology. And by the way, its base is pretty simple because bacteria have been using it for 1 billion years to fight viruses. What they do is when they know a virus has attacked them, they take a mud shot. Next time, they just have little scissors, an enzyme, and chop up its DNA. What Jennifer Doudna did was discover how you could take that system and use it to edit our own genes, to target any particular snippet of DNA you want to change in our genes. So she and her partner, Emmanuel Charpentier, were able to make this gene editing tool, and they just won the Nobel Prize in Chemistry for it.
It's an incredible story, great book. I just finished it not long ago, Walter. Congratulations. And you get really deep into the science. How did you get into that whole process? I mean, you really had to learn a lot about the technology here.
Well, I got to edit genes in Jennifer Doudna's lab in California at Berkeley. Of course, you don't have to worry. We mixed it all with chlorine and flushed it down a drain. But I found out how easy it is to use CRISPR. You know, just a little liquid in a tube. You can actually get it online to edit human cells. I also, as you know, Andy, I've been involved in writing about the digital revolution, which has, dominated the past 50 years. Now I think we're into a new revolution that'll be even bigger, and that's the biotech revolution, where we're not only coding microchips, but we're coding molecules. We've seen it work as a way to code a vaccine to fight coronavirus, and Jennifer Doudna has also used it to create tests so we can test whether or not we've got viruses, or for that matter, a particular tumors or, any infection we may have. And also it's been used to make vaccines and now cure sickle cell anemia this past year by editing the genes of a woman down in Mississippi. And a couple years ago in China, a slightly rogue scientist edited the embryos of what became twin girls, so that they not only had edits that made them less susceptible to a virus, those edits will be passed along to their children and all their descendants. So we really have the potential to edit the human race.
Yeah, you said, I think the biotech revolution is going to be 10 times bigger or more important than the digital revolution per se. How exactly will our lives be different because of this, Walter, say in 10 years or 50 years?
Well, first of all, as of this year, it's different. First of all, because we've been able to cure certain genetic diseases like sickle cell, and they're already in trials curing congenital blindness in China and in Pennsylvania, doing trials to stop cancer. So some of these have already been used on real patients, and others are being tested on living patients. So we're really across the threshold of when will CRISPR change our lives. It'll be particularly easy in the next few years to do diseases and disabilities that come from simple genetic mutations. That includes things like cystic fibrosis, muscular dystrophy, Tay-Sachs disease, Huntington, sickle cell anemia, so many diseases like that. Eventually, we'll be able to edit things that have multiple genes, and then we really get into a brave new world, no pun, well, I guess a pun intended, because that's what Huxley writes about, where we're going to be able to say, all right, we want to edit our children to have certain traits. And some of those traits will be relatively easy to edit, such as muscle mass is something that's pretty simply regulated by a simple set of genes. And eventually more complex things. We can probably edit things like hair color, eye color, height, and eventually things like memory. And of course, down the road, a few decades from now, even general intelligence will be able to tweak things so that, it will help maybe boost a few IQ points. That's in the realm of science fiction, but like all good science fiction, some of it's come true already.
Yeah, you talk in your book about the trade-offs and controversies that those sort of decisions will engender in the future.
going to be very interesting to watch that unfold. I want to ask you a little bit about commercialization, because Jennifer Doudna co-founded a gene editing company that uses technology therapies to bring them to market. What's the landscape for gene editing companies and investors look like, Walter?
Oh, it's huge. There are 2 or 3 of them that started right after Jennifer Doudna and Emmanuel Charpentier discovered how to make CRISPR into a gene editing tool. And then Feng Zhang, a great researcher at Broad Institute at MIT and Harvard, he showed how it could work in human cells. And they each formed different CRISPR companies. There's, CRISPR Therapeutics, there's Mammoth, and they're all doing similar things, meaning using CRISPR to edit human genes. CRISPR Therapeutics is the company that Emmanuel Charpentier started. That's the one that succeeded in curing sickle cell anemia. And then in Mississippi, in Nashville, is which the hospital was. And then also some blood disorders were cured in Europe. So we're seeing that therapeutics company. But an interesting big 2 companies you ought to look at are ones that are now making easy-to-use detection kits for the coronavirus. And not just the coronavirus, but any virus that comes along, whether your kid's got strep throat. And for that matter, it can be programmed to look for a specific type of tumor cells. If your tumor if you have cancer and you have a tumor, it's been sequenced, it can look to see, detect that. Those detection companies, there are 2 of them worth looking at. One is called Sherlock, as in Dr. Holmes. And Sherlock is the one done by Feng Zhang and his crowd at the Broad Institute. And then there's Mammoth Therapeutics. I should have said Caribou before. That's the gene editing company that Jennifer Doudna's group did. But the detection company that they did is Mammoth. And both Mammoth and Sherlock are making what will be very easy to use at-home testing kits. And this will bring biology into our house the way the personal computer brought microchips and the internet into our house. People will be able to build things on these platforms, just like people build apps on an iPhone. You might be able to build an app. Some entrepreneur might create a company that would use these devices to say, look at your gut microbiome and see what type of yogurt you should be eating. Or, as I say, detect cancer, viruses, bacteria, infections. So this will be happening this year in 2021. These things have already been initially going through the initial approval phases from the FDA. And soon we'll have home testing kits, and that will really help when we get faced by another virus pandemic, or this one.
We'll be right back with more from Walter Isaacson, author of The Codebreaker. Stay with us. Welcome back to Influencers. I'm Andy Serwer, and I'm here with former CNN CEO and best-selling author Walter Isaacson. What about regulations with regard to gene editing? Where do we stand with that, and what should Congress do? What should lawmakers do, Walter?
Yeah, I think all of us, we shouldn't just cede this to lawmakers and scientists. We all have to, that's why I wrote this book. I mean, this technology is not that hard to figure out, but the moral questions will be a little hard to figure out. And they're slippery slopes. You know, if you say, okay, let's use it to fight sickle cell and Huntington's, and then, of course, you'd say, well, maybe we could do it to fight memory loss and Alzheimer's. Once you do that, you can enhance memory, and you can decide to use it to give people super memories or give our children better memory. So each step you take is down a slope, but all slopes are slippery. The best way to navigate a slippery slope is to do it hand in hand, step by step. And that's what I do in this book with Jennifer Doudna as a guide, but also so many other people that you know, from Michael Sandel, the ethicist at Harvard, to other scientists. We say, okay, what would you do in the case of Huntington's? What would you do in the case of sickle cell? What would you do in the case of somebody wanting to be taller? And I think we shouldn't say that scientists will figure this out or politicians will. It's, we should figure it out. And by we, I mean you, Andy Serwer, and me, and everybody listening. So we shouldn't be intimidated by this science. We should say, okay, I get it. It's pretty simple. You can just change genes in our genome. Now let me see what regulations we should have. And I would draw the line right now. Let's not do inheritable gene edits for the time being, and do we know they're absolutely safe?
Do you know what's going on with those daughters, those girls that were born in China, and what their lives are like, or how old they are at this point, Walter?
They're almost 2.5 years old. They're being monitored, but we don't know too much about them. We know that they had their genes edited as early stage embryos so that their cells would not have the receptor for HIV, the virus that causes AIDS. And we know that because the edits were made in a early stage embryo, it will affect not just them, but their children and all of their descendants. We also know that the experiment done by sort of a young Chinese doctor who was unauthorized, really, was a bit of a mess. Its scientific term is called mosaic, which means not all the cells in the body ended up having these edits, which means that it's a little tricky what's happened to these kids. That said, as far as we know, the kids are fine and healthy and growing up. And I do hope we'll be able, it's a shame that they were used as experiments, but I do hope we study carefully and give them the, care that they need.
Wow. I should have asked you this when we were talking about companies, but I'll do so now. Any big companies involved, Walter? Bill Gates, I know, invested in a gene editing company in 2015. Are the major pharmaceutical and medical companies in this space?
Yes, they are. But, if you look at the broader space, which is gene engineering in general and recombinant DA and these things that happened in the 1970s, this began the biotech revolution. And of course, Genentech is the really big one. And that was started after Paul Berg and Herbert Boyer and others figured out how do you do new organisms, recombinant DNA? How do you take the gene from one organism and put them into another? And if you look at the Johnson & Johnson vaccine or the AstraZeneca-Oxford vaccine, that's what they do. It's genetic engineering. And so Genentech is the best and biggest in this field. But then you look at the new types of vaccines that we're getting, which don't edit a full gene into a delivery system. They just take a tiny bit of RNA and put it into our cells. What that does is the RNA, the most basic function of RNA, is to act as a messenger. And it tells the manufacturing regions of our cell, hey, build this protein. And in the case of a messenger RNA vaccine, it says, build this little bit of the spike protein. So if you ever get attacked by coronavirus, your immune system is primed and ready for it. And so the two companies there are BioNTech, which really did the first one, and Moderna, which is just an amazing company based in Cambridge. BioNTech has partnered with Pfizer to do the vaccine. Moderna is the company I would look at. It mainly is doing messenger RNA, but that's all in the family of using RNA as guides and messengers, and they're going to be able to take on cancer and other things. And because they're based in Cambridge, Massachusetts, and so many other companies are there too, because Boston has more research hospitals than any other place in the world, I think, per capita. And so Kendall Square is becoming the new Silicon Valley.
Yeah, right. We always talked about how the gravitational shift went to Silicon Valley. Boston used to be a player, but lost that. And maybe now it's coming back a little bit when it comes to this endeavor, right?
Yeah, I can remember back when Route 128 in Boston had, Digital Equipment Corporation and all. And Boston kind of messed it up, both by bad luck, DEC didn't do all that well, and by the fact that people went to Silicon Valley after Shockley and then Intel and all got created there. But you're seeing a migration away from Silicon Valley for a long time now because of the creativity industries in hubs like Austin and Nashville and even down here in New Orleans being connected to digital innovation. But now as we enter this new revolution, the biotech revolution, it'll be places that have good research universities and good research hospitals. Boston foremost, a lot of places like New York, and then also, again, Nashville here at Tulane University in New Orleans, Austin, Texas, doing quite well in these things.
Yeah, I want to ask more about tech a little bit, but first I want to do a little bit more about CRISPR and COVID and gene editing. In a Washington Post op-ed that you wrote recently, you said that gene editing will allow us to move beyond vaccines altogether. What does that mean, and how soon can that be a reality?
Yeah, it'll be a couple of years because the delivery mechanism is a little hard to get it into the right cells. But whether it's the group in Cambridge, Mass. with a technology called Carver, or the ones out in the Bay Area, those companies with a technology called Pac-Man, what they do is that they use CRISPR not to stimulate the human immune system to fight the coronavirus or any virus, but to actually just kill the damn virus, which is direct. Now, you might say, well, that's ingenious. We should have thought of it. Yeah, bacteria thought of it 1 billion years ago. That's exactly what CRISPR is. It knows how to find a virus and cut it up by cutting its genetic code at a specific place. And so all this is adapting CRISPR, the system found in nature, not to edit our own genes, but to kill viruses or bacteria or cancer cells or anything else that has the genetic code we want to target and we don't like. And the reason that's important is vaccines have worked ever since Edward Jenner, vaccinated his gardener's kid against smallpox. They've worked by stimulating the human immune system to kick itself up into a notch where it can fight the virus or the pathogen that it's been primed to fight.
We're going to take a quick commercial break. We'll be back with more from former CNN CEO and the Codebreaker author, Walter Isaacson, back in 2 minutes. Welcome back to Influencers. I'm Andy Serwer, and I'm back with Walter Isaacson, author of The Codebreaker. A significant portion of the U.S. population says they'll refuse to take a COVID-19 vaccine. What do you think Americans will say about gene editing? What is the general population's take going to be?
I think a lot of people are afraid of science when they don't fully understand it, when it seems mysterious, like, what are they doing with RNA in my cells? And I think when you demystify science, people become more comfortable with it. It's true of everything. And I think it's very good that people have their own strong opinion. There are people who don't like GMOs. That's fine. But I think it's also useful to know what is a genetically modified organism. And by the way, in my book, what did the yogurt makers figure out about, modifying organisms? Likewise, there are people who are going to say, I'm against gene editing. Well, at least I hope they read the book so they know what a gene is. And they're probably right. There's types of gene editing we should resist. That said, we should understand it first and realize, and this is why I write this book, if you make science less mysterious, then people will feel more comfortable with it. And I blame the scientists sometimes. They're a priesthood. They don't talk very easily about what they're doing. But when it comes to vaccines, I think what are we seeing? Maybe 20% of the people say they aren't going to use them in the long run. I suspect it'll go down, and that after a while, 90% of the people will be willing to be vaccinated, which will get us when we need to go. But I suspect also that the more that they know about RNA, which seems like a mysterious thing, but it's a very simple little molecule. If you know that you're not actually having the vaccine create the virus in your system, it's just creating a tiny bit of protein that mimics that spike protein of the coronavirus, then you say to yourself, well, that's not dangerous. And indeed, it's not dangerous.
Let's shift away from CRISPR and COVID and Jennifer Doudna for a second. I want to ask you about Steve Jobs and Apple and tech. Your book on Steve Jobs came out 10 years ago. It's hard to believe. And since then, the world has changed. There's been a major backlash against big tech companies. Has this changed the way you think about Apple and whether or not tech is a force for good?
Well, I think we always have to worry about whether that tech is a force for good. I think Apple actually is in general, because it's both protecting our privacy and it's not basing its entire business model on the advertising model, which means harvesting all of your information and micro-targeting things to you. I don't mind targeted advertising, but I think it can be very dangerous when it comes especially to political and advocacy ads. And secondly, I think places like Facebook and Twitter and other places that have algorithms that tend to incent people to get enraged and pass along misinformation, I think that is something that platforms like that should take more responsibility for. As for Apple, we all miss Steve Jobs. I'd love to see what he would have done with TV or many other things, whole new product lines. But he was very careful in making sure that people had control of their technology instead of the technology having control of them. And he's a model to me of how people should approach the digital age. I worry more about, and that's why he wasn't that comfortable with social media and social networks. He never really created one at Apple. I think those are the dangerous things, is the algorithms that spin us out of control and just push us to be more and more extreme in our behavior. Even when I go on Facebook or Twitter or something, it's always recommending, as soon as I read somebody of a particular political bent, it's trying to get me more outraged about somebody who has an even stronger opinion. Those type of things come when you have an advertising model with an algorithm that's based on what's called engagement, but is really should be called enragement.
Don't have that much time left. I want to get your take on two other very high-profile leaders in Silicon Valley, Elon Musk and Jeff Bezos. What's your take on those two?
I'm just reading some books on Elon Musk, and of course, in some ways, he's the Steve Jobs of our time. He's crazy enough to think he can change the world, and thus he might be one of the ones who do change the world. I think we're still, as they said in Latin school, in medio res, which means we're in the middle of the story. I don't quite know, exactly what SpaceX and the S model, Tesla and all seem to be doing quite well, but like Steve Jobs, as you know full well, he's skating on the edge, and Steve got ousted at one point. So I think he's doing really well, and I love the fact that he's a man of passion and obsession. Likewise, Bezos has just continually triumphed. I'll tell a story real quick about your mentor and mine, a guy named Don Logan, who ran Time Inc. And in 1999, we at Time, you were over at Fortune at that time, were making Bezos Person of the Year. And all of a sudden, the air started going out of the internet stocks. And I said to Don Logan, who was president, I said, am we making a mistake making Bezos Man of the Year? He said, no, Bezos is not in the internet business. He's in the customer service business. He'll be doing fine 20 years from now. And Bezos has kept a relentless focus on customer, and that really matters.
I didn't know that Don Logan story, Walter. That's great. Final question. How do you choose the subjects of your books? On the one hand, they're kind of obvious. On the other hand, maybe not so much. Ben Franklin, Albert Einstein, Steve Jobs, Jennifer Doudna, now the first woman you've written about. How do you make those decisions?
Well, you notice they're all smart people, but after a while, having been, in journalism, I figured out that smart people are a dime a dozen, and they don't usually amount to much. What matters is being creative and imaginative and making those leaps that are innovative. And so my books are about how does creativity happen? How does innovation happen? So I look for people like Steve Jobs or Einstein or certainly Leonardo da Vinci or Jennifer Doudna now, who make those mental leaps and think out of the box, who are driven by pure curiosity, as Jennifer Doudna was,